as far as the West Asia crisis is concerned. But we feel that net all of the parameters should do well, and it should be a much normalized year as we head into FY27.
Okay, so a normalized year is what the management is indicating when it comes to IDFC First Bank. Let's see what it turns out to be. But moving on, Union Minister Piyush Goyal is set to meet exporters and industry bodies today amid the India-New Zealand FTA signing and the geopolitical uncertainties that we've been watching out for. Rishabh, my colleague, joins us with more details as to what this would actually mean for the Indian diaspora. Rishabh, over to you.
Absolutely right. After the New Zealand free trade agreement signing, you have Piyush Goyal, who is set to meet export promotion councils bearing from sporting goods to leather to engineering goods. This is yet another meeting in the standard sort of monthly or bi-monthly meetings that the Commerce Minister holds with exporters. This is to simply assess the current status of trade, the current sort of export numbers that India has been able to post and how to bring those up. What we have is, of course, exporters will continue to flag certain sector-specific issues, whatever benefits they might need in terms of ROTTEP getting restored, in terms of other sort of gains that they could see coming in from minor policy tweaks. That's what the exporters will be flagging to the Commerce Minister. What you have and why this particular meeting is important is because exports are seeing a hit when it comes to the Middle East region. They are still impacted. Movement has still not opened up fully. What you have is, of course, a lot of new trade deals that will be operationalized within this fiscal year in New Zealand, in UK, in EU. So you have these multiple trade deals also coming up that can act as a hedge to all the issues that exporters are facing. So that's what will be the highlight of this particular meet between Piyush Goyal and the exporters.
Okay, thank you so much, Rishabh, for that. That is going to be an interesting development, and any positive news will mean you will see export-driven sectors that could see some bump up in the trading day today. But completely out of time. With that, it's a wrap on this edition of India Markets Open. From Tamanna, Neeraj, the team that put the show together, and myself. Lots more lined up on the other side. Up next is Ask Profit with Mahima and Puneet. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूम देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
केसरिया से मन जोगी हुआ रे दिल झूम देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Mahima Vachajani. And over the next hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending in your queries on the numbers that are flashing on the top of your screen. You can also call us, speak to us, as well as the guest directly on your stock-related queries as well. The landline number for that is flashing on the top of your screen as well. But before we do that, as customary, it's an important day to track the markets because we've had the benchmarks, the Nifty 50 largely being focused on individual names. So you've seen Reliance being one of the key ones, largely weak set of results, but stocks not doing too much today. On the other hand, Sun Pharma announcing a major acquisition. Let's look at the heat map for the Nifty 50 very quickly as well. Is now up 8% today. It's a large cap stock, viewers, and stocks climbing throughout the day today. You had the announcement of a $12 billion acquisition, $11.75 billion acquisition in terms of enterprise value of Organon by Sun Pharma. Majority, a lot of it, almost $8 to $9 billion will be funded by debt. But the street likes it. It's something that the company has evidenced with the acquisition of Taro as well as Ranbaxy in its history. And street's quite positive that they will be able to come across this curve as well. In terms of the other movers, Adani Ports is up 3.3%, so is JSW Steel, and Wipro has now moved itself in the top 4 to 5 names on the index. Tech Mahindra is also doing well on the losing endo. Post results, Axis Bank is down 3.8%. Shriram Finance, while the results came in on Friday, you've had brokerage reviews coming in and largely being continuing to maintain their view, but there were some ifs and buts, and we've covered that in the previous show, which tells you the story on the stock price today. BL as well as Coal India and Bajaj Finance are some of the other names that continue to be in focus on the back of this. Sectoral heat map also gives you that perspective. We've seen that the PSU Bank Index has been one that we've had consistent focus on, but today the Pharma Index out there as the clear winner. You've also seen the Nifty Healthcare also do well in trade, so is Nifty Metal, while the private banks as well as the Nifty Bank is barely down, but largely a green screen, and we'll take that with both hands at this point of time. In terms of the advanced decline ratio, that's the other quick one. Quickly pull that up as well, because we've seen that broader markets continue to be in focus. While it has been a day of large caps, you've seen most of the gainers coming into the broader market, so almost a 5:1, 6:1 kind of ratio in favor of the advances. Mid cap, small cap also reflect what you're seeing currently on the screen in terms of advances. So you've seen the mid cap 150 up 1.2%, small cap continuing its upward momentum at 1.5% as well. And finally, the BSE 500, these individual movers, a lot of them then that we spoke about right now are reflected on your screen as well. Cohance Life is definitely one of the stocks of the day in terms of the broader market action. Umang Vora, the ex-CEO of Cipla, has now moved to Cohance, and that stock has gone through the moon today, up all at 20%, locked in the upper circuit. It's been a rank underperformer. Stock's down 68% in the last year, but today a big fillip for this counter. Shyam Metallics, Tanla Platform on the back of results, India Cement on the back of results is also up 10 to 13% in trade. So is Spark, which is of course owned by Sun Pharma in a majority stake, and Symphony up 6% as well, and M&M Finance on the back of results. But that's largely in terms of the market action, very, very positive today. And let's start taking your queries. Saurabh Jain, Equity Head Research at SMC Global Securities, now joining in on the fundamentals. You have Gaurav Sharma, Associate VP and Head of Research at Globe Capital, joining in. Gentlemen, both of you, thanks so much for joining in today and starting off this week with the first set of queries. The first one coming in on very topical yet again on Shriram Finance, and Muralidharan from Pondicherry is asking us this question, asking what he should do with this counter now. He is of course tracking this on the back of results and asking if he can buy this at this point of time. What would you recommend, dear Saurabh? Very good morning to you. Is there enough evidence post results to continue maintaining that positive view once that big acquisition came through?
Hi, good morning. Thank you for having me on the show. Yes, if you are there for the long term, I think there is a merit holding Shriram Finance. Yes, the results were not that great, but yes, after the investment, the outlook is reasonably solid. I think going forward, the business asset under management will grow above the industry average, and surely the margins would also stabilize. So, in my opinion, I think you should hold for the long term.
Got that view, Saurabh. But let's go across, take the next question. This is on Emphasis. Now, IT had a forgetful week last time, and last week, essentially, today's stock's up 3.5%, but Lalita from Bangalore holds 27 shares at 2771. So she's currently sitting at a loss, asking what she should do with this counter now. Should she average, hold, or sell here, Gaurav? Good morning. What would you recommend?
Hi, Puneet. Morning. Thanks for having me today. So it's a 10% loss from where she has bought it. Stock is, yes, it is reeling under pressure in line with other IT counters. I'll suggest her to take a stop at 2150, hold a position. If the stock gains momentum, consider booking it closer to 2400 mark.
400 mark is something that Gaurav is looking on for Emphasis at this point of time. But the next question coming in now, it's on Clean Science, bought at 818 by Suman from Kolkata. And her question largely being, is it the right time to add more into this counter for Clean Science? So she's bought it very recently. I think she might have bought it today itself. But what would you recommend here, Saurabh? Is there enough evidence, given what we've seen in a couple of chemical companies, the likes of Deepak Nitrate, on the back of product pricing is doing very well? Is Clean Science one of those contenders?
Can't say right now because on the operational metric side, the things are not looking that great. And it is very difficult to predict whether the worst is yet over because the crude prices are also inching up. In my opinion, I think you should avoid.
But let's go across, take, pardon me, the next caller from Vijayawada. And Anjali is now dialing in for a stock query. Anjali, good morning. Welcome to the show. What's your query?
Yeah, very good morning to all of you, sir. So I'm having Oracle Financial Services shares at 8,200 average for 110 shares. So what is which point I need to sell this? Like a long term is good, or because sector is not doing good, only this share results are good. So what is the point to sell? And if I want to enter again, what is the point to enter?
Anjali, had you called us before when the stock was at 6,200 also for Oracle as well?
Long back, sir.
Long back, yeah. It's been a while, but most certainly you held on. So many congratulations on the gains visible. I think, Gaurav, if I'm not wrong, I think we asked you itself on this stock-related query at 6,200. I think you'd given a buy call with a target of 9,200. We're bang on that target right now. What would you recommend here? Should she book her profit, be happy with the gains of 1.4 lakh rupees on this one?
Yes, rightly pointed. Yes, I am bullish on this stock as far as IT is concerned, and no doubt the stock has given better than expected, run up. Again, a little more upside still remains in the stock. 9,700 is the immediate upside momentum. I think she should still hold on to her position because the stock has witnessed all the negativity, and still the company has maintained its upward trajectory. I think it will manage to go past this 97 hurdle as well. So if there is no need for any kind of cash, then I think she should hold on to a position.
That view, Gaurav. So most certainly we've come full circle on the query. Hopefully, Anjali, that answers your question. The next one coming in on Ajax Engineering. Now, Sabu from Kochi actually wants a 6 to 9 month view on this stock, holding 70 shares. But currently is at a 25% loss. So he's not mentioned his buy price, but Gaurav probably holding at 700, 800 or mark. But what would you recommend on this one?
Track this stock very closely, but still I can have a bleak understanding of this. Just give me a moment. So stock is underperforming, and it is having some resistances around 560, 570 zone. So if the stock manages to go past, then only it will head towards further 600, 610 levels. Otherwise, it will flip down towards 400, 450 odd levels. So in my sense, he should maintain his stock at 480 and hold a position. Be a little conscious around 560 levels.
Okay, all right. So that's the view coming on Ajax Engineering. The next one that we have is, I think, from Harsha, who's writing us from Vijayawada, asking about LTI Mindtree, which is now, of course, known as LTM. Bought 45 shares at the levels of 4,500. Wants to know whether to add, hold, or sell at the current levels. Saurabh, your view on this one?
You remains negative on the IT side. The IT biggies are guiding for a 1 to 3-4% kind of a range. LTI, Mindtree, the numbers were not that great. I think there will be continue to be pressure on the IT stocks, including LTI, Mindtree. I think this is the sector where one should be underweight. My sense, it is better to exit.
Got that view, Saurabh. But let's go across, take another call in from Ambala. And Ajay has a stock query for us. Ajay, good morning. Welcome to the show. What's your query?
Good morning, sir. Good morning to all the panel, sir. Sir, मेरा क्वेश्चन Hyundai India पे है, सर. मेरे पास शेयर्स हैं 2136 पे 300 शेयर्स. सर ये मैंने फरवरी में लिया था. सर रीजन इसके पीछे दो थे कि एक तो सर जीएसटी रिडक्शन का बेनिफिट मिल जाएगा और सेकंड था कि वो ट्रेड टैरिफ यूएसए के साथ सेटल डाउन होगा. अगर सर ये स्टॉक तो काफी नीचे आ चुका है, तो क्या मैं यहाँ पे 50 शेयर और ले सकता हूँ या इसको बेच के कुछ और शेयर में शिफ्ट कर सकता हूँ?
अजय जी, आपके पास पोर्टफोलियो में और कोई ऑटो कंपनी है, मारुति टाइप के, या सिर्फ ये एक ही है?
नहीं सर, Hyundai के साथ मेरे पास सर दूसरा शेयर है, ये अपना जियो फाइनेंशियल का सर शेयर है एक्चुअली.
ओके, जियो फाइनेंशियल. ओके, तो ऑटो बैक में सिर्फ Hyundai है. गॉट इट. सौरभ,
Hyundai है सर.
गॉट इट. सौरभ, Hyundai ऐसे एक रैंक अंडर परफॉर्मर रहा है. आई थिंक वो 2800 से सीधा ऐसे क्लिफ डाइव टाइप का स्टॉक मूवमेंट रहा है, एंड वो डोमेस्टिक मार्केट में कंटिन्यूसली मार्केट शेयर लूज किया है लास्ट 2 साल में. फंडामेंटली क्या आपको लगता है कि our viewers should continue holding the stock? आपकी क्या राय है?
देखिए, जब एक्साइज ड्यूटी कट हुआ तब एक्सपेक्टेशन यही थी कि बूस्ट मिलेगा ऑटोमोबाइल प्लेयर्स को, और उस एक्सपेक्टेशन में काफी स्टॉक्स चले भी. लेकिन जैसे कि आपने बताया कि स्टॉक जो कंपनी है वो वॉल्यूम्स में हमेशा उसने लैग किया है, बिलो इंडस्ट्री एवरेज रहा है, इसीलिए स्टॉक ने अच्छा प्रदर्शन नहीं किया है. मेरी समझ से देखिए कोई औचित्य नहीं बनता कि आप इसमें और पैसे लगाएं, बल्कि आपको इसमें से निकलने की चेष्टा करनी चाहिए. और जैसे कि आपने पूछा किसी और क्षेत्र में यहाँ से पैसे निकाल के डाल सकते हैं, तो मुझे यूटिलिटीज का क्षेत्र काफी अच्छा लगता है. इस साल डिमांड काफी अच्छी रहने वाली है, गर्मी काफी अच्छी रहने वाली है और बारिश भी कम होने का अनुमान है. और क्योंकि क्रूड और गैस प्राइसेस, गैस भी की अवेलेबिलिटी कम है, तो इलेक्ट्रिसिटी में जैसे कि इंडक्शन वगैरह में ज्यादा यूज होने की संभावना है. यूटिलिटी सेक्टर अगर आप देखें तो अच्छा प्रदर्शन भी किया है. अगर अभी के 2-3 महीने के पीरियड में देखें, मार्केट को आउट परफॉर्म किया है. तो मेरी समझ से आप या तो ईटीएफ में, यूटिलिटीज के पावर ईटीएफ में पैसे डाल सकते हैं, या कोई ऐसी एनटीपीसी, जेएसडब्ल्यू एनर्जी, निवेली लिग्नाइट जैसी कंपनी में भी इससे हुंडई मोटर से पैसे निकाल के डाल सकते हैं.
Okay, all right. So that's the holistic view coming in on the power space, and of course about Hyundai as well. But moving on to the next one, data patterns is what our viewer wants to know about, and this is from Lavish, who is holding at the levels of who's been holding at since the levels of 3100. Currently, I think data patterns is trading around that 4100 levels. Wants to know if this is the right time to book profits on this one. Gaurav, what would you recommend seeing the charts?
Hi, morning. So the stock has really performed well. It is into the uncharted territory, trading at its lifetime highest point. I'll recommend him to hold his position with a trailing stop, as it is in a good shape and the company is doing very well. 3800 is the stop that he should hold on with, and keep trailing the stop with every rise.
Trailing stock with every rise is what Gaurav recommends. But let's go across, take another caller now. From Hyderabad, and Shweta has a stock query for us. Shweta, good morning. Welcome to Ask Profit. What's your query?
Hi, very good morning, Puneet and Mahma. I'm holding Mahindra and Mahindra shares at a price of 3,300. I have 20 shares.
Okay.
I would like to know, is it good to hold it for a long-term period of, at least for 1 year, because the steel prices are increasing and the crude is also, unpredictable right now.
Right.
So is it good to hold it, or should I add now? Or can I shift to Nestle India or Marico?
Got it. Well, pertinent question there as well on coming on this one from Shweta. But Saurabh, I know you're bullish on Mahindra and Mahindra from the long term. We've seen a correction from almost 3,900 odd levels to 3,000 where it's trading currently. Would you recommend Shweta to continue holding? Is this an opportunity to buy more or shift to Nestle and Marico as she asked?
See, if she wishes to hold for the long term, then I will suggest to hold on. See, this year the stock has underperformed partially because it has run up in the past quite heavily. It got re-rated and now it is a bit cooling off, kind of a consolidation. If you look at the numbers, the company is putting up a good show in all of their segment. And if you compare its valuation, it is at stark discount to even a player like Hyundai, which is struggling with the volume. So my sense is better to stick with it.
Got that view, Saurabh. But time now to take a quick view of the BSE F&O setup there. Let's pull up the heat map for the Sensex, and you'll see, one of the key stocks, of course, has been Sun Pharma for today. Pharma continues to be a pack now, up 7.4%. Adani Post, Tata Steel, some of the stocks we discussed in the Nifty heat map also doing well, while Axis Bank continues to be under pressure for today. But let's look at some stock-specific action in terms of stocks which are seeing some long build-up in trade today. Sun Pharma unarguably is one of the key stocks for today, seeing a massive build-up of longs. Torrent Power is the other one that's also in focus. In terms of shorts being covered, Hindustan Zinc on the back of results, so is IndusInd Bank, seeing covering of shorts today in the system, while longs are being unwinded on a couple of banking names. So both of them results came on Saturday, not too enthusing according to Street, and there you're seeing longs which are already built up being unwinded in the system. Now selling essentially happening of those or cutting of those shorts, as well as the longs that had built up. And in terms of shorts being built up, fresh ones, you're seeing on Paytm, we saw the news and announcement, as well as Shriram Finance post results is seeing shorts being built up as well. So those are some of the key stocks that we continue to monitor as well. But go across, take the next query. This is coming on EPAC Durable. And Krishna Prasad is holding shares at 320 and he's holding 1,000 shares. So it's a considerable amount. Asking what he should do with this counter now. Now, Saurabh, we've seen essentially delayed onset of summer, and Q3 saw build up of ACs as well, but not reflected in the numbers. What's your view on EPAC? Is it a preferred play in the AC space, or would you rather venture into via Blue Star or Amber Enterprises and those kind of names?
I think if you look at the stock performance, it has underperformed the broader market, and these players usually do business at a very thin margin. And now what has happened, the raw material cost has also shoot up, and you cannot foresee how the sales volumes will be in the future. So I think the valuations were also high, which are getting corrected. My sense, it is better to avoid this space, and the sectors we are looking at are utilities, capital goods, banking space, as well as maybe a bit of hotels.
Okay, all right. So that's the view coming in on EPAC Durable. We've got our next caller. Pramod is calling us from Guntur. Pramod, a very good morning to you. What's your query about?
Good morning, madam.
Good morning. Go ahead, ask the question.
Good morning, Secretary India.
Okay.
I bought 30,000 shares at the rate of 43 rupees.
Okay.
Recently. Can I hold for long term or exit, and again I can buy to lower rates?
Okay, Pramod, did you see the charts while buying it?
Huh?
Did you see the charts while buying this counter?
I can't understand what happened.
Short term. Okay, all right. I'll take this up with Gaurav then. Gaurav, so GDT India is entered at the levels of 46 and he's got huge quantity. 30,000 is what he said, I think, if I'm not wrong. Do you think he should continue to hold to bounce back to those levels, or maybe see some profits, or should he exit?
Well, the stock witnessed steep sell-off from the peaks somewhere around 54 odd levels. That was the earlier January, and it has come down to 36 odd levels. Currently, it is in a consolidation phase. I'll suggest him to hold his position, as he has already seen a lot of loss. There's a little bit of chances already there. Take a stop at 40. Hold your position. If the stock manages to go past 44 odd levels, there are bright chances it will head towards 48 and higher levels. So I think this particular chance is worth taking.
That we got up, but let's go across, take another query now, and this is an interesting one. Mohit, who's a regular viewer, wants to know if it's a good time to enter into either of the stocks in REIT or the InvIT space. Now, Saurabh, we've seen a few REITs there in the retail space, Mindspace, of course, on the corporate side, And InvITs, of course, include the road projects as well. So any in that space for the next 3 to 4 years that you like for Mohit?
Will not be able to guide on this.
Anything on the charts, Gaurav? I know it's a difficult one, but because largely annuity business is there, but any that's on your radar?
See, even we are not recommending REITs to our clients, or even InvITs for that matter. We are corely into the real estate segment, and that is what, and the infra segment. So probably not a clear answer on this.
Okay, all right. The next one that we have is on MRPL. So Shira from Benry is holding at the levels of 179, and she's got 5,227 shares. Wants to know the short-term targets on this one, Gaurav. She's sitting on losses of around 28,000 odd rupees right now. Would you recommend her to continue to hold, book losses? What's the view on the charts?
Better to hold it with a stop at 164. The stock may take 1 or 2 days to come down to that level, and if she has some spare cash left, she can even consider averaging at that point and take a stop at 150. In a 2 to 4 weeks kind of a time frame, I expect a reversal in this stock somewhere close to 180, 185 levels are pretty much possible.
Got that view. The other counter coming in now, it's on Shriram Pistons. It's again a stock that's just flown through over the last few months. Our viewer Usha from Bangalore holds 200 shares at 3626. So currently entered, I think, very recently. Gaurav, what would you recommend on Shriram Pistons? Is there more up move from these levels as well?
Yes, pretty much possible. The stock is doing exceptionally well, very well placed, consolidating at higher levels after a steep run up from 2,900 to 3,700 odd levels. One should hold on to a position, keep a closing stop at 3,450 and look for targets close to 4,000 and beyond.
The next one is coming in on Irida. Arvind is asking this question. From a long-term perspective, he's been holding 2,700 share of this counter at the levels of 167. Wants to know from a long-term perspective, what is the future growth potential for this one and whether he can continue to hold or not. Saurabh, your view on this one?
I think you have to hold seriously long, maybe more than 2-3 years. Then only you can expect because the stock got re-rated in the past, the valuations are too high, and now what is happening is it is the valuation corrections, and earnings are not matching up with the valuation at which stock is trading in. So you have to seriously wait for long term.
Right, it's time for our rapid fire round. Saurabh as well as Gaurav, you both know the drill. Try to keep your answers as short as possible. The first one is from Arvind on Canara Bank. The possibility of this one reaching 230 anywhere in 2027. Gaurav, on the charts, your view?
Pretty far off. I think you should maintain a stop at 130 and hold the position. Yes, we remain bullish on the PSU banking pack, including Canara Bank.
Rainbow Hospital is bought at 1337 levels, Saurabh, by Mahesh. He's asking what's the long-term outlook and if it's a good time to add more at this price.
Long-term positive. You may add another hospital stocks like Apollo Hospital.
Kalyan Jewelers, what would be the right entry price from a short-term perspective is what Sabita from Hyderabad wants to know. Gaurav?
440 and then further add above 460. So these are the 2 points that she should consider.
Mahesh is holding on to Poonawalla FinCorp at 407, Saurabh, asking what he should do with this counter now. Is this still strong? Post the QIP, good time to add more?
You can hold it for the long term, do not add more.
Okay, Prashant from Hyderabad wants to know about Infosys, is holding 2,493 shares at the levels of 1204. Hold or sell from a short-term perspective. Gaurav?
Sell.
Next one coming in now, it's from Ramesh from Chennai on Aisha Motors. Wants to know if 7247, the level that he's bought at, is a good one. Gaurav, what should he do with this counter?
Absolutely, hold his position, add above 7600.
Good time to accumulate Karur Vysya Bank. Lavanya wants to know this from a short-term perspective. Gaurav?
Yes, it is good time. It has done well, expected to post good numbers as well going forward. 340 is the immediate upside target.
So Neil from Vizag has bought into Reliance at 1,300 rupees, holding 108 shares, asking what he should do with the medium to long-term view. Saurabh, post results, I think it was a disappointing set of numbers, but what's your view on the stock now?
think many of the segments are doing good. It is the oil and gas and petrochemical segment which seen pressure. I think from the long-term perspective, it is still good. Valuations are on the right side.
Okay, Pine Labs, is this a good buy from a 12 months perspective? Venkat Ramani from Bengaluru wants to know. Saurabh, your view?
Avoid.
Zydus Life Science bought at 361, holding 30 shares is Shriram. What would you recommend here, Saurabh?
Hold.
HCL Tech bought at the price of 1478. Hold or exit from a 6 to 9 months perspective. Gaurav?
Hold, take a stop at 1100 and book around 1400.
Shobha holds Info Edge at 1354. Gaurav, stocks trading at just about 1000 right now. Should she hold on to this counter?
What is the buying price?
1354.
Stock is not looking good. Take a stop at 960. Hold your position.
Okay, ICICI Bank 33 shares bought an average price of 1345. Should I buy more right now from a long-term perspective, Saurabh?
Buy in a staggered manner on correction. Keep on holding.
Navendu is asking if it's the right time to add Medi-Assess for the long term. Any view here, Saurabh?
No view.
EIH Limited 400 shares at the levels of 331. Continue to hold it for the next 2 years, Saurabh?
You can hold.
Next question coming in now, it's on NLC India, and our viewer Vishwanathan is holding shares at roughly around 56, so bought it way ago. Any view here, Gaurav, should he continue to hold?
Yes, hold. One of the strongest mid caps available as of now. Hold with a stop at 295.
IEX bought at the current levels, bought at the levels of 140, average at the current levels from a short-term perspective, Gaurav?
No, do not average. Rather take a stop at 120.
Okay, alright, okay. That brings us to the end of the first rapid fire round of this edition of Ask Profit. Gaurav, thank you so much for taking out the time and helping us answer all those stock-related queries. Viewers, it's time to slip into a very, very short break, but we'll be right back answering all your queries on the other side, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either give us a call or send us your stock-related questions on the WhatsApp number that's flashing on your screen up there. There you go. That's the number. But on this side of the show, we're also joined by Ajit Mishra, who's the SAP researcher at Redigare Broking, joining us now. Ajit, a very good morning to you. The next question that we have is from Balaji, who's writing us from Chennai, asking about Compton Greaves Consumer Electricals. He's saying that whether this is the right time to make an entry into this counter from a 6 months perspective. Ajit, would you recommend that?
Yeah, good morning, Mahima. So, Mahima, if you see that the last, almost 1.5 years been more of a corrective trend for Crompton, means from 460 to 220. And now we are seeing a bit of a base formation from last couple of months. So possibly, yes, we may see a rebound towards 275, 280 area, and where 235, 240 is the immediate base. So with that as a stop loss, definitely one can look for short to medium term long opportunity. But the actual momentum we'll see in the stock once it reclaims its long-term averages, which is placed around 275 levels. So once we see that, then probably the stock may witness a recovery towards 300 plus zone also. So as of now, 275 is the immediate hurdle, and then probably around 300.
Got that view, Ajit, and welcome to the show. The next question coming in now, it's on Mr. Dhatu Nigam. Our viewer Arnab is holding shares at 342. He's also mentioned that he has data patterns as well as Zentech in his portfolio at this point of time, besides Midani, asking if he should book profits in Midani right now, and or should he continue to hold for the next 6 to 12 months. What would be your view here, Saurabh?
Quite positive on the metal stocks, and Mishru Dhatu is the stock where we are positive. I think one should hold for the long term. Going forward, the earnings are likely to rise because of the consistent rise in the metal prices, and it is one of the it is a company which produces a metal which no one other produces. So in that sense, I think it is a good hold.
Okay, the next one is on IDFC First Bank. Rajalakshmi from Chennai is holding 10,500 shares of this one. Bought during COVID. My average buying price is 44, so she's sitting on significant profits right now. Wants to know if she can hold or sell this one and go ahead and buy HDFC Bank instead. Saurabh, would you recommend that strategy? She's already sitting on loss for profit of around 2.5 lakh rupees.
I think she has made a profit, but it is insignificant because she's holding still since COVID, and people have multiplied their wealth like anything. IDFC First Bank recent numbers were a bit positive, but that were not great, and this bank has overall disappointed in the long term. So my sense is better to take profits from the table and do not go for the HDFC Bank. Instead, if you wish to park your money in the banking space, go with a bank like Indian Bank or maybe Canada Bank, or otherwise you can put your money, divide your money into utilities also, like JSW Energy or NTPC.
Got that view, Saurabh. But the next question also very interesting here. Guneet from Mumbai has bought into Azad Engineering at 951, and he was smart enough to buy 100 shares at that time. So he's doubled his money in this particular time frame. Stocks up over 4.4% as we speak now, across the 2,000 rupee mark. Asking if he should continue to hold given what's the outlook. Saurabh, we're seeing resurgence in a lot of names with exposure to aerospace. So you've seen Sansera also do well in this space. What's your view on Azad Engineering, especially given the buying price of 951?
Well, the space is looking good, and it is surely it is buzzing also. The stocks are also going up and outperforming the broader market. But only concern is the valuation. Stock is trading at it's richly valued, and even after looking at the growth, trading more than 100 times to its trailing earnings and maybe more than 10 times to its price to book value. I'll suggest to book partial profits here so that he can take his investment back and park your money in the sectors that we have discussed, like banking, utilities, and capital goods.
All right, so that's the view coming on Azad Engineering. We've got Prashant calling us from Bengaluru. Prashant, good morning to you. Go ahead, ask your question.
Yeah, hi, Mahima. So I currently hold a Tata Power 250 quantity with an average buy price of 392, and I'm targeting a exit of around 440 to 460 and want to enter CG Power. So I wanted to validate if it's a good strategy and what would be the entry price recommended for CG Power.
What is the time horizon that you're looking at, Prashant?
About 2 years.
About 2 years. Okay, so then I'll take this up with Saurabh. Saurabh, do you think that's the right strategy?
I think he can do it. He can wait for his target price in the Tata Power because utilities are anyway going up, and CG Power is also looking good for the long-term investment purpose. So he can go ahead with his strategy.
That view, when Sun Pharma also continues to be in focus, and we've mentioned about the big acquisitions the company has done, seeing some pullback from those level of 8% now. Management is expected to speak very shortly, so we'll get you that bite very quickly. But before we do that, let's take couple of more questions now as we speak. The next one's coming from, those are the visuals that we were speaking about. On stage, of course, you have Dilip Shangvi. He is, of course, the MD and CEO of the company, and a bigger acquisition there of almost $11.75 billion. Probably the one in this decade that will define the next one for Sun Pharma, especially in the biosimilar space. And you've seen that the last one we spoke about at the start of the show, that Ranbaxy Taro, led the company into where it is today with those two acquisitions in the 2010s and the 2015 era. You're seeing now coming into the 2020s as well, where a big acquisition has been announced by the company. And given the historical evidence, you're seeing such a big up move on the stock today. A conference call was held today in the morning as well, but let's cut in and listen to what the management has to say.
Good morning, all of you. I'm happy, excited, also a little bit anxious. It's a large transaction that we are entering into. In a way, I think it kind of reminds me of announcing the Ranbaxy transaction. At that point of time, we were, of course, a much smaller company. But at that time also, we were buying another company which was almost 80% of our company in terms of size. We did not pay for that acquisition through cash, but we paid for that acquisition through a much more expensive currency. We paid through our stock. And dilution to Sun Pharma shareholders was close to 20%. Kirti will present the details to you about both the companies, and you will see that Organon, in terms of size, is more or less the same as that of Sun Pharma. In terms of profitability, is maybe even little bit higher than Sun Pharma. However, the transaction values Organon at less than 25% of the Sun valuation. So the key difference in my mind is the difference in our growth trajectory. Sun has been consistently growing and Organon has not been growing. So we know that for us to create value, the key driver is to find a way to grow this business much better than what it has been able to do. It'll possibly require some investment, some focused effort to improving processes, and also many of the other tools that Kirti says we plan to use so that we can reignite the growth of the company. But what is more important for me is that it gives us a global presence. It gives us the ability to license products globally, also launch many of the products that we already have in our pipeline in many geographies that we are not currently present in, and those are interesting geographies. However, I think some of the concerns that people have expressed to me are related to large size of debt that we might have to raise to pay for the company. We will be, of course, using our own cash. but we will also have to raise some significant debt. So I think I want to remain objective. This debt, even though large in terms of overall size, it's still going to be 2.3 times the combined company EBITDA. And we have a focused effort towards finding a way to minimize the debt by finding a way to repay the debt as early as possible. I mean, all of you who've been tracking the company for a long time, you know that we've been either a low debt or maybe a significant cash positive company for a long time. And even the debt that we got as a result of Ranbaxy acquisition, we found a way to repay it in the shortest possible time. So that would be our effort, that would be our focus. But we will still have ability to do business development deals, and we will focus on investing our investable surplus into products which are close to market and products in therapy areas of our interest. The other important issue is the ability to repay the debt. I think Kirti and Jayashri will share with you what you call combined company cash flows and what is it that we can theoretically achieve. Other important issue is the dividends that we pay. We know that for investors, especially who invest in emerging market, dividend is one of the attraction for them to invest. So whatever decision that we will take for what to do with the future dividend policy, we will factor this preference and liking of our shareholders while we take a decision, and we will keep people informed. As on today, when we've done the cash flow calculations and our desire to repay the debt, I think we've kept a provision so that we will continue to have the dividend maintained. But I think greater clarity for all of you and also subsequently questions from you will help people understand the logic of the transaction and also why we see ability to create significant value for Sun shareholders as the time passes. So thank you.
Good morning. And thank you for coming on such a short notice. Today I feel very excited and very proud. This is a historic day in Sun journey as we are accelerating the Sun's transformation toward becoming a global pharma company. I think in next 15-20 minutes I will try to explain you the deal rationales and what is a compelling story, why these two companies are coming together. And we'll also take some of your questions, some of your doubt. So that should also help you to understand the rationale behind acquisition of Organon. So there are initial few slides about Sun. I will run them through fast and then talk more about Organon. These are some disclaimers and forward-looking statements. So all of you know Sun well. We are like a $6 billion company present in 100 countries. We are number one in India. We are number one in another 2-3 geographies like Romania. And 20% of our business comes from innovation. So what we have been focusing for last few years is to increase the innovative part of the business. And then we have a strong balance sheet, $3 billion of a cash as on FY25. So this is all about Sun. That is a business part. Second is, like you know, Sun is all driven by values of Sunology. We always focus on patients. I always look at how do we solve unmet needs of patients? How do we come with new product which will solve some of the patients' problems? And third thing which is important is the execution rigor. And Sun has been doing things well, executing it well, and that helps company to grow to the next level. If we look at our track record, which Dilip Bhai also mentioned, is acquisition of Taro, Ranbaxy. I think post-acquisition, we did well. We grew the business. We also integrated the team well on both the side. And the new Sun, which was formed, was growing faster than what we used to go earlier. This is a history of Sun, and these are not all the milestones, but major milestones is like, which includes the acquisition of the companies on the top, and on the bottom is some of the major licensing deals what we have done. So 2010 around we acquired Taro, then of course DUSA was entry into dermatology, then in 2015 Ranbaxy, which was also like same size of the company. We were 2 billion, Ranbaxy was also 2 billion at that point of time. And then Concert and Checkpoint acquisition happened recently. Incidentally, the Illumia product which we have licensed from Merck was developed by Organon. So this is just a coincidence, like we are acquiring a company which developed this product historically a few years back. So what we have seen in last, say 15 years, if you can focus on the bottom part of the slide, is like from 2010 to 2025, our CAGR of revenue is 14.4%, and the EBITDA is also in line, almost like 13%. So consistently, the objective for the business is to continuously grow the business, and sometimes some of the businesses are also growing faster than the market. What's Organon? And I will spend maybe a couple of minutes on this slide because earlier part was more on Sun. So Organon has 3 business verticals. One is a women's health. And women's health is mostly an innovative part of business. In women's health, in contraception, they are number 2. In fertility, they are number 3. So that's one part of the business. Next big part is the established product business, which is almost like 50%. And there are strong 50 brands. Some of the brands I will also show is like a household name. Every SCP, doctors, patient knows this brand. And out of these 50 brands, 15 brands, 15 brands are large size, and that is 100 million and above. What Organon also helps us is our entry into biosimilars. So we become like the number 7 players worldwide in biosimilars. I think the next point is most important, is what I will keep repeating throughout my presentation, is what Organon is giving to Sun, is a global commercial presence and a global platform to commercialize our existing product as well as future products. And it also gives us entry in some of the markets where we are not present today. And one notable market is China. And I will talk about more details in China going forward. In terms of manufacturing footprint, Organon has 6 sites, 3 of them in the EU and 3 in the emerging market. And has a good manufacturing footprint where most of the product they are able to manufacture on their own. So this is a business part, but even if you look at financially, it's a very stable EBITDA company where the margins are in excess of 30% over last 5 years. And they are generating free cash flow of about $1 billion. And most important is a history of any company like Organon has a legacy of more than 100 years. And in these 100 years, they have developed complex products. They have developed complex biologics, like I said, Illumia. Like that, new biologics were also developed in Organon in the past. So all of these things, how does it help Sun to achieve our transition and go to the next level is what will follow in the next part of the presentation. So 3 parts of the business, women's health, and some other innovative products. So the top 4 products are women's health product. The biggest product is Nexplanon, which is a contraception used for 5 years. Then we have product like Folistim, which is also into women's health fertility. Then there are 2 products. One is Imgality and Vitama. They are for, say, migraine, and Vitama is for dermatology. So this is almost like 33% of the current revenues of Organon. But more important is a central piece, which is established product. And some of you may be very familiar with some of these brand names like Zetia, Atozet, Hyzar, Kozar, Singular. These are like, though they are not like a consumer product, but they are recognized brands and well-known brands across the world, not only in India, but mostly outside India. This part of established brand contributes almost 55% of the business. And third area, which is also equally interesting, and I will explain you in more detail, is biosimilar. So currently they have 5-6 products in biosimilar, and that contributes around 11% of the revenues. So coming to all three areas, I will explain. Like women's health is a large unmet need. So today the market size is almost like 35 billion, growing at 6 to 10%. And there are more than 100 opportunities or assets which are under development in women's health. So what I'm trying to say, for growth of the business on women's health side, we may have to do future licensing, and such assets are also available. And this is an area where the complexity of developing product is also very high. So for somebody to really replicate or come with a generic product is always has been challenging. In terms of, I think ranking, I already told they're number 2 in contraception, number 3 in globally, and also have a complex product like Nexplanon and Nuvaring, which are difficult to develop. Coming to next part of the business is which is established brand business. So established brand business, I will correlate to like what we do branded generics in India. It's very similar. These are the brands which were launched before patent expiry, and they continue to do well. As an example, like some of these brands having multiple generics in many markets. I'm just giving as an example, like Propecia in China is a very big brand. In spite of there are 25 to 30 generics being available. So all these brand, 50 brand has a strong brand equity and very close association with both SCPs as well as the patients. And they want to use this brand in spite of availability of many generic products. So like that, Organon is present in cardiovascular, bone health, Nasonex and Singulars are very strong brand in respiratory. And then they have other brands in dermatology and also Propecia and Proscar. So very strong brand franchises, out of which like 15 brands are about 100 million. And this is a big portfolio. So why I'm talking to you about this portfolio? Because what do we do this portfolio going forward to grow the business? That is a question I'm anticipating from all of you. So as a Sun Pharma as a company and with our background, we understand that how do we develop the line extensions of these brands? How do I combine this product one with another? How do I have a new forms of this formulation which can help us to grow this franchise going forward? Third piece of the business is biosimilar. So this is also like entry of Sun into biosimilar. We have a very small biosimilar business in India, but outside India we have no biosimilars. And if you look at the track record of Organon also from 2021 till 2025, this business is growing at 13% CAGR. So it's a good business and continues to grow. But what is more important is the future opportunities. If you look at the IMS, what it tells you, there are $320 billion worth of biologics which are losing the patent by 2035. And roughly, if you convert this 320 billion into a biosimilar market, there can be an opportunity for us to look at like something like 70 billion type of a market in which we can play. So today there are 6 products, but it also gives us an opportunity to in-license more products in biosimilars and make them available globally across the markets. So it's a transformative opportunity for Sun, and what I'm looking at is how do we use this platform to grow the business faster. So I'm focusing on only 2-3 parts of it. One is the innovative part I will discuss with you. Then branded generic play, where we have a lot of experience in India and emerging market on how do we promote this brand to the doctors. So similar will be used when we look at established product business. And biosimilar is a new opportunity, like we will be ranked 7 globally, and there is an opportunity to grow this business. The last important part on this slide is also this commercial platform can be used to become a licensing partner of choice, and that would also bring next level of growth. So if you look at the innovative portfolio of both companies together, women's health is a area we are adding into our innovative basket, which was not there earlier.
All right, so you heard the management talk about what this acquisition exactly means for the counter. The counter is up almost 7% as we speak, almost at its day's high point. But with that, viewers, completely out of time on this edition of Fast Profit, but do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharp voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit for your...
Hello and welcome to Know Your Company. I am Mahima Vachharjani, and today we are going to talk about a very interesting company. It's called Rushil Decor. Now, why is this interesting? Because this is one of those companies that is into, and one of the leading manufacturers, by the way, of MDF boards as well as laminates in India. Not just in India, they're expanding in terms of geographies internationally as well. Now, they've got 100+ years of lineage when it comes to wood engineering. In terms of the products that they make, they've got a very big experience coming in. Recently, they entered into manufacturing of jumbo laminates as well. This is going to be one of the key drivers for them going forward as well. It's one of the third largest market share. It has one of the third largest market share in terms of MDF boards in India right now. In terms of the overall experience in terms of both of these products, their main key hero products, 32 years plus of experience in MDF boards as well as laminates is what the company holds. In terms of the product range, they've got 1200+ designs when it comes to both of these products, that is MDF boards as well as laminates. In terms of the product range, in terms of brands, they've got 6 distinct brands. Even in terms of the applications of these products, it's used across commercial as well as residential furniture, also used in wall paneling and others. So it's got varied range of areas in which all of these products are used. Now, it of course is seeing increase in focus of value-added MDF boards, plus considering that housing development is going to pick up going forward, they're in for a huge growth coming in as well. In terms of distribution, they've got 700+ direct distributors. In terms of retail distribution also, if we can pull that number up, they've got 4,700+ retailers and dealers present right now as a whole. In terms of manufacturing, they've got 6 manufacturing facilities across India, of which the breakup is that 1 MDF plant is in Andhra Pradesh, 2 of their MDF plants are in Karnataka, and they've got 3 laminate plants in Gujarat. They've also now recently, the entire unit of, jumbo is also started. But before that, let's take a look at the installed capacity and capacity utilizations as well. For laminates, the installed capacity is 34,92,000 sheets per annum. The utilization for this one as of 9 months FY26 stood at 89%. For MDF boards now, the overall capacity stands at 3,30,000 cubic meter per annum, and the capacity utilization here stands at 72%. They are of course planning to scale in when it comes to the capacity utilization. We'll ask the management about the same. In terms of total capacity for jumbo laminates manufacturing platform, that is around 28 lakh sheets per annum. This is a very recent one that they've opened in Gujarat, the plant for this one in 3 different phases. And the jumbo laminates has opened key access to key Europe markets as well. So this is something that is going to expand their international horizon. Now VIR as a brand has also expanded across 57 countries. So that is also one of the key developments that we'll be tracking for the company. In terms of certifications and quality, that also supports their export growth. So all of these 3 points that I mentioned are very important when it comes to their international expansion and accessing the global markets. Plus, the product quality and manufacturing certifications give them an advantage in driving export sales growth, and that is going to be one of the key factors that leads to their key growth going forward as well. This is everything that you need to know about the company. Let's also take a look at the parameters that we're going to look at and assess the company for Rushil Decor as a whole. Let's try to pull that up and see in terms of what parameters are we going to take a look at. The first one that we're going to keep an eye on is the income statement. We're going to talk about how the company has done in the past year in terms of revenue, EBITDA, margins as well as PAT. The next one that we're going to talk about the balance sheet as to how healthy it is in terms of its borrowings, its cash positions, as well as in terms of where the equity stands. Cash flow, we're going to talk about how cash flow from operation has fared over the years and how EBITDA is getting converted into that cash flow from operations. And we're also going to talk about return ratios as to how the ROC of company has fared so far. Then we're also going to talk about the shareholding pattern, whether the promoters have skin in the game, what are FIIs and DIIs doing with regards to this counter. All of that we're going to discuss in shareholding pattern. Then we are going to talk about street cred. Now, street cred is something that will tell you as to how the stock has done over the years. We're going to break that down into different time frames as to what kind of return it has given to its investors. Then we are also going to talk about valuations, because that is an important perspective as to how this particular counter stacks up against its peers and what is the outlook looking like in terms of where the valuation stands. And that's the outlook part also we are going to separately discuss in the 8th parameter, and we're going to talk about as to what is the guidance that the management has given. Now let's take a look at the first parameter, that is the income statement. Now if you take a look at the last 3 years for this counter, the 3-year CAGR, we've taken FY25 up to FY25 numbers for simplicity of understanding. 3-year CAGR in terms of revenue stands at 13%, but if you take a look at the last 3 years, the revenue has been range bound in that 800 to 890 odd crores. EBITDA has also seen a similar CAGR of 13% in the past three odd years, and what we're seeing is that overall revenue as well as EBITDA both are growing hand in hand. But PAT overall, if you can go back to the previous slide once, overall in terms of the PAT numbers as well, we've seen a good growth of 28% when it comes to the 3-year CAGR, but the last 2 years the PAT has largely remained in that 40 to 45 odd crore range. Let's take a look at the margins as well. Margins is something which is concerning because that's dropped from FY23 to FY25 from a 17.8% to 11.8%. This we're going to talk to the management about, but I think the main concern here is with regards to the rise in raw material cost inflation, and I think that is the reason as to what is putting pressure on margins. And plus I think probably they're going ahead and spending in marketing spends as well. We'll try to understand of course that part from the management, but overall in terms of the overall CAGR plus the margins, considering margins into picture, we've given it a neutral rating when it comes to the income statement. Let's take a look at the balance sheet as well. In terms of the overall picture when it comes to the retained earnings, that has grown steadily over the past 3 years from a 344 odd crore to a 600 odd crore in FY25. So that there is no problem there, completely a thumbs up. In terms of the debt, that has been reducing, both considering both the long-term and short-term debt. It stood at around 400 odd crores in FY23, gone down to 267 odd crore in FY27. This combines both long-term and short-term borrowing. We'll try to understand from the management as to what are their plans going forward when it comes to debt reduction. Cash in bank is the other factor which is slightly concerning, because overall their average cash flow has remained in that range of 5 odd crores. So we'll try to understand from the management whether they're planning any fundraise and apart from that, what are the plans to retain cash going forward, because if you take a look at the cash flow picture as well, I will try to understand as to how the net cash flow position has remained zero throughout the years. They've overall managed to grow in terms of their operating cash flow to EBITDA number, which is a healthy number for sure, from 77% to 102%, but overall slightly in terms of cash flow from operation has been reducing a tad bit, and the net cash flows have remained zero, which is not a concern when there's conversion happening in terms of EBITDA number. But overall we try to understand from the management with regards to what are their plans are when it comes to the cash position. But because the ratio is healthy here, we've given it a thumbs up when it comes to the cash flow statement. Let's now try to understand the ratio aspect and see as to how return ratios have fared over the last couple of years. Let's try to look at that chart. It's an interesting one. It went to 16% odd ROCE in FY23, but since then it has come down. It's come down to 12% in FY24 and 10% odd in FY25. So we'll try to understand from the management as to what the internal targets are to grow that ROC percentage, and because of it declining in the past 3 odd years, we've taken a conservative approach here and given it a thumbs down when it comes to the return ratios. Let's try to pull up the shareholding pattern. Now the promoters have largely held their stake in the company, so there is skin in the game. It is above 50% mark. So overall that has remained largely stable in the past 3 years. When it comes to the FI holding, not much of an interest for FIs and DIs both here, because FIs have largely maintained their 1.3% stake in the company. However, there's public holding which is very strong on this one. 42% to 44% it's gone in the past 2 odd years. Because there's no FI DI interest that we've seen in this counter, of course it's also a very small market cap company of around 500 odd crores, and that is why probably we're seeing less FI DI interest. But considering that approach, I think we've given it a neutral rating for now. This is the number of shareholders that have grown in the past 3 odd years, from a 24,000 number 2 of 50,000 or 74. This is of course in of thousands. Let's try to pull up the next slide and see as to how the street cred has been right now. Interestingly, in the past 1 month, the stock has gone up almost 22%. But if you take a look at the performance from a larger scale, 6 months it's down 39%, YTD it's down 28%. 1 year, the stock is down 29%, and 5 years, it's not done anything. It's just given return to its investor by about 5%. And considering that, I think we've given it a thumbs down for now, but we'll have to wait and watch out for whether that 1 month move that we've seen in the past 1 month will continue in terms of momentum or not. So that's with regards to where street cred goes. Now let's take a look at the outlook picture as well, because the management has given guidance when it comes to FY26 as well as FY27 going forward. But before we do that, let's take a look at the peer comparison as well. In terms of the peer comparison, Rushil Decor is one of the cheapest stock available right now in this space, because if you take a look at Century Plyboard, that's trading at 72 times, Greenlam Industry trading at 313 times versus Rushil Decor just trading at 16 times, because Stylum and Greenply are also trading at 27 times and 40 times respectively. So Rushil Decor right now is one of the cheapest stock available in the entire space of MDF as well as laminate. So that's why we've given it a thumbs up when it comes to the valuation, but we'll have to wait and watch out for as to how growth for the company fares going forward, because that will also determine as to how valuations fare. Lastly, in terms of outlook, FY26 revenue, they're targeting around 900 crores. They did around 890 odd crores in FY27, so not much of a growth as compared to FY25. EBITDA margin is expected to be around 8 to 9%, which is slightly lower as compared to what they did in FY25. So we'll ask the management as to what the plans are going ahead. FY27 revenue, however, they're bullish when it comes to the FY27 revenue. 1,000 crores is what they're at least aiming at. Overall, in terms of EBITDA margins, they are expecting this to go up to 10 to 11% from at 8 to 9% in FY26. So this is the overall guidance given by the management of company. Strong guidance coming in for FY27, and that's why we're giving it a thumbs up when it comes to the outlook. So that's with regards to where, of course, the overall parameters go for the company. Let's now take a look at what ratings have we given for this one in terms of the total overall ratings for Rushil Decor. Let's try to pull that up and see. For income statement, we've given it a neutral rating considering margins declining. For balance sheet, we've also taken a conservative approach here and given it a neutral rating considering the borrowings picture. Cash flow, we have given it a thumbs up because operating cash flow to EBITDA is a very healthy ratio for the company. Return ratio, we have given it a thumbs down because the ratio has been declining when it comes to the ROCE number. Shareholdings, we've given it a neutral rating right now because it's a small company, no FIDI interest. So just a conservative approach is what we've taken. Street cred, 5 years, the stock has not done anything, and that's why we've given it a thumbs down. But of course, we'll be watching out for, because in the last 1 month, there is momentum seen in this counter, and we'll keep an eye on what happens next for the company. Valuations, most certainly a thumbs up, because one of the cheapest stock available in the space at 16 times right now. Going forward will become cheaper as well, but growth is something that we'll be watching out for, and outlook definitely a thumbs up. The guidance given by the management for FY27 is most certainly a bullish one. So that's with regards to Rushil Decor goes. The overall rating comes out to be 4.5 out of 8 for Rushil Decor. So that's with regards to where the final ratings go. But viewers, time to slip into a very, very short break. We'll be speaking to Rushil Thakkar, the managing director of Rushil Decor, on the other side of the break. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall
ecosystems.
Welcome back. You're watching Know Your Company, and we were talking about Rushil Decor. We've given the company a rating of 4.5, healthy financials going forward, and healthy guidance also the management has given going forward. And let's talk to, in fact, Rushil Thakkar, the managing director of Rushil Decor, who is joining us now. Rushil, thank you so much for first of all taking the time and speaking with us at NDTV Profit. My first question is with regards to how we've analyzed your income statement. Just want to understand, you've already given FY27 guidance of that 1,000 crore odd mark. In the last 3 to 4 years, there has been a tepid growth, and this I suppose is considering the growth in terms of how industry is going in terms of real estate as well. Plus, there is raw material cost inflationary pressure continuously on you. But what gives you the confidence of achieving that 1,000 crore in FY27? What will be the triggers going forward?
So first of all, good afternoon, and thank you, Mahima, for the opportunity. So as we look to grow towards the 1,000 crore company, so first of all, our Jumbo project is now in place, and all the research and development which has to be done has been in place, and we are opening up the markets in Europe and Northern America and Latin America, which will grow our export revenues in laminate. In terms of MDF, we are growing with the value addition. So our target is to reach 50% of the total capacity with the value addition, which will give us another boost in the top line and also in the net margin ratio. So we are very clear with and focused with our vision, what we want, and that's how our company will be growing at this year for 1,000 crores.
Okay, Rushil, with regards to your margins, you've said that you'll do 8 to 9% this year, but that will go to 10 to 11% next year. Considering the West Asia conflict into consideration, that has probably pushed your raw material inflation further, if I'm not wrong. Do you think those margin levels are still achievable in FY27? What is the hit that you've taken in FY26, and what is it that will be followed through in FY27?
So yes, price hike we have taken in MDF roughly around 15%. Our first hike was in April first week, which was around 10%, and the second hike we took somewhere around 10th of April, which was somewhere around 5%. So, and looking at the current scenario, yes, our prices are sustainable. When we talk about our HPL business, we have roughly taken 18% of price hike in 1mm, which is our premium product, and slightly lower in the lower range of the side. So margins are retainable. Talking about the chemical prices, yes, the chemical prices has gone up drastically, and we are trying our best to procure at the best rate possible and sustain our margins, what we have already committed. But speaking towards the margin for this year, yes, we are expecting to have EBITDA margins of roughly around 11 to 12%.
Rushil, with regards to the overall cost price that has gone up for you, just want to get a sense as to how much of West Asia conflict has actually impacted you right now, and will that hit be taken forward in FY27 is what I want to understand.
So currently, yes, our strong markets are Far East and Gulf. Gulf has given us a good hit for MDF exports, but now we have slightly looking towards the other part of the world as well, and we are exploring some more customers. So we are expected just not to depend on one country for our MDF export, just one continent for our MDF exports. And talking about laminate, yes, laminate, we have a vast number of countries, like we are operating in more than 63 countries currently. So West Asia conflict has given us a hit in terms of MDF, but in laminate, yes, we have other trajectories where we are working very strongly. And talking about, again, coming back to the raw material side, yes, our majority of the raw materials in chemicals come from Gulf, and which has given us a higher impact in terms of cost increase.
So then, Rushil, I want to understand as to what's your difference between, breakup between your exports and domestic sales right now, and how will that fare in FY27? How does that change things, and that, having impact or bearing on your margins?
So first of all, when we talk about laminate, our laminate turnover is 65% from exports. And when we talk about MDF, our 20% average is out of the exports. And combining both together, around 25% of the turnover comes from the exports. That's how the the blend of the turnover is. Domestic in MDF is the major part where we are playing, and it is a major part of our top line as well. So considering that, yes, the ratios we will try to increase up to 30% for exports in both the products. That's what our target is.
With regards to your debt, Rushil, that stands at around 139 crore as of FY25. This is the long-term debt that I'm talking about. Any plans of bringing that number down in the near future? I mean, you might have reduced it in FY26 already. So if you can give us a perspective on that number and then going forward in FY27 as well.
So our yearly repayment to the debt for the long term is roughly around 50 crore rupees every year. So considering that we have already paid the 50 crores for this year, so we consider ourselves as a debt-free company in upcoming 2 years.
Rushil, the other aspect is with regards to your cash position, because on an average you have maintained that cash position anywhere between 5 to 10 odd crores. Do you think that you have more requirement in terms of where the cash balance stands, and would you be looking for any fundraise going forward, maybe for that reasons?
No, currently we are comfortably operating with our cash ratio what we have, and in current stage we are not at all looking for any fundraisers from the public or any kind of offerings from the public or any private equity, and we are clear with it that in this financial year we will not be raising any kind of fund.
Okay, got it. Rushil, for your ROCE number that has declined in the past 2 years from that 70% mark to that 10% mark, if I'm not wrong, any plans on internal targets to raise that number going forward? And if yes, any range that you would want to give in terms of how that number will fare in FY27?
So if we compare our ROCE with the FY23, the 23 was something really very, very good year for us because of certain things. We had a newly installed capacity in hand and everything was online. But when coming years ahead, there were too many domestic competitions started, because of which there were too many internal domestic competition and conflicts going on. Now it is a time that we are seeing that we'll be growing, but I can't give you the indication at with what percentage the ROCE will be growing. But I would assure you that the current ROCE which we have will be maintained in any case.
So then with regards to your installed capacity right now for both laminates as well as MDF board, laminates I think utilization stands at 89%, which is a very healthy number, and so is for MDF boards, which is at 72%. What is your blended utilization at currently right now, and how will that number go going forward in FY27? Because even the jumbo laminates manufacturing is, if I'm not wrong, now fully operational and will start contributing to your overall capacity utilizations.
So in HPL, when we see, we divide it into two parts. One would be the jumbo facility, which we are operating currently at roughly around 25%, which we have targeted to utilize more than 55% this year. Talking about the old facility or old capacity, what we have, we are utilizing at the peak somewhere around 85-88%. And in laminate, there are too many permutation combinations on which the capacities are calculated. So in the older side, we are not expecting that we will be having a long difference between the capacity utilization. It will stand somewhere around 85 to 90% in the depending on the project, depending on the product mix. In jumbo, yes, we'll be increasing to 55%. Coming towards the MDF, our capacity blended with both the units, Visakhapatnam and Chikmagalur, is somewhere around 87 to 90%. And in our Chikmagalur facility case, we have almost utilized sometimes up to 120% also. So we don't see a capacity concern rising as of now for this financial year, and we are very confident to utilize that MDF capacity to about 90% as well in blended form.
All right. Thank you so much, Rushil, for helping us answer, in fact, all those questions so candidly and taking out the time and speaking with us at NDTV Profit. So that was, of course, the management of Rushil Decor. But, let's cut across to Sun Pharma's press conference where NDTV Profit team is speaking with the management. I think Varsha is speaking with the management. Listen in.
Who also develop product for specific region or areas. Like in our past experience, we have seen a lot of companies, they develop product only for US and then they license out for the rest of the geographies. So the combination of both these, some of the innovation from China and from the rest of the world, we will be able to license a product which fits into the new therapy area what we have today with the addition of Organon, and that should help us to grow further, including China for China is one of the example. Like we can also look at some of the assets licensing from China for China because it's a big market and it would justify licensing for even single country.
Mr. Sanghvi, hi, this is Varsha from NDTV Profit and congratulations on the deal. Investors are really happy on this deal. But my question is that you are acquiring an asset which has a high debt and has a slow growth. Why not invest in your own innovative portfolio versus buy this asset? I mean, what's that single biggest moat that you see in Organon due to which you are planning to acquire this? Thank you.
No, I think that was the part of the presentation, is that while we will continue to invest in R&D, we will require infrastructure globally and relationships in all these geographies so that when we launch our product, we are able to get meaningful market share. Now, for Sun alone, on its own, would have taken a much longer time to reach where we can potentially reach post the Organon acquisition. This does not change our investment philosophy for investment in innovation. It also does not change our approach to finding a continuous way to grow the business. As Kirti says, it actually significantly enhances our ability to grow in our markets where we are already present and gives us opportunity in new markets like where we are currently not present. So like we are not present in most of the countries in South America, Korea, Taiwan, China. We get a direct presence. Middle East, even Turkey, many countries there we have no presence. So it gives us an ability to launch whichever product we develop in a much bigger geography. I think Kirti says that we've launched Illumia only in 35 markets. In many markets we don't have either a licensing deal or a direct launch. So we can leverage this to sell many of our innovative products also in those geographies.
Ben, this is Ben from the New Indian Express. You spoke about further investment in the company. Can you give some clarity on that? And plus, have you reached the financial closure for the loan debt side of the deal?
So,
not clear what you're asking.
Ben, can you ask your question again, please?
No. Mr. Shamki spoke about further investment into Organon. Could you give some clarity? What?
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
But
Benchmarks trade in the green, broad-based gains seen across the market, powered by sectors like pharma, IT, real estate and metals as well. Financial services and Nifty Bank remain on the back foot. Paytm is under pressure after the RBI cancelled the banking license of its associate entity, that is Paytm Payments Bank. Paytm has issued a clarification stating that the regulatory action would not disrupt its Paytm operations as usual. Reliance Industries reports below than estimates fourth quarter with pressure clearly visible on the margins and profitability. Axis Bank delivers in-line numbers while RBL Bank sees a strong quarter. IDFC First too sees improvement in its asset quality. Sun Pharma has signed a definitive all-cash deal to acquire Organon at a 24% premium compared to the closing price that we had seen for the company. Now, this deal is expected to close in early 2027. Company says its top priority post-deal will be a focused effort to reduce debt and strengthen balance sheet. Brutal heat wave across North India turns up the heat on air conditioner makers and power companies. Stock edge higher as investors bet on stronger cooling demand and a spike in electricity consumption. Good afternoon, you're watching Markets at 12 with me, Soumit Sarkar. This is the show where we get you the updates on the top buzzers and news updates on the at noon. But first thing first, let's have a quick look on the markets. If you look at the markets, we have conquered the 24,000 level, and for the last few hours, we have been quite a range bound. From 24,000 to 24,100 is the tight range where the benchmark has been moving across. If you look at the banking names, those are in red, largely led by Axis Bank, ICICI Bank, AU Small Finance. These are the main culprits that have led the Nifty Bank Index or Nifty Financial Index down in trade. Apart from that, the sector indices that are gaining in trade, it's Pharma and Metal Index. Pharma is largely led by Sun Pharma and Metal is largely led by Hindustan Zinc. If you look at the F&O names as well, Sun Pharma is a top gainer, followed by Torrent Power, OFSS, Amber Enterprises and Hindustan Zinc. All stocks are gaining anywhere between 4 to 6% in trade. Apart from that, all other power stocks have also been gaining in trade. On the flip side, it's Axis Bank, Shriram Finance, RBL Bank, AU Small Finance Bank, all financial service or banking names that are trading in red. Paytm is also down around 2.5%. In fact, it has recovered very nicely from the day's lowest point. At one point of time, the stock was down around 8%. Right now, it's just down 2.5% in trade. Jubilant Foodwork, Bharat Electronic, Kane Stake down anywhere between 1.5% in trade. Let's also welcome in our fundamental guest, Sonam Srivastava, founder and fund manager at Right Research PMS. Sonam, firstly to understand, how are you looking at the markets on an overall basis? Are you seeing a good growth in earnings, or earnings have been subdued? What is your understanding here?
No, definitely. I think the earnings have been better than expectation right now. If you see, there are more upgrades and downgrades that I can see. Even the stock is seeing strong reaction after earnings. I don't see that there's a very adverse earning that might have come. So I think the earning season definitely is looking positive as of now, but there's a long way to go, right, for the whole season to complete. And yeah, I think today's up move in the market is definitely coming after 3 days of consistent correction in the market. And we expect this up move to sustain. And I think if the Nifty crosses 25,000, that could be a very positive sign that could trigger a further up move.
Okay, and overall sector-wise, which is the most attractive sector that you're finding, given the fact that you're sectors in which you're expecting earnings growth to be stronger?
Okay. See, I think sectorally, you definitely, I think banks, you have a strong expectation. But our stronger sort of expectation will be coming from the auto pack, right? From the auto financiers, even auto ancillaries. I think that's one of the favorite sectors in the market right now. We also like, some of the metals in this space. We like a few industrials, stocks in this space. So I think that is where we see a strong growth coming in. On the other hand, you would see, decent earnings coming from banking, pharma, and that pack as well, right?
And on the flip side, which are the sectors where one should avoid, given the fact that earnings growth are not expected to be that strong and valuations are also on the expensive side?
See, I think, you're not expecting a very strong earning coming out from the IT pack, even though, DCS gave decent numbers. So I would probably be a little bit careful over there, but valuation definitely are quite low, right? So I think you have to look at that as well, and you can see people are strategically taking bets in the IT sector. So I would say that avoid it, but we're not expecting some extraordinary earnings coming out. I think on the FMCG pack also, or other companies which have a lot of dependence on crude prices like paint, etc. You can see they are at the absolute bottom, and you might not see strong up moves coming out after this earnings season.
Okay, and banking is one of the names that I actually wanted to discuss with you. See, if you look at the other banks named like ICICI, HDFC Bank, the numbers were not that great, but we haven't seen an up move in these counters. Even Axis Bank, for that matter, the numbers are not bad, but we are still seeing a downtick coming in this counter. So how should one read into the banking names right now?
See, I think, if you're expecting a strong up move from here, you might not look at banks to be your biggest growth drivers. But what I would say is that banks definitely will be the stability driver, right? So if there is any volatility or any trouble in the market, banks should be, the stable core of people's portfolio. And like you said, earnings have not been bad. Earnings have been pretty decent. I think ICICI, HDFC, they gave with positive. Even Axis Bank has outperformed various brokerage estimates. I think Citibank came out with some concern for Axis Bank, which could be one of the reasons why we're seeing some correction. But yeah, I think banks could be the stability drivers. The market itself right now, you've seen a strong recovery, but we're not out of the woods yet. And banks can definitely be the strong anchor in people's portfolio. But yeah, I really like the NBFC sector. So we saw very strong numbers come out from M&M Finance and Canfin Home, which are both of these stocks where we have holdings. And you saw M&M Finance actually double its profits, right, in the current earnings. So I think I definitely like the financial services, and I expect banks to be a stable core.
Sonam, hold on. Varun Beverages has come out with its numbers, a stellar set of numbers. In fact, if you look at the net profit, it is a beat of around 3% compared to what the street was anticipating. Strong beat on the margin front and EBITDA front as well. Let's get in Mahima with more details on Varun Beverages here.
Right, so Amit, so as you rightly mentioned, it's most certainly a beat versus what the analysts were expecting. In terms of the top line, the beat, excluding the excise number, is around 500 crores, and including the excise is around 300 odd crores when it comes to the top line. In terms of the net profit number, also the expectations were that the net profit number will be flat at that 720 odd crores, but it's come in with a growth of 20 odd % with the number of 872 odd crores. Margins have also come in at 23.3% versus that of 22.7%, much better than what the street was expecting. And EBITDA has seen a growth of 21%, slightly higher than how the revenue has grown. In terms of the sales volume number, consolidated sales volume number has gone up by 16.3%. Overall volume was driven by 14% volume growth in India, and international business saw volume growth of 21.4%. I think the key developments in this quarter also include the 100% acquisition stake that they've completed in Twiza, which is a very important international acquisition for them. Even a 100% acquisition in Crickley Dairy Properties in South Africa was also one of the important developments that happened in mid-March, around 17th of March. And overall, company has also declared a dividend of around 0.5 per equity share. So this is the overall development coming in. Even in terms of the management commentary coming in, the management has said that overall in India, demand remained encouraging during the quarter, supported by wide distribution reach and strengthened execution and continued investment in terms of manufacturing capacity and chilling infrastructure. They said that they've undertaken targeted initiative to drive volume growth to strengthen the domestic portfolio, including pack pricing. Selective price point launches have been identified in these markets to onboard new customers. On international front also, they're saying that they've made steady progress during the quarter, and of course they talked about the two acquisitions, that is Twiza and the other one. Overall, in terms of looking ahead, they said that they remain confident in the long-term opportunity across the markets, supported by favorable demographics, rising income, as well as growing urban consumption. So this is the overall view as to how Q1 is fared for Varun Beverages. However, the stock probably is now taking a knock and seeing some profit booking coming in.
Well, thank you, Mahima, for that roundup when it comes to Varun Beverages. So now my question to you is not stock specific, but on the entire space which actually gets benefited because of this harsh summer season that we are seeing, be it power names, be it AC, be it FMCG names like Varun Beverages, Dabur. Given the fact that the temperatures are expected to be worse going forward, any sector that looks more attractive to you from summer specific? Do remember that power stocks have already run up a lot. So how are you looking at this theme?
I think the demand for power would continue to remain strong. You've seen corrections, in the past month, and I think taking strategic positions in the power sector, given the summers plus data center theme continuing to be very strong. I think power sector definitely makes sense. Along with it, I think the EMS names, right? For example, your Voltas, PG Electroplast, and a number of other companies, Amber, which have exposure to the AC space. I think that would definitely be interesting. Number one, because we're expecting summers to be strong, and secondly, these stocks are at very attractive valuations. They've corrected quite a bit. So I would be definitely looking out at some of these, AC stocks in the EMS segment.
Thank you, Sonam. Thank you for joining us and giving us your perspectives on the sectors that we discussed. Moving on, pharma is a sector that remains in focus. Multiple news that has come in. First, let's address the news that has come in for Cohance Life. Now, here a big appointment has come in. Umang Vohra, who was earlier with Cipla, is now joined as the chairman and the group CEO of Cohance Life. The former CEO of Cipla joins the organization to spearhead its next phase of transformation and growth. Let's get in Varsha to understand how this new appointment will actually benefit Cohance, which has hit an upper circuit of 20% in trade.
Very positive and big news for Cohance Life Sciences, and this is a shocking news. I mean, Umang Vohra joining Cohance Life Sciences. Well, why this is an important one and why you're seeing such a huge surge in stock prices. One is why Umang Vohra is a strategic fit for Cohance. One is he has a proven ability, to grow globally while protecting margins. What he has done with Cipla, and also talking about the customer-centric CDMO segment, we've seen a clear shift from volume manufacturing to value partnerships in Cipla, and also this appointment supports Cohance transition to professional governance-led growth, which Cohance has been doing, and also the track record enhances investors' confidence and strategic clarity. Now, why I'm saying this, what Umang Vohra has done with Cipla, how he has transformed Cipla from 2016 to 26 is one is he has transformed this company from volume to value growth. pivoted away from commodity generics to complex and specialty products, built scale and leadership in respiratory and chronic therapies, and focused on high barrier differentiated products. And the key outcome of all these initiatives taken by Umang in Cipla was Cipla became the world's largest inhaler seller by volume, ranked among the top players in US inhalation generics, and established global leadership in respiratory care at industrial. So, a very big and positive news on Cohance Life Sciences, and I think this may be the start of the rally that we are seeing.
Well, shifting focus from pharma to Reliance Industries reported a weak set of numbers. Overall, the miss was because of a weak performance coming in from the oil and gas divisions of Reliance Industries. If you look at the O2C segment, that reported the biggest drop in its EBITDA in the last 7 quarters, while the oil and gas exploration segment reported the biggest drop in its EBITDA in the last 16 quarters. Now, what impacted the O2C segment? It was higher insurance cost, higher freight cost, more LPG production coming in, and higher crude oil prices also. Now, do remember that in the O2C segment, the retail fuel segment might have also got impacted because of lower retail fuel prices and higher crude oil prices. When it comes to the oil and gas exploration segment, that got impacted largely because of lower production and higher operational costs in the fourth quarter of FY26. Speaking about the retail segment, it was a modest growth that we saw on a sequential basis, but that was also because of a high base. But numbers are pretty much in line with what the street was anticipating. And when it comes to telecom segment, again an inline set of numbers, but the lowest or the slowest growth that we have seen in the last 12 quarters for revenue, EBITDA and net profit. ARPUs came in flat at close to 214 rupees per user per month, and the entire growth that the telecom arm of Reliance Industries saw was on the back of subscriber additions. Subscriber additions stood at close to 9.1 million, which is the highest that Reliance Industries has seen in FY26. So that led to the entire growth for the telecom business. Moving on to the Sun Pharma news now. This is the biggest M&A news that we have heard in the pharma sector for a very long time. Sun Pharma is acquiring the New York listed women's health care company Organon in what is likely to be one of the biggest India outbound deals in years. Now, the deal gives Sun Pharma global reach in more than 150 countries along with stronger cash flows. Now, talking about the conference call that the management held with the analysts at 8 p.m., they said that the Organon deal marks a clear pivot to higher growth segments, with management being confident that the transaction will accelerate long-term value creation for the company and its shareholders. Now, the company also acknowledged that it will be taking upon a meaningful debt to close the deal, with leverage expected to be at around 2.3 times its combined EBITDA. Now, do remember that the combined EBITDA of the entity would be close to $4 billion and the debt would be nearly 2.3 times of that. But they also stressed that a sharp focus will be on deleveraging its book at earliest as possible. Now, management also expects to rebuild the value erosion linked to Organon while scaling its biosimilar portfolio. Now, post-acquisition, Sun's innovative portfolio is set to contribute roughly 27% of the revenue, strengthening its global growth profile. Now, let's get in Thomas Abraham, research analyst at Mirae Asset Sher Khan. Thomas, firstly, to understand with you, how are you looking at this deal? Should that be a bigger concern for the minority shareholders, or they should be happy given the fact that this deal will be EPS accretive and could lead to a new growth opportunity for Sun Pharma?
Yeah, so good morning. So when you look at this deal, there are two aspects to it. I would think of it in a long-term perspective. This is wonderful news as far as Sun Pharma is concerned, because given the size of the company that Sun Pharma is, in terms of growth in the long term, this allows them to actually move ahead much faster than if they did it organically. So considering that, it's a good deal. It's a good move forward for them. For sure, when it comes to the minority shareholders, the question really becomes about dividend payments and how it's going to be structured over the next few quarters and years to come. But especially given the fact that the management wants to pay the debt as early as possible in probably 3 to 4 years. So considering those aspects, it's a little bit of a thought that goes into all the minority shareholders as to what the dividend would be. But if you're looking at a long-term growth perspective for a company as big as Sun Pharma, well, in that sense, this is actually a very good news for the shareholders.
Now, given the fact that this acquisition has been announced and everything is now known to street, what is the kind of growth that you're expecting from Sun Pharma over the next 3 to 4 years?
No, I need to actually look into both the deals properly to be able to provide a growth per se. But considering the fact that the company is looking to finish off all the debt in about 3 to 4 years, despite good debt EBITDA of about 3x, 2.5 to 3x, more than the growth in terms of, the revenue growth that we're looking at, it's in terms of the EPS growth that we should look at in the longer term, given the fact that we have to pay off the debt. So that is how I'm looking at it at this point.
One more thing I wanted to check with you on the valuation front. Now, given the fact that this news was all over the media reports since Jan 2026, and we have seen a significant rise in the share prices of Organon as well over that time period. But even if you consider Friday's closing, which already had factored in a 30% move in the share prices, Sun Pharma is paying $14 per share, which is still a significant premium compared to what the market price was for Organon. So do you think that those expensive, those premium valuations for Organon is justified given the fact that the company has not reported any growth for the last couple of years?
When it comes to the acquisition, what really happens is that in terms of what Sun Pharma is gaining in the long term is what we're looking at. So Sun Pharma is gaining into the access in terms of the manufacturing units in US, Europe, European Union. They're able to bring a certain portfolio of products that that would actually take them off the generics platform and more into innovative and biosimilars. All those aspects is what eventually brings about a valuation. Sure, in terms of a 25-30% premium to what the share prices are for them right now, it looks a little on the expensive side, but given the growth prospects, there was concern in the street over the last few weeks as well with regard to what the valuation would be and how much would be the debt that Sun Pharma would be having and the deal structure as such. But again, at this point, I think it's still fair in terms of if they can actually be able to provide good operating cash flows over the next 3 to 4 years, then this is a pretty good deal.
And just one question on the Cohance Life announcement, given the fact that the stock has hit an upper circuit of 20%. If you have a coverage and if you could answer on that as well. Umang Vora has been appointed as the new appointment that has happened in Cohance Life. Obviously, it's a positive news coming in given the stock is up 20%. But how are you reading into this?
We do not have coverage on the stock, so I wouldn't comment on this.
But okay, then in the entire pharma space at this moment, under the stocks that are under your coverage, which is the most attractive one?
I've been bullish on Lupin. I've been bullish on Divi's Laboratories and Loris as well. The CDMO space looks good in the long term, and that's what I'll be looking at. And also with respect to hospitals, the healthcare sector, that is something I'm looking at in the long term.
Well, thank you, Thomas. Thank you for joining us and giving us your perspectives on the stocks that were discussed. Moving on, a host of other companies that remain in focus on the back of earnings. Let's get in Puneet to understand which are those companies that remain in focus.
Well, thank you for that. A lot of result reactions today. So let me start with IndusInd Bank. That's the first counter. Results are largely in line with estimates. Streets also rewarding the turnaround that's happening in this particular counter. NI is up almost 43% for the company at 4,300 odd crores, as well as the operating profit up at 2,200 odd crores as well. They've also reduced their provisions down 1,484 crores versus 2,400 crores for this particular company, and net profit is at 533 crores in this particular quarter versus a loss that they reported in the same time last year as well. In terms of NIMs, slightly improved to 3.39%, and brokerages have also largely maintained a positive view. Actually, HSBC has actually hiked the target price to 1,100 rupees per share versus 880 earlier, mentioning that they are increasing the FY27 EPS by 20% and a subsequent 20% increase to the FY28 EPS as well, while Morgan Stanley continues to maintain an equal weight with the target price of 730 and mentioning that the gradual improvement in profitability will be something that they'll watch. M&M Financial, another financial counter that's done well in terms of quarterly results. Total income is up 13%. Net profit has doubled to 938 crores. And they've also, increased the company's overall borrowing limit to 1.75 lakh crore at this point of time. Kotak has upgraded the stock to a buy versus a reduce earlier, and a target price is now 350 for this particular counter according to Kotak. They mentioned that they are better placed for a challenging year ahead and look out for the profitability metrics as well. Finally, Hindustan Zinc, another one. We've seen the variation in zinc prices, so 23% growth in revenue reported by the company. They've also reported a profit growth of 28%, and HSBC has actually hiked the target price to 730 versus 720 earlier, mentioning that Q4 earnings was a big beat in terms of higher volume. So these three stocks on our radar today.
Puneet, while you're with us, Ultratech will be reporting its numbers, and a big cement company, first cement company on the bigger side that is coming out with Q4 numbers. What are we penciling in?
Well, it's going to be a quarter which is going to be volume-led growth essentially, and higher than the industry as well for Ultratech at this point of time. Their revenue is expected to rise by 12% to 25,900 odd crores, while EBITDA and profitability will increase by 14% each. Profit expected to be at 2,800 odd crores. Now, we're expecting industry volumes to be at almost 8% growth. Brokerage is penciling in, analysts expecting a 12% growth for Ultratech with volumes at 46 million tons. The other aspect is of realization. Realization is also expected to rise to 5,612 rupees per ton, with the blended EBITDA might decline to 2% because the other entities are currently at a lower EBITDA per ton. So that number is expected to be almost 1,100 rupees per ton as well. But expecting a good quarter, what I'll watch out for is how the prices of commodities as well as packaging and petcoke has moved in this particular quarter. So some commentary in what could be the key expectations in quarter one. And also in terms of prices, they have had a price hike in April. Is that sustainable? Those will be the two key aspects to watch.
Well, sticking with the nifty names, Shriram Finance. Now, this company came out with its numbers on Friday during market. When the numbers were out, the stock jumped up in trade. But post the conference call, there are some concerns that are coming in, and that could be one of the reasons why the stock is down around 4% in trade. Let's get in Shivam to understand what concerns have brokerages pointed out here and why the stock is down 4% in trade.
Well, yes, Shriram Finance has posted a strong quarter four numbers which were driven by the operating performance. Their profitability has also remained strong with stable margins and lower OPEX, and growth was also healthy, and growth acceleration remains a next key trigger that we should watch out for. And regarding the brokerage's stance, the Bank of America has maintained buy rating on the stock with a target price of 11,080 rupees. They have said that the earnings were beat on the back of lower operating expenses. The cost income ratio has also improved, but the gross stage 2 and gross stage 3 metrics remains a key monitorable that should be watched to look out for. And second is the Morgan Stanley, which have given an overweight rating with a target price of 1,250 rupees, and they have maintained by overweight rating with asset quality better judged over the rolling periods, and they see a structural improvements in the financials going forward. JP Morgan has also maintained an overweight rating with a target price of 1,180, and they have said that the core profitability of the company remains robust, and re-rating is depends on growth acceleration going forward.
Well, thank you, Shivam, for that. That's all we have. That's all the time we have on this show today on 12. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and today we have Puneet Javeri, who's standing at the NDTV Profit market pit with all the action in the markets today. Puneet, good afternoon. An interesting day of trade because you're seeing the pressure which has continued to build up right now from the day's highest levels. If you pull up Nifty 50 as well, you'll see the kind of gains that have been given up. But what are the key factors that you are watching out for right now? Because it is a volatile day of trade and Brent that has continued to remain elevated.
Well, most certainly, but we are keeping the Nifty at 24,000 and above level, so that's a key positive at this point of time. A lot of reactions on stock today led by earnings. So let's look at some of the key factors because we've of course seen a 160-point up move. We are down from the day's high today, crossed 24,100 at this point of time, but continuing to maintain that psychological mark of 24,000 at this point of time on the index. Now that is led by a broader market sectoral heat map that we're seeing largely being in green. Barring a couple of them, we're seeing most of the sectors continuing to trade in the green, and that is led by, of course, two key ones that we'll put focus on as well over the next half an hour. One is, of course, the Nifty Pharma, led by Sun Pharma and that big acquisition by the company. Healthcare also continues to do well at this point of time, the biggest gainers today as well. In terms of stock-specific action, we've seen Sun Pharma, of course, trading at its highest level over the last 5 years post this acquisition of almost $11.7 billion in terms of equity value of Organon, and hence you've seen that stock being in print trade. Cohance Life is the other one. Stocks at an upper circuit of 20% after they've approved the appointment of ex-Cipla head Umang Vora as the chairman and CEO. The stock was down 68% in the last 1 year, and possibly the first time when you're seeing such a big up move on this counter. The other key aspects to watch today have been the fact that IndusInd, M&F Finance, Hindustan Zinc are some of the key counters, as well as Tanla, buzzing on the back of earnings where you've seen a very strong momentum for this quarterly results as well. But that's largely what we're picking up in terms of the key stock-specific action. Back to you, Hiral.
Okay, interesting moves that we're going to see today. Thank you for that. Let's quickly look at the watch list. Sun Pharma, the acquisition of Organon, the streets have taken it really well. Cohance has appointed Umang Vora, as Puneet was mentioning as well. Blue Jet volumes are pretty strong. If the field where Cohance actually functions is going to see an uptick, probably you have a counter reaction coming in on a Blue Jet. Paytm, where RBI has cancelled the PPB, that's the Payments Bank license. And the way we were looking at it was that there's no negative impact. The streets are still seeing a sentimental move. M&M Financial, strong Q4 that has been reported. India Cement as well, a strong quarter, Strong moves on both these counters. MRPL is under pressure on the back of a downtick in terms of profitability, and Axis Bank also a weak set of numbers. RBL Bank reacting to numbers along with the Shriram Finance. Sham Metallics volumes in trade today, and you have a Reliance Industries which has missed street estimates. Tanla also the highest ever gross profit is what they've seen, and Tarol has seen an order win of 150 odd crores. Strong volumes building up on Adani ports in today's day, along with JSW Steel, where they've done a JV with Japan's JFE Steel Corp, and Coal India will be reporting numbers today. You have Varun Beverages also, which has reported numbers. So that's what we're watching out for in terms of our watch list. But let me head across to Puneet to take you through the rapid fire with Sachin Janardhan, of IDBI Capital Markets.
Well, thanks so much for that. So, Sachin, good afternoon and welcome to the show. Putting across the first stock, Blue Jet Healthcare. Now, I know it's locked in upper circuit, but what's a medium-term trajectory you're looking at the stock right now?
Currently, the stock actually is in a downtrend. Near-term resistance is around 449. But if in case it is closing above 450 levels, the prospect of the stock will be good. And above the targets we can see is about 464 and 510 levels on the upside. On the downside, if 400 levels is still sustained on a closing basis, the stock can rise on the upward trajectory. But however, we need to be cautious as the stock overall trend is down.
M&M Financial is the other one. On the back of very strong results here, they've raised their borrowing limit on the fundamental side. But Sachin, on this particular counter, how are the charts looking?
Overall, the trend is sideways to bullish only. If it is closing about today's high, which is 331, we can see the upside around 345 and 370. Overall, the support is around 290 levels. If that is protected on a closing basis, we can see the above levels.
The other one, Sachin, has been India Cements. Now, of course, Ultratech being the company that owns it, we are expecting results from Ultratech today, but very strong results. Is the charts and the momentum expected to continue for India Cements from here on as well?
Yes, the stock has actually broken out with very much high volumes, and overall, if we are getting similar close right now around 454, 455 levels as well, we can see 475 and 519 levels on the upside. Today, yesterday's low is important for the stock around 400 levels. If that is protected, we can see the upper levels. It has actually given a falling trend line breakout and a U-bottom breakout at the same time. So basically, the trend is strong for the stock.
Right. And anything on MRPL that you're picking up, Sachin?
Overall, MRPL is today it is down by 7%, but overall the trend for the stock is strong. Today it has broken its 100-day EMA, so the next support levels will be around 164 levels. Upside, what we are currently targeting is around 230 and 274 levels. Overall, a big cup and handle breakout has happened in the stock. And from last few days, it is consolidating above the 180 and 160 levels basically.
A quick view, Sachin, on what we've seen on Axis Bank as well. Of course, another quarterly reaction, but a very quick view on Axis.
So, if today it has taken support around 50-day EMA and around 38.2% Fibonacci retracement. So overall, right now, if it is closing like this, also on a negative note, it is making a candlestick hammer type of a candle pattern. So overall, the targets will be around 1300 and 1450 levels on the upside.
Got it. Well, thanks so much for that, Sachin. Back to you, Hiral.
Thank you so much for that. In fact, Sachin, let's also look at the stocks which are trending on Google currently. Last couple of trading sessions, it's always been power, and power, which makes it to Google trends list as well. Let's see what's there today. Sun Pharma, for obvious reasons. Paytm as well. But what's added to the list today is Infosys, DCM, Shriram and Adani Green. Anything that you like on the charts from the stocks which are trending, Sachin?
So Sun Pharma, it has actually given a good breakout levels today, and if it is maintaining these levels, and if we get a close above 1750 levels, then 1800 and 1900 levels on the upside we can see. Yesterday's low, if it is protected, basically that will be the stop loss 1600 levels, and we can see the above levels basically.
Sachin, for that. In fact, my colleague Varsha spoke to Dilip Sanghvi, chairman of Sun Pharma, on the strategic moat behind this deal. Let's listen in to a slice of that conversation.
You are acquiring an asset which has a high debt and has a slow growth. Why not invest in your own innovative portfolio versus buy this asset? I mean, what's that single biggest moat that you see in Organon due to which you have, you are planning to acquire this? Thank you.
No, I think that was the part of the presentation, is that while we will continue to invest in R&D, we will require infrastructure globally and relationships in all these geographies so that when we launch our product, we are able to get meaningful market share. Now, for Sun alone, on its own, would have taken a much longer time to reach where we can potentially reach post the Organon acquisition. This does not change our investment philosophy for investment in innovation. It also does not change our approach to finding a continuous way to grow the business. As Kirti says, it actually significantly enhances our ability to grow in our markets where we are already present and gives us opportunity in new markets like where we are currently not present. So like we are not present in most of the countries in South America, Korea, Taiwan, China. We get a direct presence. Middle East, even Turkey, many countries there we have no presence. So it gives us an ability to launch whichever product we develop in a much bigger geography. I think Kirti says that we've launched Illumia only in 35 markets. In many markets we don't have either a licensing deal or a direct launch. So we can leverage this to sell many of our innovative products also in those geographies.
Well, that was, of course, Dilip Sanghvi, the key man at Sun Pharma. A big acquisition announced, that we said, and the stock's reacting also in that way. But also the other pharma name that's in focus is Cohance Life. Now, they've appointed Umang Vohra as the company's CEO. It is an important announcement that the company has made, and you're seeing a stock reaction also up 20%. Now, Mr. Umang Vohra was at 10 years at Cipla between 2016 and 2026. And here the focus continues to be on the fact that over volumes, there will be a focus on value at this point of time. He's also someone who's scaling with discipline as one of the key approaches that we've seen at Cipla as well. And the other aspect that for Cohance specifically, there has been a lot of focus on volume manufacturing at this point of time, and that hasn't yielded well for the company over the last 3 to 4 quarters. So reversal of that will be something to watch for this particular counter. There were also aspect that it's a strategic repositioning that the company could go through, and the market is penciling in those gains early on as we speak at this point of time. So Cohance, definitely one of the key stocks in focus today. Of course, one of the key F&O names as well. So you have that upper circuit of 20% on this counter, but will be very interesting to track at this point of time as well. But Hero, what are some of the other aspects that you're looking at?
In fact, so Cohance and Sun Pharma, two stocks that we should be focusing on. We'll take a question quickly as well later on once we have a fundamental analyst joining in. But before that, Atul Auto, they have partnered with Exponent Energy to deploy 15,000 rapid charging electric three-wheelers. Now, to discuss in detail on this development, Jitendra Adhyay, President Finance, Atul Auto, joins in. The stock today is seeing some bit of profit booking. Mr. Adhyay, welcome to the show. Always a pleasure to speak to you. If you could help us understand in terms of the relevance and impact of this partnership on a company like yours.
Thank you so much for having me on this show, and it's always a pleasure to speak to you and the viewers of NDTV. And let us understand, Atul Auto has got that philosophy that we will be having, all solutions available with three wheels and with what we did with ICE. Now, obviously, it's going to be EV, wherein we already have a product with our own fixed battery. Then we got a swappable battery, and now with this rapid charging, this is definitely going to complete the entire product portfolio. And what we foresee is that we will be providing, all the solutions, whatever is available with three-wheelers in EV segment. So that's going to be the entire, mindset of the management and the organization.
So, Mr. Adhyay, then, you know what? Okay, so you're starting off with 15,000 vehicles. What would that mean in terms of revenue potential right now? What's the timeline? And two, how do you plan to extend this partnership going ahead?
See, initially, let us first have a launch, and obviously, this is for first 15,000 vehicle likely to be completed, though we are expecting it a bit early. But overall, it is going to be a 3 years MOU, but we expect that we will be able to do it very fast and well before the term expire. That is point one. Initially, this vehicle will be available in Bangalore and Delhi, and depending upon the success, we would be capturing few more centers or top 10 cities of India.
Mr. Adya, very good afternoon, sir. Thanks so much for joining in. It's Puneet this side. The other big update in the last month or so has been the Delhi EV policy. Now, there has been stringent measures that from 2027 only electric three-wheelers will be registered. It's something that you've spoken about to us in the past, but your focus has been on L5 vehicles versus L3. Does that change now? Are you looking to focus more on L3 because the adoption will be much quicker compared to L5? What is Atul Auto's strategy at this point of time?
Puneet bhai, very good afternoon. See, if we look at it, we have a product for both this category L3 as well as L5. L3 we are already present, and there is also a lot of other, development we did right from lead acid to now. This L3 category is available with lithium-ion battery as well. So obviously for Atul Auto, since we are pure three-wheeler player, it's not that key we are we are focusing on one single segment or one single category. It would be definitely, welcome thing for us to have better volume from all the categories. In ICE, as I told you, we have a complete product portfolio: diesel, petrol, CNG, LPG. Likewise, in electric, we got L3, L5. In L3, L5, we have both the applications available, that is cargo and passenger. Along with that, in L5, we got a various solutions, this fixed battery, swappable battery, and now this rapid charging. So it's not that we are focusing on any single segment, but each category makes a lot of value proposition for us.
Adya, one key aspect has been on market share. Now, and we've been, flashing those names on your screen right now that, someone like Bajaj, Piaggio, M&M have been able to, corner that market, at least in the electric three-wheeler space. Your share is roughly between 2 to 3%, similar to FY25 levels. Is there a target that you have for maybe in the next 12 to 18 months in the medium term? If you can give us some perspective of doubling this current market share that you hold?
Puneet bhai, it would be little early. Let us first seed the numbers correctly. We will be definitely going forward in couple of quarters. We would be definitely talking about the market share. As of now, the entire focus is to seed the product correctly.
Mr. Adya, Hiral here again. My question to you is, yes, market share does become important, but I know you answered Puneet's question on that front. Now, if you have to look at growth and market expansion from here on, I remember reading correctly, 50,000 units is what you were looking at in the next financial year. So which products, which regions will actually, drive this kind of growth to get to that 50,000 mark? And at levels of 50,000, what will that take your market share to?
I don't know who has given you 50,000, but yes, that would be definitely our, inspiration to get that number first. So I would not comment on the exact numbers, but see, if you look at my growth in export last year, we really did well, and we expected to do much better in this financial year. So if we just divide the entire volume, we expect that close to 15-20% revenue will come from export. That is point number one. Other thing from ICE and EV, yes, we are now started doing well in alternate fuel as well, apart from our better grip over diesel vehicle and in particular cargo. Coming to EV, yes, now with this complete product portfolio, we will be able to definitely get better revenue from EV segment as well. Broadly, if we categorize, the revenue from domestic market will be anywhere between 80-85%, from export 15-20%. In terms of fuel choice, we have diesel, petrol, CNG, LPG, and electric, which may vary in this financial year. We'll have a better clarity going.
Okay, so these are interesting numbers, but it'll be interesting to talk to you post earnings to understand how this quarter has been and what's the outlook looking like going ahead as well, because lots of transitions happening and this is becoming a very interesting space to watch out for. But thank you so much for joining in. It's always a pleasure to speak to you. So that's the management of Atul Auto talking to us about their new partnership that they've done. 15,000 vehicles is what they're talking about so far. But let's quickly look at Paytm as well on the screens and see what that counter is doing in trade, because we know that the RBI has cancelled Paytm Bank's license, and there were issues related to KYC, banking guidelines, PAN card as well. That's what the RBI has indicated. Now, the question from here on is, what is that actual impact in terms of where Paytm goes? Because in terms of financials, there is no direct impact that does come in, but it clears a lot of regulatory ground. In spite of that the stock is trading under pressure. Let's get in Akhil Somani, Director at Eureka Stock and Share Broking, to join us and tell us more on his views. Akhil, welcome to the show. How are you looking at a Paytm? Because it's a double-edged sword right now. One side you're talking about the negative where the payment bank license has been cancelled. There is no financial impact coming in. But in the other way, it does create, level out or, remove all the regulatory hurdles for other kinds of services as well. The stock is under pressure. What would you advise investors to do?
I think there's no revenue impact, and the exposure to the payments bank was already nil and fully written off. The core payments ecosystem remained unaffected. The payment bank operations were already inactive. All users and merchants had already been migrated. Wallet business may resume subject to fresh PPI license approval. So I think investors can look at buying and look at building the portfolios in the stock specifically.
Got that view, Akhil. But the other key aspect and one key counter that will be in focus today on the back of earnings will be Coal India reporting earnings today, and Parth is here with us to give us a perspective of what can we expect. Parth, what are some of the key expectations from the result?
So Coal India is expected to report a muted quarter, and that is going to be driven by the weak offtake that the company has seen during the previous quarter. But their profits are going to be slightly supported by the better margins that they got in their e-auction premium prices. But the FSA contracts, which are basically the long-term contracts in which the companies buy coal from Coal India, they have seen a decline. So that is going to affect the volumes even more than the company is going to gain from the e-auction premiums. So that is going to impact their profits. If we look at the expected numbers, and revenue is expected rise 1% to around 37,800 crores, while EBITDA is going to fall around 1% to 11,680 crores, with margins declining around 130 basis points. And because of the FSA contracts that we discussed, the net profit is also expected to fall around 12% to 8,470 crores. Now, the key thing to watch in this quarter will be the sustainability of those e-auction premiums that have actually sustained at a higher level, and also the management commentary on the impact of wage hikes on the company's profits and margins as well. Also, their commentary on the capex and dividend going forward will be something to monitor as well.
Well, thanks so much for that, Parth. But Akhil, very quickly on Coal India, a good dividend play, but is that something that you are looking at right now?
So I think the power and energy sector has been in focus for quite some time in the markets right now, and Coal India is one of the leading players in that segment. I think the full year production tells the actual story, where FY26 production came in lower at by 1.7%, and the company missed its targets. but which were already conservative. So on the earnings front, I think the year-on-year EBITDA might fall to around 10,250 odd crores. But the stock is trading still at 10% below the 52-week high, but it's still up 15% over the last 6 months. So I think the management guidance would be the key catalyst to watch for in this stock.
Guidance the key. Moving on, Reliance Industries earnings have actually largely missed estimates owing to weak oil and gas performance, and that was something which was anticipated. But if you see the stock now at the day's highest levels with gains of 1.5% coming in there, the OTC EBITDA has witnessed its biggest sequential drop in the last 7 quarters. And the retail EBITDA growth has been muted, largely in line with what the street was estimating. The PAT drop, that's the profitability drop, has been higher as compared to the EBITDA drop, owing to lower other income as well. It's interesting to see the way the stock has been moving right now, because that is what is coming in as a support as well at the day's high. So at lower levels, you've seen buying that is coming in on a Reliance Industries. What is your view, if I have to take this question with you in terms of, your view on Reliance Industries, Akhil?
So Reliance, I think, has delivered a classic 2-speed quarter. The annual picture is historic. The Q4 print is softer, but at a full year level, the FY26 revenue is at a record level of 11.76 odd crores. I think the consumer engines were strong. Jio revenue was up 11.2%. The forward triggers are significant. Mukesh Ambani confirmed the RIL is advancing steadily with the listing of Jio platforms. That IPO will be the key transformational value unlock event for this company.
That's Reliance Industries. But let's take a look at Shriram Finance. Let's pull up that counter on the screens and see what the stock is doing in trade, because it's interesting commentary that we're picking up from brokerages. The stock is nearly down 4% as we speak. My colleague Shivam joins in to tell us more in terms of what brokerages make out of the earnings and what the key takeaways are. Shivam, over to you.
Well, yes, Shriram Finance has reported a strong Q4 numbers which were driven by the operating performance. The profitability has also remained strong with stable margins and lower operating expenses. Asset quality of the company has largely remained stable, and funding cost and the capital raised from the MUFG Bank are being seen as the tailwinds of the company. However, the growth remains a key concern, and the growth acceleration is the next key trigger which will drive the stock. So, looking at the brokerage stances, so Bank of America has maintained a buy rating with a target price of 1180 rupees and has stated that the earnings were beat on the lower operational expense, and the cost to income ratio has also improved sharply. But gross stage 2 and gross stage 3 assets remains the key monitorable. Morgan Stanley has also maintained an overweight rating with a target price of 1250 rupees. The asset quality has been seen a structural improvement, and the funding cost on the margin side has been remain a positive point. UBS has also given a buy rating with an increased target price of 1220, which was earlier 1200, and has mentioned that the company has witnessed a strong commercial vehicles momentum portfolio, and also has seen a recovery in the gold portfolio. Next is the JP Morgan, which has maintained an overweight rating with a target price of 1180 rupees. Core profitability of the company has remained robust, and re-rating depends on the growth acceleration going forward.
Interesting news coming in there on Shriram Finance as we speak, but completely out of time. Thank you, Akhil, so much for joining in. Always a pleasure to speak to you as well. Thank you from Puneet, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Benchmarks trade in the green. Broad-based gains power Dalal Street, with pharma, IT and realty leading the pack and metals shining. Financial services and Nifty Bank remain on the back foot. Paytm, meanwhile, is under pressure after the RBI cancels the banking license of its associate entity Paytm Payments Bank. Paytm issued a clarification stating that the regulatory action would not disrupt its operations or business. Reliance reports below than estimates. Fourth quarter with pressure clearly visible on margins and profitability. Axis Bank delivers in-line numbers while RBL Bank sees a strong quarter. IDFC First as well sees improvement in asset quality. Sun Pharma has signed a definitive all-cash deal to acquire Organon at a 24% premium, with closure expected in early 2027. Company says its top priority post-deal will be a focused effort to reduce debt and strengthen balance sheet. Brutal heat wave across North India turns up the heat on air conditioner makers and power companies. Stocks edge higher as investors bet on stronger cooling demand and a spike in electricity consumption. Good afternoon. You're watching Lunchtime Trades with me, Shreyanti Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates, as well on the top bazaars
at this hour, all while you grab lunch. But while we do that, let's quickly take a look at the markets first things first, and it's looking like a decent day in trade, whether you talk about Nifty or Sensex. So you're looking at about a 180 odd point gain coming in for the Nifty. It's actually better in terms of the Sensex, but also the broader markets that are currently outperforming as well. So that's the kind of picture that you're seeing as far as the benchmarks are concerned. When you talk about the sectoral picture as well, that's also looking quite well and in favor of green as well. So when you talk about the top gainers within sectors, there's actually pharma that's holding up quite well. Leading gains with that 2.5% gain also coming in. Realty, IT, metal, auto, all of those sectors exactly in that order. Those are your top sectoral gainers. What's not doing so well right now is financial services, with that just a little bit of 0.1% downtick also coming in for the financial services sector. So that's a little bit on the back foot. But like I mentioned, it's actually broader markets that are outperforming just a tad bit when you compare it with the Nifty as well as Sensex. Let's also quickly talk about some of the gainers and losers as well from within the Nifty 50 pack. And from outside the Nifty 50 pack as well, something like an India Cement is standing out with that 10.9% gain, so Suven Pharma with that 20% uptick. But when you talk about just within the Nifty 50 pack as well, you do have something like a Sun Pharma that's standing out with that 7.1% gain as well. And you do have commentary from the management talking about how they're going to be focusing on sharpening the debt levels, which is quite the concern when it comes to the Organon deal. And Adani Ports, JSW Steel, Wipro, TCS, Tech Mahindra, M&M and SBI Life in great shape right now, up anywhere between 2 to almost 3% thereabout. When you talk about the list of top losers as well, something like a Shriram Finance is standing out with that 4% knock coming in on this particular counter. And the brokerage verdict largely is not quite positive when it comes to this particular counter. Axis Bank, BEL, Coal India, Tata Consumer as well as ICICI Bank also on the back foot. Just a tad bit, of course, nothing like that 4% knock coming in for Shriram Finance also, but that's largely the kind of picture that you're seeing for some of those stocks that are buzzing away and under pressure. But since we're talking about stocks that are buzzing away, let's also talk about something like a Sun Pharma that's in focus, like I mentioned. Now, they're in focus on the back of acquiring New York-listed women's healthcare company Organon in what is likely to be one of the biggest India outbound deals in years. The deal, in fact, gives Sun Pharma global reach in more than 150 countries, along with stronger cash flow. Now, talking about the con call highlights as well, let's put the focus on that as well. The company is largely saying that its deal marks a clear pivot to higher growth segments, with the management also really confident that the transaction is going to be accelerating long-term value creation. The company has also acknowledged that it's going to be taking on meaningful debt to close the deal, with leverage expected at about 2.3 times combined EBITDA, but stressed that a sharp focus on deleveraging at the earliest is something that they have in mind. The management is also expecting to rebuild value erosion linked to this particular deal, while also scaling its biosimilar portfolio further. And post the acquisition, you do have their innovative portfolio that is set to contribute roughly 27% of the revenues, strengthening its global growth profile. So that's largely the setup that you're looking at when it comes to the con call as well. But let's also quickly take a look at the highlights coming in from Dilip Shanghvi as well, and the word coming in from the management. In fact, Varsha spoke to the management, the chairman of the company, on the strategic moat behind the deal. Let's go across and listen in.
You are acquiring an asset which has a high debt and has a slow growth. Why not invest in your own innovative portfolio versus buy this asset? I mean, what's that single biggest moat that you see in Organon due to which you have, you are planning to acquire this? Thank you.
No, I think that was the part of the presentation, is that while we will continue to invest in R&D, we will require infrastructure globally and relationships in all these geographies, so that when we launch our product, we are able to get meaningful market share. Now, for Sun alone, on its own, would have taken a much longer time to reach where we can potentially reach post the Organon acquisition. This does not change our investment philosophy for investment in innovation. It also does not change our approach to finding a continuous way to grow the business. As Kirti says, it actually significantly enhances our ability to grow in our markets where we are already present and gives us opportunity in new markets like where we are currently not present. So like we are not present in most of the countries in South America, Korea, Taiwan, China. We get a direct presence. Middle East, even Turkey, many countries there we have no presence. So it gives us an ability to launch whichever product we develop in a much bigger geography. I think Kirti says that we've launched Illumia only in 35 markets. In many markets we don't have either a licensing deal or a direct launch. So we can leverage this to sell many of our innovative products also in those geographies.
Alright, then there you go. So that's the word coming in from the management of Sun Pharma. They're going to be sharpening their focus when it comes to deleveraging, and that's something that makes it to the top of their priority list. But let's also talk about one priority for us on the show here. Let's also talk about commodities right now, because oil prices are soaring, and you do have the Hormuz blockade that is keeping supply risks elevated at this point in time. So Brent actually near $108 a barrel thereabout. As you can see, that 2.5% uptick really coming in for Brent. WTI also holding up with that 2% uptick, also close to those $96 a barrel levels. Now, in terms of what is happening here, you do have peace hopes that are fading, so the volatility here is really rising, and you do have energy markets that have been roiled by this particular conflict, the supply shock that is fueling inflation concerns. But aside from that, Strait of Hormuz is remaining a key risk at this point in time. Now, Middle East tensions, of course, keeping markets uneasy, and we'll get you an outlook in terms of what you should be expecting when it comes to oil prices in just a bit. But quickly, let's also take a look at gold prices as well that are declining, and you do have the Hormuz choke that is keeping safe haven demand a little bit mixed at this point in time. So bullion is stuck between geopolitics and rates, and you do have on one side Trump cancelling envoy visit to Pakistan. On the other side, you have that entire picture when it comes to higher interest rates as well, and that's something that we'll be talking about in terms of how to balance. But gold, just as a little bit of a headline, is down about 11% since the war. Let's also try and map that particular trajectory when it comes to bullion. In fact, Anuj Gupta, commodity expert, is joining us on the show. Mr. Gupta, good afternoon, and thank you so much for taking time out and joining us this afternoon. First things first, I wanted to get a check going for oil as well, because it's very close to just a stone's throw away really from $108 a barrel. And you've seen that strength really sustain given all of the volatility. Do you think that supply concerns are the number one thing moving oil prices right now? Or is there anything else that is making it to your list?
See, there is the only concern, the Strait of Hormuz, which is not is still resolved. And after that, we have seen crude prices jump in as compared to the last week. If this Strait of Hormuz not resolved, we are expecting that crude price may still on a bullish momentum, and we are expecting it may test $110 to $115 per barrel. If the talk between US and Iran will resolve and the Strait of Hormuz will open, then the price will fall only.
Absolutely, and that makes a lot of sense in terms of the way that we've been seeing the trajectory also really evolve when it comes to oil. But I also wanted to get a check going for oil prices in terms of how your assumption seems to have changed when it comes to oil prices, right? Because given that we've entered the 9th week for this particular conflict, you've seen that the lower limit for oil prices has actually been revised upwards. Is that something that you're looking at? Are you also penciling in higher for longer oil prices?
See, in last 2 weeks, when Trump announced the ceasefire, but Iran is not, able to accept this ceasefire because they are, still on their, the conditions, which is not, considered by the US. So that will, creating some disruption regarding the Strait of Hormuz. And still, as it will, not considered by the US and other nation, so that will again providing support to the crude prices. We are expecting for a very short term, crude may be higher and it may test $115 per barrel.
Absolutely, and if there's a de-escalation, quickly before we move on to gold as well, if there's a de-escalation, what are the price levels that you then have in mind? Where is the bottom for oil prices?
See, I think $90 is a bottom price for the crude because already we have seen crude price increase very, drastically in last few months. And also there is a lots of, refineries which has been stopped due to this war escalation. Probably if all the things, will be easy, then it will take time to restart the refineries. So that will also incur the costs. So we are not expecting that price may fall below $90 per barrel, because there's a lots of concern between demand and supply. So I think between 90 to $110, this is a very short term range for the crude prices. But if the Strait of Hormuz concern remain, price will increase up to $115.
No, absolutely, and that is a very interesting set of events that we could be seeing unfold on both sides, because you do have 107, they're about $108 a barrel that is currently being maintained for much of the day when you talk about oil as well. But quickly also wanted to get a word for gold prices. You're seeing a little bit of decline. There's a mixed safe haven demand. There's a couple of different triggers. So on one side, you do have the rate cut story. Other than that, you do have that mixed safe haven demand picture. How are you looking at everything that is currently in place for gold and balancing it really?
See, if you check gold prices as compare from the last month, prices are trading in a tight range in an international market. It has a strong support at $4,600 per ounce, and on higher side $4,800. And we have seen that gold prices trading between this range. We are not expecting so much rally or so much correction in the gold prices, because geopolitical concern is there, and definitely it will provide support to the gold prices. And on another side, the monetary tightening may be there, that will curb the gold prices. So we are expecting that gold price may be trade between support and resistance level, and it will may trade between a range in international terms also. So we are expecting a range bound momentum in the gold prices.
No, absolutely, and that makes sense in terms of the way that we've been seeing this entire story as well unfold. I just, before we move on, wanted to get a quick check for the safe haven demand picture. Now, you've touched upon it briefly, but we've seen gold that is currently down about 11% thereabouts since the war really began, about 9 weeks or so. And you've seen that safe haven demand picture really being unfolded in a very different manner than we've seen in the past, perhaps. How are you looking at that entire trigger for gold prices?
So definitely the physical demand is missing out, because in last Akshay Tritiya we saw not so much buying in physical market. But yes, definitely we have seen lots of buying by the central banks, particular from the China, and also we have seen lots of inflow in the gold ETF as per the mutual fund the data. So people are buying gold in terms of ETF. It has been increased the phenomenal, but not expecting so much demand in the physical side, because people are not like to buy aggressively the physical gold and silver for an investment side.
Absolutely. And in terms of silver as well, Mr. Gupta, I wanted to very quickly, just a few words, just wanted to get a check for silver. Do you think that it's going to be moving in tandem with gold prices as well?
Yes, as it's a part of precious metal, so we are expecting that silver may be rise from here, and it is taking support. And on the other side, if you check, the industrial metals are going up, particular copper, aluminum, and zinc, as silver is the part of industrial metal. So we are expecting a positive trend may be seen in the silver pricing, and we are expecting silver may test $78 per ounce to $80 per ounce in a short term.
All right, then. So there you go. That's the check going in terms of the outlook for gold as well as silver. Thank you so much, Mr. Gupta, for taking time out and joining us this afternoon. Let's also talk about one other counter that's in the spotlight as well. Varun Beverages is in focus after the company announced its earnings. In fact, Mahima is joining in with the fine print when it comes to this one.
You rightly mentioned, it's most certainly a beat versus what the analysts were expecting. In terms of the top line, the beat, excluding the excise number, is around 500 odd crores, and including the excise is around 300 odd crores when it comes to the top line. In terms of the net profit number, also the expectations were that the net profit number will be flat at that 720 odd crores, but it's come in with a growth of 20 odd % with the number of 872 odd crores. Margins have also come in at 23.3% versus that of 22.7%, much better than what the street was expecting. And EBITDA has seen a growth of 21%, slightly higher than how the revenue has grown. In terms of the sales volume number, consolidated sales volume number has gone up by 16.3%. Overall volume was driven by 14% volume growth in India, and international business saw volume growth of 21.4%. I think the key developments in this quarter also include the 100% acquisition stake that they've completed in Twiza, which is a very important international acquisition for them. Even a 100% acquisition in Crickley dairy properties in South Africa was also one of the important developments that happened in mid-March, around 17th of March. And overall, company has also declared a dividend of around 0.5 per equity share. So this is the overall development coming in. Even in terms of the management commentary coming in, the management has said that overall in India, demand remained encouraging during the quarter, supported by wide distribution reach and strengthened execution and continued investment in terms of manufacturing capacity and chilling infrastructure. They said that they've undertaken targeted initiative to drive volume growth, to strengthen the domestic portfolio, including pack pricing. Selective price point launches have been identified in these markets to onboard new customers. On international front also, they're saying that they've made steady progress during the quarter, and of course they talked about the two acquisitions, that is Twiza and the other one. Overall, in terms of looking ahead, they said that they remain confident in the long-term opportunity across the markets, supported by favorable demographics, rising income, as well as growing urban consumption. So this is the overall view as to how Q1 is fared for Varun Beverages. However, the stock probably is now taking a knock and seeing some profit booking coming in.
No, absolutely, and it seems to have reversed the course since then. Mahima, after the first cut, about 2.6% uptick thereabout is something that we're seeing coming as far as Varun Beverages is concerned. But let's also talk to you about the sectoral picture, because it's actually financial services that is back in the green right now at this point in time. And when we started the show, it was actually in the red, the only sector, the lone loser within the sectors as well. And pharma, in fact, is leading gains, as you can see. So let's talk about some of the counters from within this pack. Cohance Life Sciences is in focus on the back of announcing appointment of Umang Vohra as chairman and as group CEO. Now, Vohra, the former CEO of Cipla, joins the organization to spearhead its next phase of transformation and growth. Varsha is standing by with more details. Varsha, it's coming in as a little bit of a surprise here.
Very positive and big news for Cohance Life Sciences, and this is a shocking news. I mean, Umang Vohra joining Cohance Life Sciences. Well, why this is an important one and why you're seeing such a huge surge in stock prices. One is why Umang Vohra is a strategic fit for Cohance. One is he has a proven ability, to grow globally while protecting margins, what he has done with Cipla. And also talking about the customer-centric CDMO segment, we've seen a clear shift from volume manufacturing to value partnerships in Cipla. And also this appointment supports Cohance's transition to professional governance-led growth, which Cohance has been doing. And also the track record enhances investors' confidence and strategic clarity. Now, why I'm saying this, what Umang Vohra has done with Cipla, how he has transformed Cipla from 2016 to 26 is one is he has transformed this company from volume to value growth, pivoted away from commodity generics to complex and specialty products, built scale and leadership in respiratory and chronic therapies, and focused on high barrier differentiated products. And the key outcome of all these initiatives taken by Umang in Cipla was Cipla became the world's largest inhaler seller by volume, ranked among the top players in US inhalation generics, and established global leadership in respiratory care at industrial scale. So, a very big and positive news on Cohance Life Sciences, and I think this may be the start of the rally that we are seeing.
No, absolutely. It does look like the start of a rally for Cohance Life Sciences with that 20% upper circuit that it was locked in, and you've seen quite some gain coming in. For something like Cohance Life Sciences, let's also talk about something like the Shriram Finance on the flip side. About a 4% knock, one of the biggest losers from within the Nifty 50 right now. Let's also get you the brokerage verdict in terms of what you can be expecting for this particular counter. Shivam is joining in with that particular answer.
Well, yes, Shriram Finance reported a strong Q4 results, and that was driven by a operating performance. And the profitability of the company has also remained strong with stable margins and reduced operating expenses. The asset quality of the company has largely remained stable, and funding cost and the capital that was raised from the MUFG tie-up has been the tailwinds for the company. However, there remains a question on the growth, and going forward, the growth acceleration will be the key trigger. Now, with the brokerage stances, Bank of America has maintained a buy rating with a target price of 1180 rupees, and they have stated that the earnings was a beat as there was reduction in the operational expenditures, and the cost to income ratio for the company has sharply improved. Also, the gross stage 2 and gross stage 3 remains a key monitorable, as there has been an uptick in those factors. Second was the Morgan Stanley, where they have maintained an overweight rating with a target price of 1250 rupees, and they have said that on the funding cost front and capital infusion, those metrics have been positive for the company. UBS has given a buy rating, and they have increased the target price to 1220 versus 1200 earlier, and they have said that the company has witnessed a strong momentum in the commercial vehicles portfolio, and recoveries in the gold loan portfolio has also been witnessed. JP Morgan has also maintained an overweight rating and has given a target price of 1180 rupees. The core profitability of the company has remained robust, and growth delivery remains a key monitorable, and the re-rating of the stock that depends on the growth acceleration and execution.
And that makes sense in terms of the brokerage verdict as well. Let's also talk about one counter that's actually buzzing away in trade. Ultratech is also all set to report its numbers. Puneet is standing by in terms of what the street is penciling in here. And Puneet, telling by the way that the stock is reacting, it looks like it's going to be a positive set.
Well, most certainly, and it's going to be a very interesting quarter as well, because we've seen geopolitical landscape impact petcoke prices, which is a key raw material for all cement makers. So you could see an impact on margins there, but a lot of the other key aspects to watch will be the growth in revenue. 12% is what Street is estimating at 25,900 odd crores. EBITDA as well as the profitability is expected to rise by 14% each, with the margins looking at 20.4% versus 20% in the same time last year. Now, all of this will be led by a volume growth in this particular quarter. Industry has grown by almost 8% according to most brokerage estimates. For Ultratech, that volume growth is expected to be 12% at 46 million tons for this particular quarter. The also blended realization per ton is expected to rise to 5,612 crores, and the EBITDA per ton might see a decrease of 2%, similar to what we've seen in the last couple of quarters at 1,099 rupees per ton, given that Kesoram and other assets are at lower EBITDA realization at this point of time. What I'll of course watch out for will be how the petcoke prices have impacted the margins, if any, and the pass-through as well, because we've seen a price hike happen in April. If that is sustainable, will be the key aspect to watch for Ultratech this quarter.
Absolutely, and thank you so much, Puneet, for joining us with that entire update in terms of what is being penciled in for something like Ultratech as well. And you do have something like a Coal India that's in focus. It's a muted set of numbers that you're largely penciling in, but Parth is standing by with that update.
Right, so Coal India is expected to report a muted quarter due to weak volumes, but slightly supported by better realizations. The e-auction premium improvement will support the overall blending realizations for the company. However, the volume decline will remain a key drag for the company in this quarter. The margins are expected to improve sequentially due to those realizations that we just saw, but the operating leverage and demand trend remains mixed for the company because of the weak offtake that they saw in this quarter. If we have a look at the expected numbers in Q4, then the revenue is expected to rise around 1% to 37,800 crores, while the EBITDA is expected to fall 1% to 11,680 crores. The margins are also expected to decline 130 basis points to 29.8%, while net profit is expected to fall 12% to 8,470 crores. If we have a look at the factors which will be impacting earnings for the company, then the coal offtake has declined around 1 to 2% year on year, impacting the overall volumes for Coal India, and the production has also largely remained flat during the entire quarter. But e-auction premiums has improved, which will boost realizations, and the realizations are also expected to rise because of the improving product mix. So two things that are going well for the realizations in terms of realizations for the company. But FSA volumes, which are basically the longer term.
And it does look like, Parth, that the set of numbers that you're looking at seems to be a little bit of a muted quarter. And when you talk about the stock as well, you're seeing that muted reaction also come in. Thank you so much for joining us with that entire update. But tell you what, with that, we're completely out of time on this edition of Lunchtime Trades. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Good afternoon, you're watching Small Cap Bazaars on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So first, let's see what's on the show today. Firstly, we'll be speaking with management, which will be coming out with its IPO soon. We'll get to that on a later stage, but the stock that we'll be discussing firstly on the listed side is Analon Healthcare. Now, the stock is up nearly 33% in the month of April, and recently the company has announced multiple acquisitions. One of them is acquiring 64% stake in a company name called Remember India Health Links. Apart from that, we'll be discussing a couple of counters. Firstly, Venus Pipe. That stock has managed to gain 13 out of the last 15 trading sessions, and in the last 15 trading session, the stock is up nearly 46%. And lastly, we'll be also speaking about automotive stampings. Now, that counter had hit a 5-month intraday high on the back of strong volumes. The company reported its fourth quarter numbers, and if you look at the net profit, that is the highest that the company has reported in the last 3 years, and that is the major reason why the stock has been gaining in trade. Now, if you look at the markets, the Nifty has managed to go above the 24,100 level, but for the better part of the day, we were quite range bound. From 24,000 to 24,100 was the tight range where Nifty was hovering around. And if you look at the sectoral indices, the gains were largely led by pharma and metals and real estate. On the pharma side, it's Sun Pharma. On the metal names, it's Hindustan Zinc, which has been leading gains, and real estate index has also perked up in trade today. On the losing side, only banking names are there, and this is largely because of few names like Axis Bank, RBL Bank, AU Small Finance Bank, which have been trading lower. But it's a good day for the small cap names as well. And on the small cap side, if you look at on the gainer side, it's IRM Energy, which is up around 18%, followed by EPAC Durables, up around 17% in trade. One MobiKwik, Man Aluminium, Ratnavir Precision, up anywhere between 11 to 14% in trade. EPAC Prefab is also up 11%. Ram Ratna Wise is also up more than 10%. On the flip side, AB Cotspin India, that stock has hit a lower circuit of 20%. Analon Dollar Industries, Shukra Pharmaceuticals, Vashu Bhagnani, all these counters are down between 5 to 6%. Apart from that is RDB Infra, Reliance Infra and Axis Solution, which are also down 5% in trade today. Now let's go across to the company which will be raising funds from the market soon. Parth is coming in to give us some more details on EMI Technologies, which will be launching its IPO very soon.
That's right, Somit. So another big IPO is going to hit the primary markets pretty soon. OnEMI is basically a technology-enabled lender operating in India. They offer digital loans through their mobile apps for the consumption and business needs for peoples. They operate under two platforms. The first platform is Kisht, which is basically a digital lending platform, and the second platform is Ring, which is a payments app that is offered by the company. They have around 6.37 crore registered users as of 31st December 2025, and their assets under management stand at around 5,955 crore as of the same 31st December 2025. Quickly, if we have a look at the IPO data, then the IPO is opening on 30th of April and will be closing on 5th of May. The price band has been set between 162 to 171 rupees per share with a lot size of 87 shares. The total issue size stands at 926 crores, which includes a fresh issue of 850 crores and an offer for sale component of 76 crores. Out of the fresh issue, 637 crores will be used to meet the capital requirements for their subsidiary, while the rest of the money will be used for general corporate purposes. If we have a look at the financials, then we can see a few key highlights. Their assets have grown from 1,275 crores in 31st March 2023 to 3,500 crores, over 3,500 crores in the 9 months FY26. Their total income has also grown from 1,001 crore in FY23 to 1,500 crores in 9 months FY26. But there's one key thing that their total income declined from 1,700 crores in FY24 to 1,352 crores in FY25. Also, their borrowings have increased significantly from just 380 crores in FY23 to over 2,000 crores in the first 9 months of FY26. So these will be the key things to monitor the commentary of the management for this company going forward. Coming back to you.
We're also joined by Ranveer Singh, the Chairman CEO of OnEMI Technology Solution. So firstly, to start off with, AUM growth has been quite strong. What is the sustainable growth range that investors can expect from the company, say, over the next 2 to 3 years without compromising on credit quality?
Absolutely. So, first of all, the growth in the past is coming on the back of the strong AI and ML model that we have built. We have been using this over a period of last 8 years. We have seen COVID wave 1, wave 2, many other cycles as well. So the confidence and conviction to deliver growth comes from, having a risk predictability that comes while using this model. And that is the biggest contributor to the growth. And from a future standpoint, we continue to use the same model. We continue to harness, sharpen it as we go along.
In terms of borrowing diversification, where do we currently stand? And where do you see the borrowing cost trajectory going forward?
Absolutely. So, I don't know whether you noticed this or not. CRISIL has rated us A- around 1.5 months back. And as you know, once you move from BBB plus to A-, you tend to see a good drop in the borrowing cost. And from a borrowing diversification standpoint, we not only rely on term loans from the banks and other financial institutions. We also have off-book arrangement, which is kind of a quasi borrowing. We also have other structures like NCDs and other things. So it is quite a diversified mix of things. We also do PTC transaction. But in terms of the borrowing cost, given we have been just rated, the incremental borrowing cost will see the benefit of that. And the other thing we see is as you grow big in the system, we are hoping that it will be recognized by many other lenders, and it should have a positive impact on the borrowing cost also.
Okay. Mr. Singh, the mix of secured and unsecured is shifting. Secured lending share is growing versus unsecured lending. Is this shift strategic?
You are absolutely right. We are seeing a shift. It is very, very strategic in nature. The strategy behind this is not only to diversify our book, which is not only keep it unsecured, but add secured also in a decent quantum. But more importantly, it also is catering to our customers. So large part of the secured also comes, a decent part of the secured comes from catering to our existing customer. So it's basically a combination of we want to serve our customers in a far more wholesome manner, plus the strategy around further diversify as you become big and then go along with it.
Sir, if you look at your OPEX as a percentage of revenue, that is much higher compared to what peers are reporting. How are you strategizing to reduce your operational cost?
Absolutely. So you are right. The OPEX are higher right now, but OPEX is also a function of the scale that you have. It is also indicative that there is a significant operating leverage which is there in the company, which one can avail in future as one builds the business further. And as you scale up, there is a part of the OPEX which is the indirect cost that doesn't scale up in the same proportion. So for example, if our AUM has grown almost at a rate of 60-70% over last many years, the indirect cost or the fixed cost hasn't increased. So one will only see the benefit of fixed cost as a proportion of revenue coming down because that will increase at an inflationary rate. But of course, the direct cost will continue to go. So it's a function of scale what I'm talking about.
Mr. Singh, there's a declining trend in provisions coverage ratio. Does the company have enough provisions buffer for contingencies going forward?
Oh, absolutely. The decline that you are seeing, I mean, if I talk about the 9-month December data which we have put in RHP, it is still at a rate of 86%. And if you compare 86% with some of the other players in the market, you will realize that it is still one of the highest. So this is the provision coverage is basically driven by our assessment on what the risk is going to be and then providing it for that. I think we have taken a very, very conservative stand on provision coverage, so that continues to remain there. Despite the number that we have, we are one of the largest, we are one of the people with the very high PCR if you compare with the cohort group of competition that we have compared with.
And so with India's credit penetration still being low compared to what we see in other markets, what is the market share that you're targeting now?
So first of all, you are absolutely right. The numbers in India are still very modest from a credit penetration standpoint. There's a huge latitude for the growth here. In terms of the specific number on market share, it would be unfair for me to put some numbers because that's a function of how the market would be in future and what are other players in the market do. But your observation that it is a very big opportunity, and not only that, what you will also find is not only the credit penetration has a scope to increase, but a large portion of the credit is also moving towards digital. And once you move toward digital, it always benefits for people like us. With every passing day, not only urban but semi-urban, they are just becoming more digital savvy. Not only digital savvy, but people like us who do digital underwriting, they are able to collect enough and more information. They are able to assess the sustainability of income, which will pave the way for our future growth in a significant manner. But unfair for me to put any number on the market share as we go along.
All right, Mr. Singh, thank you so much for taking out the time and helping us answer all those questions. All the best for your IPO going forward. But viewers, time to slip into a very, very short break. We'll be right back on the other side discussing all the small cap buzzers. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. Now, the stock that we're going to put spotlight on is Analon Healthcare. Now, the company is on a spree of acquisitions, and to understand as to what these acquisitions are going to mean for the company and what synergies are they going to bring in, to discuss all of this, we're joined by Puneet Rasadia, who is the Managing Director of Analon Healthcare, joining us now. Puneet, thank you so much for taking on the time. Two recent acquisitions. The one is Bizotech Life Sciences, and the other one is Remember India. Both of these playing important part, I believe. Just want to understand as to how will you benefit from these acquisitions and what synergies will they bring to your table? Okay, I think there is some technical... hi Puneet, can you hear me? Okay, I think there is some technical glitch there. So that's, of course, with regards to Analon Healthcare. So recently, in April, the stock has seen a growth of around 33%, and there is corporate action triggers that has also, triggered this stock move coming in. There is 1:1 bonus issue that happened in April. There was a share split also that happened from 10 rupees to 2 rupees per share. Authorized capital also they increased from 55 crore to 110 crore. And this, probably indicates that they might go ahead and do fundraising. We'll have to wait and watch out for that, and we'll also ask the management.
The corporate actions, some profit booking coming in, because if you see in the month of April, the stock has run up massively. Good performance coming in, and some kind of profit booking after the corporate actions have actually taken place on record. Another acquisition that you were talking about, one of them is Remember India Health. Now they have acquired around 64% stake in this company for around 5.38 crore rupees, and this acquisition is expected to complete in the next 4 to 5 months. But let's get in Puneet Rasadia to give us more details on. Firstly, sir, the 64% acquisition, 64% stake acquisition that we were talking about, Remember India Health Link. How does this acquisition benefit the company, and what's the way forward for this?
Yeah. See, basically, before this acquisition, Analon had recently acquired 2 more entities for manufacturing intermediate and APIs, Epico Organics and Bizotech Life Science, just to secure our back-end supply chain for KSM and intermediates, which indirectly expands Analon's production capacity for API manufacturing. Regarding this proposed majority stake acquisition in Remember India Health Link, this transaction represents not only the acquisition but also strategic forward integration within the pharmaceutical value chain. Analon, as a company acquiring controlling stake in a finished dosage formulation entity, is effectively moving closer to the end market, delivering multiple strategic advantages. By entering in this sector, Analon stands capture additional value across the supply chain, extending from raw material through to finished product. This presence of an internal consumer for its API reduce dependency on third-party buyer, minimize volatility, and improves the capacity utilization. The combination of API expertise and formulation capabilities accelerate product development and facilitate faster commercialization of complex generic and specialty products. In nutshell, this initiative constitutes more than acquisition. It is a decisive value creation step and comprehensive upgrade of the business model. It transforms Analon from a back-end manufacturer into the front-end pharmaceutical player with enhanced pricing power, improved margins, and strong growth potential. I think this move provides significant valuation upside and offers a re-rating opportunity for the stakeholder. And I think this acquisition we can complete within next 3 to 4 weeks.
Puneet, just want to understand, considering this acquisition plus the earlier acquisition of Bizotech Life Science also, what is the overall top line contribution that you would be expecting in FY27 going forward from these acquisitions? And will you be putting any kind of money to grow this acquisition as well? How does that work out?
See, we are, I think, for this current FY27, the top line will be definitely almost 2 to 3 times and compared to what we have published this 3 quarters result. Regarding means that in terms of top line and other growth perspective, the capacity expansion, significant investment are being directed towards the both API and finished dosage facility. And this initiative aims to support growing demand, improve operating leverage, and position the company to seize large global opportunity, increase capacity utilization, and expect to enhance revenue visibility. So I think we are expanding our presence in regulatory market while scaling the operation in emerging market across Asia, Africa, and LATAM. This diversification mitigates concentration risk and allows the company to leverage multiple growth engines. I think overall FY27 is anticipated to be the pivotal not only for the top line growth but also for margin improvement, strengthening the business model and positioning company as a fully integrated, globally competitive pharmaceutical player.
So if you could also just give us some idea, is the company looking for further more acquisitions going forward? What are the key expansion plans here?
We are aggressively planning for organic expansion in our existing site, and maybe it will be 4 to 5 times capacity of our existing plant. And it is well timely moved, and global supply chains are shifting, and there is a strong opportunity for Indian manufacturer to capture additional market share. With this scale up, and Analon is positioning itself to meet both domestic demand and large export opportunities. And same time, the entry into biological APIs, especially peptide and some of the bioproduct, that will be the game changer for the company. And I think this is a high growth and high margin segment, and significant entry barriers in terms of technology and regulatory requirements. And moving into peptides and bioproduct takes the company beyond the traditional generic into more specialized and future-oriented space. Additionally, this finished dosage capability adds strong front-end presence. This means Analon is no longer just a supplier, but it becomes a market-facing player with better pricing power, strong customer relationship, and more stable revenues. So if you put all together, acquisition, aggressive capacity expansion, and entry into complex biological APIs, this is a multi-layered growth strategy. And over the next 2 to 3 years, Analon is likely to see not just strong revenues, but also meaningful margin expansion and potential valuation re-rating, and it transforms into the scale integrated and future-ready pharma platform.
Right. Sir, if you could also just take us through what are the key timelines here for further drug approvals, and what is the kind of growth that you're looking at when it comes to the nutraceutical industry and your company as such?
See, when we talk about the drug master file approval, timelines are typically depend on the complexity of the molecule and regulatory market. But broadly, you are looking at to 18 to 24 month cycle from filing to final acceptance in most of the regulatory market, like in China, Brazil, Europe, and Japan, everywhere. But depends on the molecule and its documentation part. So normally China will take 12 to 18 months, and they've recently tightened their review process and quality and data integrity critical. And Visa Brazil is relatively strengthened compared to other countries, and it takes at least 18 to 24 months. And Brazil is a high regulated market, and approvals often involves detailed inspection and documentation review, while in EDQM, the CEP route is most preferred when timelines are typically 12 to 18 months, depending on query cycle and dossier this completeness. So overall, regulatory approvals are time-bound, but high-value milestone once secured, and they open up large regulated market and creating long-term sustainable revenue streams.
Right.
Well, thank you. Nutraceutical, I think your question on nutraceutical industries, I think this nutraceutical industry is experiencing significant transformation marked by strategic shift towards preventive healthcare opposed to reactive treatment. And 3 primary factors are pipeline for the sector after post-pandemic COVID. Consumer priorities are increasingly centered on immunity, wellness, and prevention of chronic disease.
Right, sir. Well, thank you, sir. Thank you for joining us and giving us the way forward for the company. Well, that was the management. Now let's go across to our fundamental guest, Kush Gupta, Director, SKG Assets and Holding. Kush, you heard the management. Post these acquisitions, do you see more upside from the current levels on this counter?
So first of all, hi, thank you for having me over. It's a good day to be on the screen. It's easy, it's nice, everything is up. So specifically talking about Analon Healthcare, I feel yes, the management is making some moves in order to do inorganic growth and acquisitions. But I do feel the pharma sector, especially that are dependent on exports, do tend to have a concentration risk. Export tariffs in South American countries and even in US are creating a lot of problems. So apart from that, pharma we are bullish on, and we can see a little bit more upside as long as they can avoid concentration risk to specific countries.
Okay, all right. Okay, so that's the view coming in on Analon Health. But, as always, it's time to take a look at the F&O space and as to how the setup is looking like right now. We have Puneet joining by to give us cues as to how, things are shaping up in trade right now. Puneet, over to you.
Well, thank you for that. Well, definitely the Sensex shows you the heat map as well as we go forward and look at some of the key stocks. Sun Pharma continues to be the one with the maximum gain, so is Arani Post and M&M, while Axis Bank continues to bear the brunt today for the index and the market as well. But when you look at some of the key stocks, longs as well as shorts that we are covering both at this point in time, longs being built up definitely on Sun Pharma post their acquisition, streets taking it with both hands at this point of time. Oracle Financial also is one which is seeing a massive build-up of longs. Stocks up 4.7% as well. In terms of short covering, you're seeing Hindustan Zinc post-earnings, shorts being covered, so is for Torrent Pharma. But in terms of the other key aspects, which are longs being unwinded, you're seeing RBL Bank, where results largely in line with estimates, but not in terms of convincing at this point of time for the street enough. So you're seeing longs being unwinded, and so is Jubilant Foodworks. And finally, shorts being built up. Fresh ones are on Axis Bank as well as on Shriram Finance post earnings, as well as on commentary for growth for Shriram Finance that the street's not liking at this point of time.
Thank you, Puneet, for that F&O setup. Let's move across to Jasmeet to understand what's been buzzing when it comes to Venus Pipe. That stock has been on a tear, gaining nearly 13 out of the last 15 trading sessions.
Well, thank you for that. We look at the particular counter Venus Pipes. What the company does is company operates into the stainless steel pipe manufacturer and exporter, though they have a very limited export share, but still exports to US and Europe. Now, in terms of the pipes they manufacture, they are into welding pipes, seamless pipes, and also heat exchange pipes. If you look at the stock performance, the stock is up nearly 8% in the last 5 days, but over a year, that way the magic comes in. The stock is up nearly 19%, but over last 1 month has rallied nearly 53%. Now, what is leading to the overall rally and why the company is on a verge of getting more and more order is because firstly the overall order inflow of the management remains healthy, stands at 470 odd crores as of Q3. Further, the company also noticed that a lot of clients are moving from unorganized player to organized player, which is benefiting someone like Venus Pipes given they're into organized space. Well, thirdly, if you look at the overall order inflow from Europe, it has stayed steady, though the company sees softness in the US sector altogether. Further, the company also notes that the domestic player, the seamless pipe, is gaining attraction for the management. That's the reason why the stock is buzzing into it. That's why the company has a healthy order book as well.
Well, thank you, Jasmeet, for that. Kush, any view on Venus Pipes at the current valuations attractive? Would you recommend this stock to your clients?
So Venus Pipe has shown considerable growth lately, and they're quite diversified in terms of their sectoral exposure. They're in chemical, pharma, power, defense, and aerospace. So I would definitely think that there is still more upside in the stock. While it has gone over 50% in 1 month, one can be cautious. But from a 18 months to 24 months point of view, I would say Venus Pipe could make a good addition. Specifically because it's linked to the structural shift that we are seeing in the country. There is a lot of infrastructural growth, a lot of housing growth. So stainless steel and pipes and specialty metals, we're very bullish on.
Okay, all right. Kush, thank you so much for giving us that perspective on all the small cap buzzers that we discussed. But with that, viewers, completely out of time on this edition of Small Cap Buzzers. But if you've got stock-related queries, then do stay tuned because Ask Profit is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open.
Welcome back. You're watching NDTV Profit. My name is Puneet Zaveri, and Sun Pharma continues to be a key stock in focus today. Arguably one of the stocks of the day post a big acquisition that the company has done of Organon. Now we've seen the street react positively. There have been commentary, a lot of it made on by the management as well in terms of the debt increase. But let's listen in from the management itself on what they have to say on this acquisition.
All right, a large acquisition that has been announced by Sun Pharma. We have the management here with us to take us through some of the details which have not yet been addressed, hopefully. So, Kirti, Jayashree, so good to have you on NDTV Profit. My first question to you, Kirti, it is a difficult time. When the Ranbaxy turnaround happened, things were very different. The world was very different. Right now, we are more than 2 months into a war situation, which is having an impact across the world. Cash is king. At this particular time, buying out such a large company with a huge amount of debt, and the turnaround is what you're pitching for. How difficult, or the confidence that you bring, that what is going to be the rationale for the turnaround of Organon after the acquisition?
Sure. I think what I strongly believe, times are always challenging. There are sometimes good times, there are challenging times. But my philosophy is what we can do during the challenging time is equally important.
Yes.
So when we are looking at Organon as an acquisition, it's a large asset. It's the same size asset like Sun Pharma. And by acquiring these assets, if I am able to grow the business, I am able to generate the synergies, then it's a good acquisition in my opinion. And time, there will not be a perfect time. Like you said, Ranbaxy, when we acquired, the time was good. But now the time is challenging. And we don't know how much this time will last, being challenging. But during this period, if we are able to bring back growth in the business, then I think I will be very happy that we have done the right acquisition for Sun.
So what is the timeline that you have set internally for the turnaround from 1 or 2% growth of Organon to higher single digit? In how much time and visibility, if you can give at least by internal matrices?
Sure. So what we said, I think you have to look this business in two lenses. Is we will generate certain cost synergies.
Yes.
And this cost synergies, close to about $350 million, will get generated over a period of 2 to 4 years. And in my opinion, there are good or large number of sales synergies, which right now we are evaluating, and it will help business to grow further.
Yes.
And it will help to grow all three business segments.
Yes.
As in, like Organon has an innovative business, then they have biosimilar, and they also have established product business.
So in all three business areas, I am looking at how do we grow. I cannot give an exact time when we can bring this growth back to the track, but the effort is to do at the earliest possible date.
So like the cost synergies that have been mentioned, Jayashree, is $350 million in 2 to 4 years. There are revenue synergies that are estimated, and then the growth outlook, which you have not put a timeline on.
Right, yeah.
All right. So, Jayashree, when we talk about the cost synergies, you've given the timeline. You said the debt EBITDA levels, and that is 2.3x, which you are comfortable with. Dilip Sanghvi also stated that there is high debt and high risk, and I'm a risk taker. But I want to ask you one question. When it comes to corporate finance, debt equity is a very important factor in getting the required cash flows and generate the growth capital also by debt or equity. It is around 6 times back of the envelope calculation. How are you going to really, give a rationale to such a high level of debt of 6 times of your equity, and also deal with the finance charge at the moment with the huge amount of debt? Because even though EBITDA accretive, EPS accretive, you're saying, but from EBITDA to PAT, a lot will be eroded in terms of finance charges.
Okay, here's a good question. Let me answer it in 2 ways. One, both these companies, Sun and Organon, are cash generating entities. Together, at a pro forma level, they generate about $2.5 billion in terms of cash. And with the growth opportunities that we just spoke about and the cost synergies, the cash generation would only increase over a period in time. With all of this and a very disciplined approach, which Sun is used to, we believe it would be sufficient to look at debt repayment at a decent period in time. Sun has a strong balance sheet, and based on our discussions with the credit rating agencies, we would have a good credit rating. And
what is a decent timeline for debt reduction?
We are not coming up with a timeline at this point in time, but we think it would be lower than what currently Organon has been looking at in their financial projections.
All right, so $2.5 billion combined of free cash flow, but also growth capital is required. All of it cannot be going in for the debt, servicing as well, Jayashree. So looking at the cash component that you have ascertained to give $2.5 billion out of the total enterprise value that you have already stated. So in that, what is the last cash equivalent with the Sun Pharma? In that also, do you require mezzanine or a financing, so to say? How much cash do you have, and $2.5 billion of full cash do you have?
Yeah, currently we have about $3.1 billion of cash, and 2 to 2.5 would be used out of our current cash surplus for financing the transaction. The balance of about 9.25 to 9.75 is what we are looking at as an external borrowing. Here too, our idea is to see if we can swap the existing debt, discussing with the bondholders of Organon, and if that is possible, only the incremental would be a additional financing that we have to pick it up. And we do believe our credit rating would be better than that of Organon today, and therefore the cost of financing should also be in comparable terms. The reason why I'm saying comparable is some of the debt that has been contracted by Organon was way back when the spin-off had happened from Merck, and those days the interest rates were lower. So we should be able to get a good interest rate, in our opinion. And with the cash surpluses that we have currently and the generation that will come in, that would be good for us to look at the debt repayment. You had a question in terms of would you need capital for further acquisition of assets? Obviously, it would be required. But for growth, as Kirti mentioned, there are 2 areas that we look into. Growth by investing in marketing. Growth by leveraging the platforms of Sun and Organon. Growth by in-licensing. So each of these would require some amount of capital, and it has always been factored in both the companies' long-term plan. So I don't think that should be a constraint as we go forward.
All right. So that bond, do you have visibility on when the bond maturity could really come in after your acquisition is complete? The first ones, are they maturing a little, in the recent times?
No, we do have visibility in terms of the bond maturity, but I think it will be too premature for me to discuss about the...
Sure. So, Kirti, talking about what you have really gained over here, apart from the global diversification also, which is important right now, and two areas where you sell already existing products and you increase the platform and distribution network that you're selling in. And the second is the growth, also committing to the growth prospect of future, which is biosimilar. But biosimilar entry, while it is a very positive direction for Sun Pharma, but on the other hand, it's a very competitive space. Every pharma company is looking at it for a growth. With this, what will be your USP and moat in really being ahead of the competition with a leverage buyout?
No, I think what's important for you to understand is the biosimilar market dynamics. So today, Organon is the 7th largest player in biosimilars worldwide. And they have 6 to 7 products already on the market. So they have a commercial infrastructure, which is available through which we can sell the biosimilar products. Today, Sun do not have any biosimilar product except few products in India. And what is important for you to also understand is large number of biological products, they are going off patent. As an example, I can tell you is like product close to about $350 billion are going off patent by 2035. So that will also give us a lot of opportunities for you to develop new biosimilars and use this platform to launch them across the world.
Right, so that's 10 years away from now, Kirti. The initial stage of growth and deleveraging will have to be heavy lifted by the combination of the two companies in the existing portfolio that you have, right? So that will be the task ahead for you. But when we really look at, the in-licensing, out-licensing, the line extension you spoke about, biosimilar, and of course, women health, which is the primary thing. And with this acquisition, it puts you number 3 in the world. What are the growth opportunities over there? And out of the 3 segments of 51% with established brands and generics, as well as innovation, and third being the new products, biosimilars, in this, what will be the biggest growth driver in the foreseeable future?
Sure. No, I think you need to put this into 3 buckets. So one part is innovation. So innovation, our current portfolio is 20%, it is growing to 27%. So as I see, this is a part where we need to do in-licensing of the products in women's health area in terms of dermatology so that it can continue to grow.
Yes.
So that growth will be much higher. Today, all our innovative business is growing in double digit. Coming to established product business, which is close to 50-51%, is not growing. So there we have a lot of good ideas in terms of how do we extend the life of the current established brand and how do we launch new forms of those products, new formulations, new combinations, so that they also start growing. But they will not grow as fast as like an innovative product. And of course, the biosimilar is already growing, like it's growing by 13%. And what I talk is by 2035 is the product patent expiries. But there are good number of product patent which will keep expiring every year. So I see the growth opportunity in all 3 buckets. The numbers will differ, but they will keep growing.
In your view, which is going to be the highest growth driver?
Of course, in terms of revenues, the innovative business is always a higher growth driver.
All right. And Jayashree, when we really look at the overall numbers, and you said about the synergistic impact also of 2 to 4 years. In the first year, what part of that synergistic benefit can really be accounted for? Give us a little sense and the rationale behind it.
I think the synergies will start kicking in from year 2 to 4. It would be too ambitious to think that the synergies will come in year 1. In fact, year 1, we could see some amount of cost that could play in because of integration, because of transaction costs. But over a period in time, say about a couple of years, the margins would improve with the synergies kicking in and the growth opportunities also coming in our way.
So will it be also correct to say that for 2 years, there won't be synergistic benefits which will come in while the debt clock will already start? And yes, you are EPS accretive, but from EBITDA to profits, your financing cost will also weigh in.
Yes, the financing cost will weigh in all through the period until we repay the debt. Having said that, these synergies as they come in will help in improvement of the margins.
And sales synergies, will they start kicking in from the first year? Is that an estimate also?
At this point in time, we only have those ideas. We would be working over the next 6 to 9 months before the closing in terms of further solidifying these ideas in terms of actionables and also looking at the time frame and the values.
Sure. And Kirti, my final question, of course, global diversification is one master stroke with this acquisition. I must say that because our dependence on US has cost us a lot in terms of the tariff uncertainty, which we really looked at for a longest time. And of course, with the new tariff structure, which has been last announced by the US, in that, what is the impact on Sun Pharma at the moment, and how are you going to tackle it, and what is going to be the actual impact on the numbers?
So as I said, it's like tariff impact on Sun will not be very big. We are not quantified and told that the exact number. But we believe that we will be able to manage the business without having much impacts on our bottom line. Yeah.
So Illumia, that from your specialty product portfolio, from Korea, so that's going to really be attracting the tariff that has been newly announced by the US. And that is a fairly large, sizable business for you from one product. So therefore, I wanted to understand the impact.
No, this is a very complex subject, and we are also working on this to see that it doesn't get much impacted into the business. I won't be able to disclose all the details, but at a certain point of time, we'll also talk about tariffs and tariffs' impact on Sun's business.
Well, that was the management of Sun Pharma speaking to NDTV Profit on the acquisition. But let's go across, start taking your stock-related queries right here on Ask Profit. If you haven't already, do start sending them. Let me welcome in our guest, Vishnukant Upadhyay. He's the AVP Research at Master Capital Services, as well as Lancelot Dicuna, CIO Value X Wealth Connect as well. Gentlemen, both of you, thanks so much for joining in and patiently waiting by. The first question now coming in on NBCC. Mohit is holding shares at 26.6, so he's sitting on considerable gains. Vishnu, his question largely being, should he continue to hold this counter for the next few months, years, in fact, if the chart trajectory shows momentum? What's your view?
Hi, Puneet. Good afternoon. Yes, definitely. We have seen a very good, strong breakout in today's trading session, and I'm expecting prices to extend the gain towards 100, 102 sort of levels. So yes, he should continue with the position.
Okay, the next one is coming in on Patel Retail. Our viewer Ekambarai is holding 50 shares at the levels of 225. Wants to know if it's it's a good hold for the next 1.5 year, or should he book his losses? Lancelot, any view on this counter?
I think, if you look at the valuation, the stock is trading at an expensive multiple, considering that the margins are fairly low. So one should, probably look at booking loss and exiting from this at this point in time.
Lancelot, the next question coming in on Voltas, and our viewer has bought shares at 1431. This is Saurabh Goyal, and he's asking what he should do for the next 3 to 4 months. Vishnu, what's your view?
Well, so in short term, I'm expecting prices to, reach towards 1570, 1580. And if prices manage to, give a breakout above 1580, then definitely one should, he should further accumulate the position. But for that level, he should hold the position.
Now, in order to answer more queries, I think we've decided to start the rapid fire round and take as many questions as possible because we had a curtailed Ask Profit session. So, Lancelot as well as Vishnukant, you both know the drill. Try to keep your answers as short as possible. The first one is on CESC. After today's breakout, is it a good hold from here on? Is the question. Vishnukant, your view?
Yes, definitely. One can hold the position for the target of 195.
Our viewer Satyan has bought Schaeffler at 4,000 rupees per share. Lancelot, should he continue to hold that by the end of the year?
Yes, hold for the long term.
TVS Motors bought at the levels of 3705. From a short-term perspective, good hold, Vishnukant?
Yes, definitely.
Jaiswal Neko bought by Manthan from Ahmedabad. He's holding shares at almost 40 rupees per share. I know Vishnu, a very limited time frame, but any view on the stock now? Should he book his profits?
1 second.
Sorry, Vishnu, I didn't get the view.
In fact, the stock is trading. You talking about Jaswell Nepo
Yes,
Industries, right?
Yes.
Yeah, one can hold. The stock is on currently breakout, so one can hold the position.
Okay, HFCL is the other one. 5,000 shares bought at the levels of 70. Can I continue to hold or book profits on this one? Lancelot, any view?
But I think you should book profits.
CG Power, Lancelot, our viewer wants to buy it for the next 2 years. Is this a good entry point?
If your time horizon is a little longer, then yes, it is a good entry.
Okay, PFC bought at the levels of 415. Soumya from Bangalore is holding 60 shares. Wants to know if she can book profits right now or continue to hold from a short-term perspective. Vishnukant, your view?
Prices are likely to extend the gain towards 490. So for that level, one can hold the position.
Force Motors bought at 21,902, Vishnu. Our viewer V Murli is holding 20 shares at that price. Should he continue to hold for an 8 to 15% move?
See, prices has given a breakdown from the rising trend line support, so he should maintain his stop loss below 19,200.
BEL, can I enter from a current levels perspective from a long-term view? Lancelot, your view?
Yes, if your horizon is long, you can enter.
Sai Kumar is holding on to Shriram Finance at 958. Now, Lancelot's reacting to probably some growth concerns in commentary while the result was still good. What's your view on the stock now?
I think it's better to look for stronger companies one can exit.
Okay, Kajaria Ceramics, 100 shares bought at the levels of 1198. Is it a good hold from a 3 to 6 months perspective, Vishnukant?
Yes, definitely. Hold the position.
Coforge bought at 1,493. 10 shares is what MM Kapoor holds. Vishnu, stocks are 4.5% today, but what's your view on the stock?
In fact, the prices are trading below the key moving averages, so I would, recommend to stay with the counter.
IEX, 272 shares bought at the levels of 165. What should be the next course of action, Lancelot?
I think one should exit.
Colgate Palmolive bought at 2180, Vishnu. Ramesh wants to know what he should do with this counter. Should he still wait for some more time?
Yes, definitely. One can wait because the stock is currently trading in the proximity of 200-day key exponential moving average.
Shakti Pump bought at the levels of 1,200 rupees. What should be the future outlook for this one, Lancelot?
Hold, or you can even buy it as well.
Sunny Sharma has bought into BEL at 197, so he was one of the early investors in this rally. Asking what he should do with his 800 shares, Lancelot.
He should continue to hold.
EID Parry, 50 shares bought at the levels of 850. Can I add more? Want to hold from a long-term perspective? Dilip is asking this question. Lancelot?
No, don't add more at this levels.
Narasimha Reddy is unfortunately holding Infosys, Coforge and Persistent all in losses right now. Lancelot, would you be selective or exit all three right now?
So I would be a little selective and hold Infosys and which is the other one you said?
Coforge and Persistent.
Hold Infosys and Persistent. Maybe look at exiting Coforge.
Okay, Clean Science from a long-term perspective. Is this a good entry point? A lot of brokerages have gone ahead and initiated coverage on this one. Lancelot, your view?
Yes, one can look to add.
Transformers and Rectifiers holding at 300 rupees per share by Sunita. Any view here, Lancelot? Should she continue to hold?
It's expensive, so book profits.
Okay, the next one is on Cantabil. 2,500 shares bought at levels of 254. Technical views on this one?
Which is stock? Cantabil.
Cantabil, yes.
Cantabil.
It's a small counter.
Yeah. So the stock is just drifting in a very thin horizontal band. So there is no clarity on the stock currently. So one can maintain the position with a stop loss below 237.
Okay, all right. So that's the technical view coming in on Cantabil Retail. But with that, Lancelot as well as Vishnukant, thank you so much for taking out the time and helping us answer all those queries that we were able to take. But viewers, completely out of time on this edition of Ask Profit. But do stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Very good afternoon. You're watching India Market Close, and it's turning out to be a good afternoon indeed on this marvelous Monday. 200 points up on the Nifty. Stayed steady through most of the day. This despite heavyweights not quite participating. So the breadth is good. Even the advanced decline is very, very robust and healthy for a time when Brent is at $107 a barrel.
You know, to add to this, what I would want to say is if you look at the contributors, you will see the kind of shift that's happened from a Reliance Industries, which has become the top contributor, Sun Pharma, and a HDFC. So you have the top three names which are giving you that run. However, it's the banks which are still, except a HDFC, if you have to look at Axis and ICICI, they are actually forfeiting the kind of gains that's coming in here. But clearly that run-up that has come in on a Reliance Industries, which is at the day's highest levels today. So there is buying that has come in at lower levels on a Reliance Industries, as Parag Bhai was mentioning. And a lot of stock-specific action in the broader markets is what you're seeing.
Absolutely. So on a day when banks are largely sitting it out, IT is largely sitting it out, you're still seeing strength. Look at the broader markets as well, and we'll pull up the intraday of the advanced decline too to give you a sense. The Nifty Mid-Cap 150 about 1.5% up, showing even more strength, about 2% up on the Nifty Small Cap 250. The advanced decline through the day, the line graph will show you how the strength is there with the buyers. The bulls are in charge and firmly in charge. The sectoral heat map very quickly will give you a picture of what's working in. It's pharma that has been dominating through the day. There you have 3% up on the Nifty Pharma and a full green screen.
And in spite of the negatives in terms of Bank Nifty as well, you're seeing there's nothing which is actually drooling under pressure. And this is coming in after 3 consecutive sessions of losses. So I think there is momentum. The question, Tamanna, from here on is going to be, it is a truncated week. For how many days do we see this, and what do volumes tell you? Because by the end of, say, Wednesday or Thursday, you will see volumes that might just come off.
Okay. All right. Even as we're speaking, Ultratech numbers are out, and we'll get you that first cut very quickly. There's a dividend of 240 rupees per share on Ultratech Cement. Better than estimates on the net profit figure, 2,983 versus an estimate of 2,818. Revenues have come in tad lower than estimates as well. So we'll just give you the intraday also, but there you have it, net profit at 2,983 versus estimates of 2,818. This is the other big one that the street was watching out for, isn't it?
Yeah, another big one. So I think the top line is still okay, because this will be basis what the pricing is. Because after the numbers is now when they've started taking price hikes as well that we've been talking about. So the commentary from here on for cement companies is going to be important. But categorically, when you're seeing the profit number, which is a tad above estimates, that is one of the positives that you should be watching out for. Apart from that, you're talking of a dividend of almost 240 rupees per share. Let's just look at what the EBITDA and the EBITDA margins are looking at, because a 20% growth in terms of profitability sets the stage as well with regards to how the sector as a whole has performed. If you pull up even a 1-month chart of Ultratech Cement, that will kind of tell you what's the story here. If you could just have an intraday 1-month chart, because a lot has been spoken about cement companies. There you go. Already an up move of 10 to 11% that has come in the last 1 month. So I think the kind of numbers that we were expecting is slightly priced in, and that's what is evident in terms of your today's chart as well, because you're not seeing a major spike that's coming in. There's no major move that's coming in because of that 10% run up. And I think commentary with regards to the first quarter of FY27 will be important now, because monsoon will be taken into consideration. Quantum of price hike and the absorption of price hike is the key.
Okay, so Ultratech Cement there. Let's just recap for you what's happening in markets if we can, and how they fared in trade today. And that's really where the story is, right? About 1% up on the Nifty 50, even as strength continues. Let me go across to Nagaraj Shetty first and get his technical view. He is joining us on the show this afternoon. Nagaraj, how are you looking at the Nifty?
Hi, good afternoon, Tamanna. Yes, Nifty has bounced back very well from the lower levels. That looks like the market remains strong. There was some jitteriness from the higher levels. There was some correction, and market seems to have formed a higher bottom somewhere around 23,800 levels. I think I'm expecting market is gaining strength, and more upside is likely from here onwards, and 24,600 what I'm looking for the Nifty in the next short term.
And what about picks this afternoon, Nagaraj?
Yeah, I have 2 picks from the mid-cap segment. First is one from a railways side. RVNL has been in a moving consolidation phase after a sharp up move. The overall chart pattern is looking bullish flat pattern and likely to break above the 310 levels in the very soon. The overall chart pattern is positive. One can look to buy at this point of time 308.18. Immediate target would be around 325. One can place a stop loss at 300. Second one is Unominda. The stock price has witnessed a gradual bounce back from the lower level after the downward correction moved up again, currently placed at the edge of moving above 200 EMA. On the weekly chart, upside breakout of the downsloping trend line is intact. With overall bullish chart pattern, I'm expecting this to move up. One can buy Unominda currently around 1132 levels. Immediate target would be around 1180. One can place a stop loss at 1105.
Okay. Very quickly, Nagaraj, how are you looking at Ultratech Cement? The numbers have just come in.
Yeah, looking very positive after a decline of last session, bounced back very well of post result. I think the cement sector is looking positive. I think this Ultratech Cement to move forwards from here onwards. 12,400 is going to be the next hurdle to be watched in the short term.
Nagaraj, stay with us. We have Puneet, who tracks the space closely, to give us the first cut. Puneet, in terms of the numbers, if you have to look at the top 4 numbers along with the EBITDA per ton, what does that actually tell you?
Well, thank you for that. It's definitely a number that's coming in line with estimate on most parameters. Revenue, EBITDA margins, as well as profit. All four numbers in line with estimates. We were working with a number of 25,800 crores in terms of revenue, bang in line with that number as well. The margins have actually done better in this quarter at 21.1 versus estimates of 20.4. It's a 70 basis point increase basically compared to the estimates as well, and almost 110 basis points on a YY basis. So despite what we've spoken about, petcoke pricing being high, packaging costs being high, the company has been able to manage at least all of those key factors in quarter four. Now, some commentary will be needed in quarter one as to what happens with those key aspects, but the profit number as well, bang in line with the estimates that we are working with. Even also in the operating profit per ton, essentially it's coming at 1,253 rupees per ton. That's 11% ahead of the same time last year number. And this also, in terms of first cut, it's a big number beat that they've done in this particular quarter as well. They've also announced a big dividend of 240 rupees per share for this year, for FY26 specifically. So that's another key aspect. Final thing, what will be something to watch out for has been the fact that on a consolidated profit basis, they've crossed 8,000 crores for the first time in FY26. So all those factors pointing to a strong results, but commentary will be crucial for the company at this point of time in terms of quarter one impact because of raw materials.
Okay, thank you for that, Puneet. So, in some senses, the fact that a good set of numbers was expected is making sure that the response is a little muted to Ultratech because it's in line, neither here nor there. Nagraj, I'm going to do a quick rapid fire with you because there's so many stocks that we need to cover this afternoon, right? It's been a newsy day. Let's start with Cohance Life Sciences, Paytm, Sun Pharma, RIL. And I will repeat it for you if you lose track of all four, but Cohance is the first one.
Cohance is moved up very well. Chart pattern is looking very positive. I think more upside is likely towards 475, 480, which is the next hurdle in the next 1 month.
And what about Sun Pharma?
In pharma space, Sun Pharma is looking very strong today. Bounced back very well from the lower levels. More upside is likely towards 1825, which is the next resistance at least in the next couple of weeks.
Are you liking RIL and Paytm?
Reliance is the one which is statically looking positive, bottomed out somewhere around 1260, 1270. Bounce back, overall chart pattern is looking positive. More upside is likely in the near term. 1400 is going to be the next hurdle to be watched at least in the next couple of weeks.
Okay, and Paytm was the fourth one, Nagraj.
Paytm is looking weak on the charts. I'm not expecting that to bounce back very well at this point of time.
Okay, all right, stay on with us. We're tracking all the news here this afternoon on NDTV Profit and India Market Close. Varun Beverages has a management call after their Q4 earnings. Let's listen in.
And other approvals. Across Africa, we continue to build scale in snacks and deepen our presence in high potential markets, in line with our strategy of broadening the portfolio and strengthening consumer relevance. In accordance with our dividend policy, the Board of Directors has approved an interim dividend of 25% of face value, rupees 0.50 per share, resulting in a total cash outflow of approximately 1,691 million. Looking ahead, we remain confident in the long-term opportunity across our markets, supported by favorable demographies, rising income, growing urbanization, and increasing beverage consumption. With adequate capacities, a diversified portfolio, and a strong distribution network, we are all well positioned to deliver sustained growth and create long-term value for all our stakeholders. I would like to invite Mr. Gandhi to share the key highlights of our operational and financial performances. Thank you very much.
Thank you, Mr. Chairman.
Good afternoon and a warm welcome to everyone joining us today. Let me provide an overview of the financial performance for the first quarter ended 31st March 2026. Revenue from operations net of excise and GST increased by 18.1% year-on-year to the level of 65,741 million in QY CY 2026. Consolidated sales volume grew by 16.3% year-on-year to the level of 363.4 million cases as compared to 312.4 million cases in Q1 CY 2025. This growth was supported by strong volume growth of 14.4% in India and 21.4% in international territory. At the consolidated level, net realization per case improved by 1.6% year-on-year, supported by improved realizations in international territories primarily due to favorable currency movement. In India, realization per case declined by marginal 1.5%, primarily due to volume growth initiatives such as upsizing of packs and selected price point launches in targeting markets to onboard new consumers. CSD constituted 73.6% of total volumes, while non-carbonated beverages and packaged drinking water contributed 7.5% and 18.9% respectively. In line with our focus on healthier offerings, the mix of low sugar and no sugar products increased to the level of 63% approximately of consolidated sales volume during the quarter. Gross margins improved by 62 basis points to 55.2%, supported by early stocking of key raw materials despite an inflationary input environment. EBITDA increased by 21% year-on-year to the level of 15,289.3 million, with EBITDA margins improving by 55 basis points to 23.3%. In India, EBITDA margins improved by 112 basis points, supported by operational efficiencies from strong volume growth and improved gross margins. PAT increased by 20.1% year-on-year to the level of 8,787 million, driven by strong volume growth across both India and international markets. Depreciation increased by 30.9% on account of commissioning of 4 new plants last year in Bazaar, Prayagraj, Damtal and Meghalaya. Finance cost increased by 18% primarily on account of the acquisition of Twiza in South Africa, while income on surplus cash in India has been accounted for under other income. During the quarter, we completed the acquisition of Twiza in South Africa, BevCo, at an enterprise value of ZAR 2,053 million. In addition, BevCo entered into a share purchase agreement for the acquisition of Crickley Dairy Proprietary Limited at an enterprise value of approximately ZAR 238 million, including net working capital subject to regulatory approvals. These transactions further strengthen our presence in the region and support our portfolio expansion in adjacent categories. Overall, we continue to maintain a strong financial position supported by disciplined capital allocation, efficient working capital management and a robust balance sheet. With the capacities commissioned over the past year, backward integration initiatives and a strengthened distribution infrastructure, we are well positioned to support growth and drive profitability through improved operating leverage across markets. Despite the inflationary environment arising from the prevailing geopolitical situation, we remain confident in our ability to mitigate near-term challenges through focused execution and supply.
Good set of numbers from Varun Beverages. That was the management speaking. We thought we'll get you a sneak peek of what they're saying. It's an analyst con call that's on right now, about 4% up on the stock. Anyway, with summer factors, you expect demand to go up as well. Nagraj Shetty of HDFC Securities with us, giving us his perspective on the charts. Are you liking Varun Beverages right now, Nagraj?
Yes, certainly looking good. What we have seen on the last 1 month is continuous moving up from 380 to almost 500 to 510 levels. The phenomenal move without showing any reasonable downward correction currently placed at the edge of moving above the previous swing highs, important hurdle somewhere around 510 to 515. Once it breaks above that level, and I'm expecting this to reach towards 560, 565, which is going to be the next set of hurdle in the near term.
Okay, so that's with regards to Varun Beverages, but let's shift focus to Cohance Life Science. That's the stock of the day as well, and I'm sure everyone knows for obvious reasons with the way the stock has been moving, locked in upper circuit. But let's quickly understand what has actually happened. The company has gone ahead and appointed Umang Vohra as the chairman and group CEO. Now, Vohra will actually take charge. There you go. That's Umang Vohra, who's been appointed as chairman and group CEO. He will actually go ahead and take charge from the 1st of May 2026 as executive chairman. That's the first one. And secondly, if you talk about he being the group CEO, that will be effective the 20th of May 2026. Now, the question is, why have the markets actually reacted positively to this? First up, Umang Vohra has been regarded as one of the most experienced leaders in Indian pharmaceutical industry. And if you talk about his experience, that spans over 3 decades in pharmaceutical as a sector. In addition to that, he served as the CEO and MD of Cipla and actually led Cipla's change over the past decade. That 10 years that he spent at Cipla, you know, he's actually made sure that the EBITDA has also doubled. So you know the kind of operational efficiency he got to the table. He's actually made Cipla a diversified global pharma enterprise, and this is from being a Indian-based company, and he strategically repositioned the company from a volume to a value-driven company in 10 years. So that's the transformation that he's brought to the table. Before that, in fact, he also worked with Dr. Reddy's for a span of nearly 14 years. So that's the experience that he gets to the table. Now, why is he a strategic fit for Cohance? First up, he will be able to scale with discipline because he has the proven ability to grow globally amid protecting the margins as well. And that's what we've seen what he's done with Cipla. Secondly, the CDMO mindset is very clear because this will be a shift from volume manufacturing to value partnerships from here on. So it is going to be a customer-centric approach that he could bring to the table. And there is institution building that he will bring, where he supports transition to professional governance-led growth for a Cohance Life Science as well. Very lastly, if you have to see in terms of other factors, the capital market credibility that he gets, because he has enhanced investor confidence and got strategic clarity, and we've seen the way the Cipla stock price has also moved in the past 10 years. Very lastly, if you see in terms of where capital market credibility goes, is the key focus area over here. Stock locked in upper circuit of 20%. So from here on, the impact it could have for the industry as a whole is also very interesting because, Tamanna, if you see a Blue Jet, which also operates in the same field as Cohance, is seeing some bit of a impact there because that stock is also seeing some smart moves.
Yeah, I mean, Blue Jet really, I don't know why Blue Jet is participating in this rally. Just maybe from the point of view that the whole space will get a lift going forward. But our focus on Dynamatic at this point, one of its subsidiaries, Dyna Systems, has signed an MOU with Aerodata AG. That's a German aviation player. We're speaking with Dynamatic Tech in just a minute. That stock is up 7% today. But I'm going across to Parth first to set up that conversation. Tell us about this deal, Parth.
Sure. So Dynaton Systems, which is a deep tech subsidiary of Dynamatic Technologies, they have signed an MOU with Aerodata AG, which is a German aviation player. Now, as per this MOU, both companies will collaborate to develop airborne surveillance systems for India. Aerodata already has a platform called Aeroforce X, which combines high payload capacity with the maximum endurance, that is up to 40 hours. So this Aeroforce X is actually the heart of this MOU which has been signed between the two companies. Now both the companies will collaborate to design and develop this Aeroforce X for specifically for the Indian market, and This will suit the long duration and the demanding ISR missions that happen in India over both land and sea. So it will be interesting to watch how this MOU pans out for Dynamatic Technologies going forward, how much revenues it brings to the table and how much it impacts their margins and profitability going forward. Back to you.
Okay. Udyant Malhotra, CEO and MD at Dynamatic Technologies, joining us on the show. Ms. Malhotra, thank you so much for your time to us. Tell us first about this collaboration, this MOU you have with aerospace. What does it add to you strategically?
Okay, so firstly, Dynamatic Technologies, as you are aware, has been a pioneer in India's aviation aerospace manufacturing. I'm actually sitting at our UK facility, which co-produces some of the products that we produce in Bangalore. Now, what we've done is in Bangalore, we have a deep tech startup called Dynaton. Over the last 36 months, we've developed not just UAVs, but all the technologies required in terms of the aircraft design, the composite manufacturing, the day cameras, the night cameras, the computer systems, the software. We have over 5 million lines of code. We have all the image processing, including a small supercomputer that sits on top of the cameras that are our design. The optronics is all internal. And then that adds up to a series of birds, of UAVs. At the center of it is the Cheel, which is a 100-kilogram class surveillance platform that flies for 8 hours. We have the Katils that are weaponized loitering munitions, jet-powered, which are controlled and with targeting data from the Cheel. And then we have smaller oversight drones like the Patang and Kawa. Now, with that very detailed end-to-end knowledge, including ground satellite data terminals, we looked at the larger configuration. Our design is parametric, so we can take the Cheel and develop a super Cheel, but that would give us an envelope of a 2-ton class bird, which would fly for about 24 hours at 30,000 feet. We've been talking to one of the world's best mission software companies, which is Aerodata. It's a spin-off from Braunschweig University 40 years ago, set up by 2 professors. And they've actually got something very interesting. They have a twin-engine aircraft which is designed for testing a new generation of aero engines for some of the very large aircraft engine manufacturers using hydrogen. So that's what we are now going to be. We are bringing that and our capability, their capabilities, and we are co-developing. So it's an R&D program which will rapidly have a 4.85-ton class bird.
Okay. Okay, so first of all, very interesting to hear the names of all of these products, Kawa, Cheel, all of these
registered trademarks.
Registered trademarks that you've given. Just want to understand a few details about the MOU. When is this turning into actual orders? What is the potential revenue opportunity? What is the financial conversation between the two sides when you're saying that they're providing R&D?
Right. So it's a collaborative effort. It's not like a typical, most organizations in India tend to bring in a product or products from the ground up. So if you look at this plant where I'm sitting in, it's a UK plant of Dynamatic rigging and stuff. So we have that footprint of ours. We also work with our global rigging and stuff. So we have that footprint of ours. We also work with our global. So we are a single source supplier to Airbus, Boeing, Bell Helicopter, Dassault. So what we are doing here is instead of being a tier 1, you've gone up to become a pro. So what we are doing here is instead of being a tier 1, you've gone up to become a platform manufacturer and OEM. As I mentioned, we've developed a whole system of autonomous systems for our global market with India as our home market. Now with this new arrangement, this new partnership with Aerodata. We're looking at a 5-ton bird that can fly at 30,000 feet. And at
You mentioned the 5-ton bird. I just want to understand, are you paying them? Are they paying you? What is the revenue potential of this?
We are both going to pool in our resources.
Okay.
Which is already, both of us have already invested in the core technologies that are required for this.
What is the size? What is the size of that investment? I'm sorry, we're speaking to a cohort right now, who are your investors, so they need the numbers, sir. As exciting as the idea is.
Our investors are fully aware of what we've invested because that investment is in our.
Your retail investors are watching us, sir, who are buying your stock. We're speaking for them. So if you can just give us an idea of the revenue opportunity you see.
Okay, let me give you a straight, simple. There's a global requirement for very large persistent drones. In India, we have a requirement for 87 male class birds. That 87 male class birds will have a buy value of about 25,000 crores. That's the Indian requirement. There are 2 or 3 players in the world that can offer that product. We will be the 3rd player. And ours will be a product where we own the source code, where we own all the data files. We have the design. We have absolute sovereignty over the knowledge. So this system can be weaponized in future with boundary conditions.
So in the next 3 years, what's the revenue that you're targeting out of this partnership, number 1? And number 2, if you're going to be the 3rd wheel, what's the market share that you will get?
There are 2-3 big players in the world. Some of them won't be, there's 2 players in the United States. There's 1 player in Israel. There's 1 player in China. So the Chinese player probably won't be available to India. If you look at General Atomics, they're already offering their aircraft in India. You have Herons from Israel, which are sub this class, already flying in India. And so there's a requirement for a large persistent bird. We will be offering, and that, as I said, the opportunity is a 25,000 crore business opportunity. But here there's a big difference. The source code, the knowledge, the data, and the design will be Indian owned. That's the big difference.
Fantastic. Just one more aspect. The products that you will develop with this technology partner in this MOU are focused for the Indian defense ecosystem, one assumes. Is there any visibility of demand for that product or for that set of products from the Indian defense ecosystem and from the Indian government?
So the RFI was already out. We're part of the limited RFI that's there. RFQ is expected very soon. It'll be for 87 such platforms, 87 birds, UAVs, and the value, these are very valuable, expensive aircraft. The government budget is 25,000 crores.
That's the potential that we see. Thank you. This is exciting. This is exciting, Dr. Malhotra. Thank you for taking.
This opens up a global market. Yeah.
Okay, a global market. One sec. But then, can you, if this is sensitive data that is available and technology that is available, can you actually service a global market with this?
All the products that I named earlier, the Cheel, the Katil, the Patang, and the Kawa, and this new bird, we have ownership of IP. Okay. So there is no limitation on markets so we can go beyond the Indian market.
Okay, that's exciting to know. Thank you so much, Mr.
Thank you very much
for speaking with us today. For more, Sumit, what's on your platter?
Be quiet.
Multiple stocks that dealers have highlighted. Firstly, it's Kotak. Multiple stocks that dealers have highlighted. Firstly, it's Kotak Mahindra Bank. Now, what dealers are indicating is that there are buy flows on the large HNI desk on this counter. Or for Kotak Mahindra Bank specifically. For NTPC and Walters, there are buy flows on institutional desk
both foreign and domestic institutions have been accumulating both these counters in trade, and delivery volumes are expected to be on the higher side. A small cash stock that dealers have highlighted in trade from long-term perspective, so keep an eye out for FX Industries. And lastly, when it comes to Laurus Labs and Britannia, there are sell flows on the PMS desk. Dealers expect Q4 numbers could be on the weaker side. Laurus is trading higher in trade, but there are sell flows that are coming in on the PMS desk at higher levels.
Segment you should not miss, but we're talking about India's peak power demand, which has surged to an all-time high of 256 gigawatts on Saturday as intense heat waves were felt across the northwest. 56 gigawatts on Saturday as intense heat waves were felt across the northwest. Is the power sector ready to meet the surging demand? Rupesh Sankhe, Senior Vice President Research at Elara Capital. Is the power sector ready to meet the surging demand? Rupesh Sankhe, Senior Vice President Research at Elara Capital, joins us now. Rupesh, very good afternoon to you. Where is the opportunity with the kind of heat waves we are seeing? Because this will likely continue. I don't think power demand is going to crash anytime soon. Can only stay steady here or maybe even go higher.
No, definitely, I think FY27 we are expecting strong power demand led by industrial, residential, agri demand will be significantly higher in this year. So definitely will hit all-time peak high for in FY27. In 24 May, we saw close to 250 gigawatt of peak demand, but in the last 2 years, we have seen close to 90 gigawatt of capacity addition has happened. So we have close to 20 gigawatt of incremental supply to cater this kind of a demand. So I guess is that my understanding is that 275, 280 gigawatt kind of a peak demand we can easily manage. We have surplus capacity available. Coal situation is better. So, but definitely the trend is very positive because in the last 2 years we have seen few companies which are 8 to 10% of their capacities are dependent on the merchant market. The regulated players got impacted because of ancillary incentive income was down. Then volumes was slightly lower on the exchange. So, and the coal also e-auction got impacted price. So definitely the key players like Adani Power, who has a 10% of their market in the short term, JSW Energy, NTPC, Tata Power, all stands to get benefit out of this. At the same time, we can see a better volumes for PTC India IX because a lot of exchange volume will be there. At the same time, Coal India might get benefit of a better e-auction realization. So definitely next 3-4 years, we can expect this kind of momentum to continue because of the demand drivers which are there in place. And most of these conventional players are adding capacities. Better capital allocation is there because they are generating strong operating cash flows. And in the last 2 years, we have seen their valuation have come down. But in the last 3-4 months, there is a 15-20% gain that we have seen. So, but valuations are reasonable, and we can expect a better re-rating and again some upside still there on the card.
So Rupesh, are you saying good afternoon, Hirale? Are you saying one, valuations are in the favor of investors? Two, in spite of the stocks that have run up in the past couple of trading sessions, there is still value that could emerge if they are buying at current levels. If yes, which would your top 3 picks be?
Yeah, definitely. Say, if you look at the NTPC valuation is now close to 2 times price to book value. But historically, in 2005, 2010, we have seen 3x kind of price to book value multiple. And the next 10-15 years is a strong high capex, multi-years capex story for power sector. And these companies are greater capital allocation is there toward the green transition phase on the energy, renewable energy side and nuclear side. So we will bet on NTPC in the large cap space. We are also positive on Tata Power because they have got very good presence in entire renewable energy value chain. And multiple is reasonable. They have a debt equity ratio of close to 1.1. So they have a scope to leverage their balance sheet for higher growth. And in the mid-cap space, we'll prefer NLC India and CAC. At the same time, we'll have some positive, marginally positive on the Coal India, as well as companies like NHPC and NHJVN is likely to better. At the same time, PFC REC will continue to get the funding opportunities which are there for next 10 to 15 years. And NPA issues are going down, Discom financials are improving, and those companies are trading at a very, very reasonable valuation.
Okay, thank you so much, Rupesh, for speaking with us, and definitely that's one space to watch. Siddharth Khemka joining us this afternoon. He's Head of Research Wealth Management at Motilal Oswal Financial Services. Siddharth, very good afternoon to you. And the summers are scorching. The markets are not quite scorching, but I would say definitely better than expected. And
Good afternoon, so Tamanna. I think yes, in this global turmoil, a lot of focus is there in the quarterly result season, and we have seen that numbers are driving stock-specific action. And more importantly, if you look at the commentaries, wherever there has been a positive or supportive commentary, stocks have seen kind of the follow-up buying that we are seeing in some of these stocks. So I think clearly, if you look at the market in the last couple of days, clearly the broader market is participating much sharply compared to the benchmark indices, and that is largely to do with what the broader market results are doing compared to the larger ones, which are more globally tuned and more sentiment driven, given the higher stakes of FIs, which have been on the negative side for last couple of months.
you know, I'm wondering how you're looking at the bounce that we've seen in IT, Siddharth. Is there any reason, apart from, I would say, sectoral allocation or the fact that it's been beaten down so much, for the Nifty IT to show a 2.5% uptick today?
I think, Tamanna, it's purely, I think, some sharp, well, we can say a bounce after the sharp fall we had seen last week, post the disappointment that came in from HCL Tech and Infosys. Tech Mahindra was largely in line, but that did not stop the IT companies falling sharply, and especially the IT index that had witnessed a significant sell-off. I think it's a marginal pause, but clearly the view, at least in the near term, that remains a bit negative, given that there is still a lot of macro-related headwinds for the entire sector. The AI-led disruption that is definitely impacting the sector, as well as the margins that are not witnessing any improvement. The only, I would say, the saving grace is your valuations have become comfortable, and B, the order book that is the order book pipeline as that is pretty strong. The only thing that now this order needs to convert into revenues, which I think is taking some time, especially in some of these sectors which are the US Europe focus. For example, telecom as a space is witnessing a significant drag, and that is impacting a lot of these companies. BFSI is also not recovering to the extent that would have helped the Indian IT services.
Okay, so that stay with us. We're taking a very short break, but we're adding to the conversation. Gurmeet Chadda of Complete Circle on the other side with us. So will we be speaking to Rudramurthy BV of Vachna Investment. So you're going to get a lot of views on the other side of the break in what is turning out to be quite an interesting closing session. Don't go away.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
All right, welcome back. It's a marvelous Monday, I would say, because look at the kind of boost that you're seeing in markets right now. The Nifty comfortably above the 24,000 mark, not yet staying at 24,100. But Rudramurthy BV joining us in this leg of the conversation. Siddharth Khemka with us, as is Gurmeet Chadda. Rudra, I'm going to get a quick technical view from you first on the Nifty and the Bank Nifty.
See, good afternoon, Tamanna. For me, market is trading in an inside day. If you see the range what we had on Friday for Nifty, today both the high and low are within the Friday's range. So for me, market is now consolidating between the 23,800 on the downside, and on the upside it is 24,200. So it's a 400 point kind of a range in Nifty, and markets are very, very stock specific and sector specific. So similarly, if you see Bank Nifty, yes, there is strong support at around 55,700 zone, and you have resistance at around 57,500. But if you see the broader market, if you see the mid and small cap participation, advanced decline ratio, they're all very, very positive. So for me, you have to be very sector specific and stock specific till Nifty breaks out of this range of 23,800 to 24,200. It is most likely to break on the upside. So if you want momentum, wait for close above 24,200 before going long on Nifty.
What are your picks this afternoon?
See, for me, there is a lot of strength when it comes to energy and power. I'm picking two stocks again from the same sector. For me, JSW Energy looks very, very strong. Stock is headed towards 600 zone. One can definitely go long having a stop loss of around 560. And another stock which is very strong from the same theme is Tata Power. So again, Tata Power holds a strong support at around zones of around 430. So I will be a buyer in Tata Power looking at target of 480, 500 and having a stop loss of 430. So a buy on JSW Energy and Tata Power.
So JSW Energy, Tata Power, two picks coming in from Rudramurthy as well. Gurmeet, let me come to you. Good afternoon, Hiral on the side. You know, we've been talking about themes which are actually emerging as buying opportunities. Their markets are up after 3 consecutive sessions of decline. A lot of participation coming in, and power as a sector has been seeing green shoots. How sustainable is that, number one? And two, do you see any picks at current valuations as well?
Thank you for having me. I think power equipment is one space we've been pretty focused on, and I've got a little lucky in this current upside. So we have CG Power in the portfolio, which is almost at for railways, and now obviously is finding applications in other segment. Also, they're getting into power for railways, and now obviously is finding applications in other segment. Also, they're getting into power electronics, robotics, data centers after the acquisition they did in France, Him Rectifier. Then we've also added in March, February lows, Vari Energy. I think so, very, very integrated play in renewable. But the focus continues to remain transmission and distribution, which is where even if you see the National Electricity Plan, envisages almost 9-10 lakh crores of capex. So whether those are transmission lines, HVDC, transformers, substations, conductors, I think there is value across the curve, but you have to be a little careful of the valuations. Most of the stocks like GE Vernova or Hitachi or Siemens, they are already at almost all-time high or trading at very high multiples. So maybe a buy on dip, but looks like a very structural opportunity. Also, the energy mix and the landscape is going to see a huge change. One area which we are also monitoring is if government really comes up with E85, which Mr. Gadkari has been talking about, and can give a bit of a fillip even to the the ethanol, the sugar and distillery space. So we're pretty overweight on energy. I think overall, I think we would be like 20% in the portfolio.
Okay, so that's with regards to power companies. But another stock which is actually powering in trade is a Sun Pharma. You know, the anticipation was whether this deal will be taken positively by investors or not. With the 10% correction that we've already seen in the last 1 month, and there you go, a 7% up move coming in on the back of the acquisition that they've made. And this is a New York listed women's healthcare company, Organon, and this is what is likely to be one of the biggest Indian outbound deals in years. Varsha is here to tell us what is actually cheering the street. Varsha, you've heard the conference call, you've heard what the management had to say and met the management at the press conference. What are your key takeaways when it comes to the debt level of the company, how comfortable they are with the kind of debt they will be raising and the outlook that they have?
This is the largest deal that the Sun Pharma is doing after Ranbaxy. But why Street is happier today? Because earlier, a few days back, Street actually investors punished Sun Pharma stock on the same deal. But today, they are rewarding the stock. Why? Because if you see, Sun Pharma is buying out a company which has a high debt and has a slow growth, and Sun Pharma itself will have to take significant debt to, for this deal. But management in the press conference clarified, or they gave comfort on the cash flow generation. Because if you see, combined entity generates $2 to $2.5 billion of free cash flow, giving confidence on fast deleveraging. They also said that they are expecting to, wipe out this debt over the next few years, though they have not given the timeline. Also, if you see, Street is valuing the jump to top 25 global pharma plus $12.4 billion of revenue scale. And this is a portfolio upgrade, not just an acquisition, according to the management. Entry into biosimilars plus leadership in women's health are seen as a structural growth driver. Even biosimilar, which currently Sun Pharma is not into, is expected at 6% post this deal. And the Organon, which is growing at a 1 or 2% in a year, is expected to grow into high single digit over the next few years. Also, management also talked about the synergy visibility, $350 million synergies plus cross-selling opportunities do provide earnings upgrade cushion and execution credibility premium. If you see, the Sun's track record plus Ranbaxy learning gives comfort when it comes to integration risk. And lastly, 100 plus assets pipeline in women's health is seen as a hidden long-term upside for this company. So overall, if you see, because of all these reasons, we are seeing the stock is up almost 7% and the street is rewarding Sun Pharma on this Organon deal.
So what is the timeline that you have set internally for the turnaround from 1 or 2% growth of Organon to higher single digit? In how much time and visibility, if you can give at least by internal matrices?
So what we said, I think you have to look this business in two lenses, is we will generate certain cost synergies.
Yes.
And this cost synergies close to about $350 million will get generated over a period of 2 to 4 years. And in my opinion, there are a large number of sales synergies, which right now we are evaluating, and it will help business to grow further.
What is the last cash equivalent with the Sun Pharma? In that also, do you require mezzanine or a financing, so to say? How much cash do you have, and $2.5 billion of full cash do you have?
Yeah, currently we have about $3.1 billion of cash, and 2 to 2.5 would be used out of our current cash surplus for financing the transaction. The balance of about 9.25 to 9.75 is what we are looking at as an external borrowing.
Right.
Here too, our idea is to see if we can swap the existing debt discussing with the bondholders of Organon, and if that is possible, only the incremental would be a additional financing that we have to pick it up.
Siddharth, what did you make of the Sun Pharma deal and the kind of response that we've seen today?
Yeah, Daman, I think the biggest challenge was that the street was fearing to fund this kind of large acquisition. The company could go in for a dilution, and that would have been a negative impact clearly with the dilution kicking in. But I think that has been clearly denied by the management in the con call, and that is what I think was one of the bigger positive triggers for the stock to move up today. In terms of deal contours that you already know, but what makes a strategic decision is that it doubles the revenue nearly for Sun Pharma. EBITDA scales up much largely, and there is a strong free cash flow. So from the day one, the acquisition is EPS accretive, and hence I think there is further potential of synergy because there is not much of overlap. So there is negligible overlap between Sun and Oregon business, and hence we believe that the overall strategy could deliver value over the next 2 to 3 years.
Gurmeet, just because there's been so much focus on Sun Pharma view as well as the pharma space right now.
So I think the concern with Sun Pharma has always been capital allocation post the various acquisitions done. And I think the clarification on how they want to reduce the debt, how they're going to finance this actually is given a bit of a breather. But we should say, I think this women healthcare portfolio has been in focus. If you see in domestic markets, Mankind Pharma acquired Bharat Serum and Vaccine for almost 14,000 crores, one of the largest domestic acquisition. And the synergy has taken a bit of a time, and the stock obviously went through time and price correction. This is one area where everybody seems to be focused on in terms of growth. Also, as my colleague said on the panel, that on biosimilars, it gives them a thorough play. They have been already focusing on specialty portfolio, over a period of time, and that has helped them. So we need to see how it goes because, synergies and a lot of things take time. We've seen that with domestic case of Mankind, but clearly a future good vertical. We continue to like the CDMO space. I think we are also hopeful somewhere down the line you will see the Biosecure Act coming in US, which puts restriction on Chinese companies, especially with respect to genome.
But Gurmeet, would you put in, would you see this as a good time to enter for the pharmaceutical space? Aren't all of these positives fundamentally priced in? Or are you seeing more opportunity and further upside there?
See, you got to be selective. So, for example, in hospitals, there could be a cap on pricing. There's already pressure on the government on private hospitals. The valuations are very expensive, whether it is Max or Apollo. Even Narayana ran up from the lows. So, Narayana may not get impacted from a price point of view. Generics, I'm not sure, because it's essentially is a low margin business. But branded generics like the homegrown players and CDMO names are very good. There's a lot of R&D happening. There's a lot of capacity building happening in crop science, in peptides, across. And there's been a lot of focus capex. Just see the capex Laurus Divis has done in last 3-4 years, probably will be equivalent to what they would have done in last 2 decades. So that's one space. And there is very good relationship with the innovator pharma company. And once you get into the supply chain, there's a very high entry barrier, especially in the late stage cycles. So we are more bullish. So we have Laurus, we have Divis, we have Newland in the portfolio. Branded, we have Mankind Pharma. But we are, as I said, we are avoiding the hospital space as well as only generic space in pharma.
Yeah, very good insight as well on the focus on women's health, and I would say about time that actually happens. Murthy, you want to quickly give us some BTST ideas? Just 10 minutes to go.
Yeah, so for me, market is definitely closing on the highs of the day. So it is a bullish setup for me. So I will be buying REC Limited, currently trading at 378, looking at targets of around 390, and one can have a stop loss of 375 for this.
Okay, REC is one that you should be watching out for. A couple of financial names which are in focus are Tamil Nadu Mercantile Bank. strong set of numbers that have been reported. If you see the stock as well, seeing some strong moves in today's session because your asset quality has improved, your operating profits are up on this one. And if you have to look at the NI, up almost 24%. Simultaneously, if you have to look at a M&M Financial as well, that stock has been surging in trade. A lot of brokerages which have been positive, stock up nearly 7 to 8%. You have IDFC First, which already reported numbers. IndusInd Bank was another one which was in focus as well, and a L&T Finance. If you have to look at this entire category, specifically banks and NBFCs, Siddharth, how are you looking at them? Anything that you like, which could still be good buys at levels that they are at today?
Definitely, Irel. I think the entire banking space looks interesting, banking and financials. So for this quarter, I think the financials are expected to report much stronger growth, followed by private banks. Public banks on a high base, I think the growth numbers are a little bit impacted, and also because of the impact on the treasury gains, mark-to-market losses that they would be booking because of the higher bond yields. But nonetheless, I think there is a fair interest that we see in some of the large private sector banks, the likes of ICICI Bank, which continues to deliver quarter after quarter. SBI is the other one where the quarterly results are much better, and we are expecting the strong performance to continue. I think these are the two preferred large banks that we like. Within the mid-sized banks, I think Federal Bank is something that is really interesting in terms of growth as well as valuation that they have delivered. And I think within NBFCs, that is the space that looks interesting now because a lot of changes are happening on the rural front with the monsoon expected to be a bit delayed and bit lower because of the El Nino impact. The second is because of the expected rise in the fuel cost impacting the vehicle financing companies. That is also impacting. So what we believe is that companies focused on the retail lending and consumer credit, that is something which is looking interesting in this environment.
So I actually want to follow up with you on Shriram Finance in a little bit of more detail, Siddharth, but let me just get in Shivam, my colleague, talking about M&M Financials. It's seen the single biggest gain in a day since November 3rd, 2022 after its results. What's worked for them? Shivam is here with more.
Well, yes, M&M Financial has been up over 9% in today's trade. So let's quickly take a look at the factors that have worked for this stock. So first one is the strong quarter for earnings, and the AUM momentum has also been building, and with the asset quality at a multi-year high. Profitability and margins have also witnessed an improvement in this quarter. The strong fee income has also been one another factor where it has been partly by the higher credit cost, and slippages have also reduced. Net interest margins is expected to peak up at 7.5% in quarter 4, and gross stage 3 assets have also seen a record low of around 3.4%. Now coming to the brokerage's view, Citi has maintained a buy rating and has cut the target price to 380 from 425, and has stated that the prolonged geopolitical tensions may weigh on the underlying vehicle sales. Mercury on M&M Finance has also maintained underperform rating with target price of 280 and has stated that the net interest margin growth is temporary, and the credit cost has been on the elevated side due to the overlay for FY27. Kotak Securities has also upgraded to buy from reduce and has hiked the target price to 350 from 340 rupees, and the brokerage says that the company is better placed for a challenging year ahead.
Thank you for that, Shivam. Gurmeet, the way Shriram Finance responded, and some brokerage notes out there also explaining what the concerns are, but how have you looked at the numbers? Because the numbers were frankly in line.
It ran up to the one, and just see the movement in Shriram post the deal. I think some of it is in the price. I think, but there's a lot of interest in housing finance. I've been personally speaking to a few unlisted players. Some of them happen to be our clients. There's a lot of interest in housing finance. And you will probably see more deals both in listed and unlisted space. There are a couple of tier 2 banks, including public and private, where there's a lot of FDI interest post these deals which have happened. So, and that's the reason. I mean, who would have thought you will have so small banks and NBFCs doing so better than the leading private sector banks? Just see the outperformance PSUs and some of the tier 2 banks have had. So somewhere I think the asset quality, once it stabilizes and if growth numbers are identical, and your operating metrics are identical, that's where the re-rating happens. So pretty constructive, more on housing finance now. And we are also adding some gold-based NBFCs. I think there are more legs to it. And this is one area where the credit cost and the SMA1,
Who are
SMA2.
top favorites in the gold-based NBFC space?
So we have Muthoot in the portfolio, and we are looking at some banks which are growing the gold loan portfolio, including Federal.
Siddharth, quick view on Axis. Was really punished today, and there was a massive miss of any kind in Axis. Can't even say that's the same story as Shriram Finance, where everything that we saw was in the price. Asset quality is improving. Why do you think Axis saw this kind of a reaction, and do you find it attractive at the current valuations?
Definitely, I think result-wise, more or less in line with expectation. I think the core performance that remains healthy, but there is definitely some slippages in terms of asset quality. That the asset quality improves by the tax reversals utilized. That is used to strengthen the provisioning. But I think overall, things are improving for Axis and looks interesting compared to some of the other peers which are still struggling. So I think more or less this is a reaction that the results are out. There's no much trigger and some profit booking taking place. But in terms of valuation, looks attractive compared to some of the peers, given that next year we are expecting earnings to grow at almost 28-30%, and the stock is trading at about 1.7 times price to book next year. So there is decent upside. I would say about 10-15% upside that would be there in Axis Bank from current levels.
Decent upside there. Coal India will be reporting numbers today. Parth is here to tell us what the street is expecting. Parth, over to you.
Thanks, Cyril. So Coal India is expected to report a muted quarter this time due to weaker volumes, but slightly supported by the better realizations. They have seen some premium improvement in their e-auction prices, which will support their overall blended realization. But the volume decline will remain a key drag for the revenues in this quarter. Margins are expected to improve sequentially on the basis of improvement in blended realizations, but the demand trends have remained weak for the quarter, and due to the weak offtake as well that has been seen in the couple of months. If we talk about the Q4 expected numbers, then revenue is expected to rise 1%, while the EBITDA also is expected to fall 1%. Margins may decline by around 130 basis points to 29.8%, while net profit is expected to fall around 12% to 8,470 crores. About the factors that will impact the earnings, we already discussed that the coal offtake has already declined 1 to 2% year on year, which will impact the overall volumes, and production has also remained largely flat during the quarter.
Right.
And,
all right. Parth, we'll have to close up the markets. Thank you so much for that. You have 1 minute, 40 seconds to go. Gurmeet, Siddharth, Rudramurthy, thank you so much for joining in today on the show as we wrap up what's happening with markets today. Close to the day's high, but off. Just about 24,100 there in the pocket. The Nifty heat map is what we should pull up very quickly. Axis was hurting. Sun Pharma is up and about 7% up on Sun Pharma. And we were having this conversation this morning, Hiral, that it's a big leap of faith that Dilip Sanghavi is taking. He's explained how he's going to fund it. He's saying he's going to pay back the debt, and the market has rewarded it. It's a complete endorsement there for the leader as much as it is for the idea and the acquisition.
And what he categorically said was that it's going to be the growth that Sun Pharma has and the operational capability that they will bring to the table, and that's what will be the turnaround story. But what's interesting is a Shriram Finance pulling you lower, Axis Bank. You have Eternal, which will be reporting numbers tomorrow. That stock is down nearly 0.7%, just ahead of numbers.
But also because of, look at what Amazon has announced today. They've announced their expansion plans in 100
for Amazon now,
areas for Amazon now. So you have now a mega giant getting into quick commerce. So Eternal is definitely big, but then you have an Amazon coming in, then maybe a bit of a pain point over there as well. India VIX, I just want to pull up India VIX, 7% down. The fear gauge is very benign right now. That's reflecting the market mood. That's important. Advanced decline ratio is also quite fabulous. 1:5 or 1:4 really for advances to decline. That means this is a bullish momentum going on. We'll just wrap up quickly with the sectoral heat map as we close off this Monday morning, and just reiterate that more and more while the West Asia crisis simmers, markets seem to have now looked at value, which has come into the fore. All green screen. Private banks is the lowest gaining sector. Consumer durables, Nifty, Pharma, Realty, all of them doing very well.
And you have your broader markets as well, which have really done well. Your small cap index was up nearly 2%, and I think those are the kind of gains that we are closing in for trade as well today.
Yeah, it's been an action-packed day. That's all the time from Hiral, me and the team that put together this show. But stay tuned. In case you've missed all of the action of the day, Market Express is where you should tune in to get your fix. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market opening. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar.
Good evening, you're watching Market Express with me, Shreyanti Singh, and this is the show that gets you a snapshot of everything that has happened in the trading session today, be it stocks and the movements when it comes to those, or news and updates from within the country as well as across the globe. Let's get cracking on the show then, talk about the markets. First things first, winning day on the last street is what you saw. Nifty managed to end above that 24,000 mark, thereabout, just above that mark. And the Sensex also ended above 630 points. So that's nearly the uptick that you're seeing, about 640 points thereabout. And broader markets also outperformed the benchmarks. Let's also talk about the sectoral picture then. It was a sea of green across the market today. Pharma and IT stocks led from the front, while metals added shine, and oil and gas stocks also chipped in with steady gains, signaling that broad-based momentum and a clear risk-on mood. Let's also talk about oil prices that are surging yet again as the Strait of Hormuz remains effectively shut, keeping global energy markets on edge. So Brent crude that was hovering close to $108 a barrel thereabout as peace efforts stall and supply risks remain elevated, while a ceasefire technically holds trade through the crucial waterway, in fact, remains blocked, choking crude flows and also fueling fresh inflation concerns worldwide. And that's something that you're looking at that was really moving energy prices as well, and volatility is firmly back at the center of the global narrative. Let's also talk about some of the counters that were buzzing away in trade, and from within the Nifty 50 pack, you're looking at Shriram Finance with that nearly 3.5% knock also coming in. But that's after a largely strong quarter led by solid operating performance, tight cost control as well. Margins remain stable as lower expenses support profitability, and growth, in fact, is staying healthy. The street is clearly watching for some acceleration coming in as the next trigger, and the lower funding costs, also something that you're looking at, continues to provide support even as brokerages flag growth execution and macro risks. Let's also talk about something like a Cohance Life Science that was locked in the upper circuit. About 20% uptick is what you saw coming in after pharma veteran Umang Vohra was going to be joining as chairman and group CEO. And since that announcement was made, you saw a very sharp spike in the stock price. Now, the market was cheering this particular move, citing his long experience and strong track record in building global value-led pharma businesses. Investors, in fact, see this as a key step in strengthening leadership, governance, and long-term growth visibility for the company. Let's also talk about something like a Tanla Platforms that posted a steady set of numbers in the fourth quarter. That stock was also buzzing away in trade. Revenue, of course, was supported by enterprise communication and its platform business as well. When you talk about the operating profit growth, that lagged just a tad bit because of employee and operating costs that remained elevated, leading to some bit of pressure on the margins. Now, that said, cash generation stayed strong, and AI-led platforms like Wisely and Map also continued to gain traction, helping the company really scale its platform-driven growth model. Let's also talk about something like an IndusInd that was in focus on the back of delivering a sharp turnaround in the fourth quarter, driven by strong operating performance and lower credit costs. Now, when you talk about the stock, that was up about 6% in trade at the very end of trade as well. And net interest income, that's the one that's jumped about 43%. Operating profit swung sharply into the black as well. Provisions fell significantly, helping the bank post a net profit of close to 500 crores compared to a loss a year ago. When you talk about the margins as well, you're looking at stabilization here as well. Asset quality improved with both gross and net NPAs edging lower, signaling that better balance sheet traction. Let's also talk about the brokerage verdict coming in on IndusInd Bank as well that remained mixed after the Q4 performance. HSBC has reiterated a buy call, raised its target price to 1,100 rupees from 880 thereabouts, citing sharper earnings recovery, and has lifted its FY27 and FY28 EPS estimates by up to 20%. When you talk about the word coming in from Morgan Stanley, in fact, they've stayed equal weight with a target of 730, calling the quarter encouraging, but flagging that profitability improvement is likely to be gradual rather than sharp. Moving on, then let's also talk about something like M&M Financial Services that's in focus on the back of jumping over 9% thereabout, ended the day with an uptick of about 8% after delivering a strong March quarter. Now let's talk about the earnings here. They beat expectations led by improving margins, better profitability and asset quality at multi-year best levels. Now in terms of the management commentary as well, let's talk about that as well, because confident outlook largely is what you're looking at. Portfolio diversification plans further lifting sentiment even as brokerages really flag macro risks as a key monitorable. Moving on, then let's talk about Kotak Securities that upgraded M&M Financial also to a buy and raised its target price to 350 rupees, citing improving fundamentals. The brokerage also says tighter cost control and a core earnings beat in the March quarter have strengthened the company's outlook. Kotak is also saying that this particular company is now better positioned to navigate a challenging year ahead, with operating discipline expected to support profitability even amid a tougher macro environment. Let's move on and talk about something like a Hindustan Zinc that was in focus on the back of reporting a strong set of numbers in the fourth quarter led by robust growth across the board. Now, when you talk about the revenue, that rose about 23%. EBITDA jumped about 27%, aided by margin expansion to nearly 57%. Profit after tax, let's talk about that one as well, about a 29% thereabout increase coming in here, underscoring strong operating performance and cost discipline. Reflecting its healthy cash flows also, the company in fact announced a first interim dividend of 11 rupees per share. Let's also talk about HSBC that has maintained a buy rating when it comes to this particular counter. So they've in fact raised the target price for something like a Hindustan Zinc to 730 rupees from 720. The brokerage is also saying that strong zinc and sulfuric acid prices should help offset higher costs and also weaker silver production. HSBC is also flagging that the March quarter earnings beat was driven by higher volumes and lower operating costs, reinforcing confidence in the company's near-term earnings. Let's also talk about Varun Beverages that has in fact started the calendar year 26 on a very strong note. When you take a look at that 5.5% odd uptick coming in for this particular counter, that should tell you the story here. But when you talk about the earnings fine print as well, it's delivered a sharp beat across key metrics. The revenues risen about 18% thereabout. EBITDA has climbed about 21% as well, aided by margin expansion to 23.3%. When you talk about the net profit, that jumped about 20%, supported by healthy volume growth of over 16% and improved realizations per case. Management, in fact, is saying that strong consumer demand continues to drive performance, while the Twizzler acquisition is expected to unlock meaningful synergies over the medium term, strengthening their growth runway further. Let's also talk about Ultratech Cement that delivered a strong set of numbers in the fourth quarter, driven by strong operating leverage. Profit rose over 20% to nearly 3,000 crore rupees. When you talk about the revenue as well, somewhere close to a 12% growth in the revenue is what you're looking at. EBITDA jumped more than 21%. And when you talk about margins as well, they expanded sharply to 21.7%, reflecting better cost efficiency and price discipline. Backed by healthy cash flows and balance sheet strength, you do have Ultratech that has also announced a special dividend of close to 240 rupees per share, signaling that confidence really when it comes to earnings outlook. Let's also move on and talk about brokerages remaining largely constructive on Paytm despite the RBI cancelling Paytm Payments Bank's license. When you talk about the stock that was down about 1.5%, but Bernstein in fact has maintained its outperform rating with a target price of 1,500 rupees, saying that there is no impact when it comes to the core business or financials. And no further one-offs are expected after earlier write-offs. When you talk about the word coming in from Jefferies, in fact, they've reiterated their buy call with a target price of 1,350, also noting that all Paytm services continue to operate. And both of these brokerages, interestingly, are saying that the move could even enable Paytm to offer certain payments and credit products more flexibly going forward. Let's also talk about fintech firm One MobiKwik Systems that has received approval from the Reserve Bank of India. And this is for a non-banking financial company license, or NBFC license simply put, marking a key step in its expansion into regulated lending. The license in fact allows MobiKwik to launch an in-house lending arm offering secured and unsecured loans to consumers and small businesses, with a focus also on underserved markets. And the company is saying that the move is going to be helping them roll out credit products faster and improve margins by internalizing lending operations. Shares jumped up to 14% after the announcement, ended the day with that close to 11% uptick also coming in. Lending operations are going to be beginning only after the final regulatory conditions are met. But of course, the street was cheering this one. Let's also talk about something like a digital insurer, Acko General Insurance, that is preparing for its market debut and has in fact appointed bankers for a confidential IPO filing. The company is targeting close to a $2 billion or $2.5 billion valuation, anything in that range, 2 to 2.5, with the draft prospectus also expected to be filed later this year and listing plans aimed for early 2027. Sources are indicating that this particular issue could raise close to $250 to $500 million with a mix of fresh issue as well as offer for sale likely. When you talk about this particular IPO, it's going to be managed by Morgan Stanley, ICICI Securities and Kotak Mahindra Capital. Moving on, then, the centre is working on a 5,000 crore rupee credit support scheme for airlines under the Emergency Credit Line Guarantee Scheme. And that is going to be as the Iran conflict really continues to disrupt aviation and trade routes. Sources are telling your channel that this will be part of a broader 2.5 lakh crore relief framework for sectors hit by the ongoing geopolitical crisis. Under this proposal, airlines may get access to government-backed loans with up to 90% guarantee cover, with a likely 1,000 rupee crore cap per airline, and also a tenure of 5 years that you're looking at here. Let's also move on and get you some business news. Adani Airports has partnered with Make My Trip to launch an online duty-free pre-booking service for international travelers. The new facility allows passengers to browse and reserve duty-free products before reaching the airport, helping cut down terminal shopping time and making the travel experience more seamless. The service is currently available for eligible flyers at select Adani-managed airports, with plans to expand across the network. Moving on, then, let's talk about India overhauling its trade reporting system to bring offshore rupee trades under sharper regulatory visibility as authorities move to stabilize the currency amid recent volatility. Now, the Clearing Corporation of India, or CCI, under the RBI supervision, is revamping the trade repository to really align with global reporting standards and add new fields that better capture bespoke derivative transactions. This particular move is aimed at improving transparency and price discovery in the offshore rupee market, especially the non-deliverable forward segment, which has a significant influence when it comes to the currency. Let's also talk about TCS and Siemens Energy that have signed 2 fresh agreements to deepen their long-running partnership with a sharp focus on AI, industrial, digital transformation, and data center infrastructure. Under this particular arrangement, TCS is going to be continuing as Siemens Energy's preferred IT partner globally, also supporting digital engineering enterprise platforms as well as automation services. Now, this is a key leg of the deal that also involves Siemens Energy India supporting TCS's Hypervolt AI-ready data center business, especially on power, electrification, and grid solutions for high-density AI workloads. Let's also talk about Amazon that is sharply stepping up its quick commerce play in the country, with plans to take Amazon now to about 100 cities. The rollout is going to be covering key metros as well as Tier 2 and 3 cities, including Lucknow, Kochi, and Vishakhapatnam, as the e-commerce giant intensifies competition with the likes of Blinkit, Instamart, and Zepto. To support the expansion, Amazon is going to be building over 1,000 micro-fulfillment centers. And this is backed by a 2,800 crore rupee investment when it comes to logistics and last-mile infrastructure. Let's also talk about the government ordering to block online content that have surged sharply in 2025, rising to about 24,300 takedown directives. So far, according to a report, more than half of these orders were directed at X, formerly Twitter, making it the single largest platform impacted. The actions are being taken under Section 69A of the IT Act, which really allows the government to block content on grounds including sovereignty, defense, public order, and prevention of offenses. When you talk about this particular report, it's also indicating that authorities may be considering expanding blocking powers to more ministries beyond the current MeitY-led framework. Let's also talk about OpenAI that is reportedly working on an AI agent-powered smartphone with mass production likely to begin in 2028. According to the report, the device could move away from the traditional app-based interface and instead rely on AI agents that understand user context and complete tasks directly. Now, when you talk about this particular smartphone, it's set to feature a combination of on-device AI processing and cloud-based intelligence, allowing smaller tasks to be handled locally, while heavier workloads shift to the cloud. Let's get you some national news now. India and New Zealand have formally signed a landmark free trade agreement. Now, this is a move that is aimed at boosting bilateral trade, investments and market access amid heightened global uncertainty. This particular pact is providing duty-free access for Indian goods into New Zealand, with reports indicating that over 8,000 Indian products will benefit from zero duty entry. From day one, the agreement is also expected to bring in nearly $20 billion of investments, and this is over the next 15 years, while strengthening services trade and mobility opportunities. Now, in a major political development, Rajya Sabha Chairman C.P. Radhakrishnan has formally accepted the merger of 7 Aam Aadmi Party MPs with the BJP, significantly altering the numbers in the upper house. When you talk about this particular move, it's raising the BJP's tally to 113 seats, while the AAP's strength falls sharply to just 3 members. Now, the defectors include high-profile names such as Raghav Chadha, Harbhajan Singh and Sandeep Pathak, most of them elected from Punjab. Let's also talk about PM Modi, who's scheduled to launch projects worth 6,300 crore thereabout in Varanasi and inaugurate the Ganga Expressway in Hardoi as well. Now, the initiatives, let's talk about them as well, because they include infrastructure, urban development, and connectivity projects aimed at boosting growth in eastern Uttar Pradesh. Now, the Ganga Expressway is a major expressway project that will improve connectivity between Prayagraj and Hardoi, and these launches are part of the government's continued focus on accelerating development in the region. Let's also move on and talk about Skyhop, that has received DGCA clearance for India's first commercial seaplane operations. The company is going to be beginning seaplane services connecting key locations, starting with routes in Gujarat and Maharashtra. The approval, in fact, is marking a significant milestone in the government's push to develop seaplane services for tourism and regional connectivity. Skyhop plans to use modern seaplanes that can operate from both water and land, offering faster and more scenic travel options. Let's also talk about the Narcotics Control Bureau that has launched the Operation Wipe to crack down on the illegal online sale of pharma drugs. The operation targets websites and platforms selling prescription medicines without valid licenses or even prescriptions for that matter, and CB officials conducted raids across multiple cities and seized large quantities of banned and controlled drugs. And the agency is also saying that the illegal trade poses serious health risks and contributes to drug abuse. Let's talk about the IMD in terms of their warning, and they've issued a heat wave warning for northern and central India, forecasting severe hot conditions and warm nights in the coming days. Temperatures are expected to rise significantly in states like Rajasthan, Punjab, Haryana, Delhi, Uttar Pradesh, and Madhya Pradesh. Now, the IMD has also warned of warm night conditions which could increase discomfort and health risks. And this is, for people, especially the elderly and children, that have been advised to stay hydrated, avoid outdoor activities during peak hours, and take necessary precautions to prevent heat-related illnesses. Let's also get you some international news. Then diplomacy appears to be back on the table, and a breakthrough seems possible. And that's something that you're looking at because, you do have a 3-stage formula that you're looking at in terms of Iran sharing it to finalize negotiations. First stage of negotiations focuses on the complete end of the war and obtaining guarantees to prevent its resumption against Iran and Lebanon. Now, the second stage will be dedicated to examining the manner of managing and also administering the Strait of Hormuz. The third phase relates to the nuclear issue. Meanwhile, US President Trump, in fact, has also hinted that war might end soon. He's also said that mounting military and economic pressure has placed Tehran in a weakened position and may push it towards a resolution. Let's also talk about Iran issuing a stark warning to Gulf nations following fresh threats from US President Trump as well. Tehran is saying that any damage to its oil infrastructure is going to be met with a response 4 times as severe. Targeting countries that back Washington, the warning comes as talks remain stalled and the conflict risks widening across the region, with energy assets also firmly in the crosshairs. And on more updates on the Middle East war, then, an Iranian MP has openly questioned Pakistan's role as a mediator, and the lawmakers saying that Pakistan lacks the credibility needed for such high-stakes negotiations and is not a suitable intermediary as well. He's also alleged that Islamabad tends to align with US interests, raising concerns over neutrality at a crucial diplomatic moment. Let's also move on and talk about some preliminary findings that suggest that US President Trump was the likely target of a shooting attempt at the White House Correspondents' Dinner in Washington. And Acting Attorney General Todd Blanche is saying that investigators believe that the attacker was targeting members of the Trump administration. US media, in fact, have identified the suspect as 31-year-old Cole Thomas Allen from California, who's not cooperating with authorities. His motive remains under investigation. The reports say that he left behind a lengthy manifesto that was about 1,000 words thereabout. President Trump has since claimed that the attack was religiously motivated and strongly anti-Christian. Let's also move on, and Lashkar-e-Taiba commander Sheikh Yusuf Afridi has reportedly been killed by unknown gunmen in Pakistan. The incident adds to a series of targeted killings involving militant figures in the region. While details remain limited at this point in time, the development is likely to raise fresh questions around security and internal dynamics. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates.
Markets show recovery after 3 days of losing streak, with Nifty closing above 24,000 levels today. Sun Pharma tops the chart, up nearly 7%. The broader market outperforms the benchmarks, signaling improving sentiment. No respite for crude prices as ceasefire talks really stall. Brent crude jumps, hovering above $107 per barrel amidst Middle East tensions. Sun Pharma zooms in trade after it signs a definitive all-cash deal to acquire Organon for close to $12 billion. Deal closure is expected in early 2027. Management highlights cost synergy is worth $350 million in 2 to 4 years. Debt of almost $8 billion to be reduced over time. India-New Zealand seal FTA, scrap tariffs on exports and lock in $20 billion investment plan in next 15 years. Piyush Goyal says deal will open new opportunities for the farmers, youth, women and also MSMEs. Government steps in to support airlines amid West Asia crisis. 5,000 crore rupees credit boost likely for the airlines. Emergency credit line framework to back the airlines hit by the conflict. Commerce Minister Piyush Goyal is in talks with the exporters to push the outbound shipments. Key meet to assess Middle East crisis impact. Iran rolls out a 3-stage plan to end the war, starting with the Strait of Hormuz, saving nuclear discussion for the end, and Iranian foreign minister blames US for talks breakdown as he visits Russia. Big setback for Aam Aadmi Party. Rajya Sabha chair approves the merger of Aam Aadmi Party faction. 7 former MPs merge with the BJP. Minister Rijiju welcomes MPs. Raghav Chadda trains guns on Kejriwal. Skyhop Aviation receives air operation certificate, set to launch India's first scheduled seaplane services. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar. Over the next half an hour, we will be taking you through all the top stories and the developments of the day. Let's first begin with the markets. While the stock markets really gained in trade today, as the reports really suggest that Iran sent a peace proposal to the US to end the raging war in the Middle East. While the Nifty held its ground above 24,000 levels, while the Sensex, it advanced over 700 points in trade today, unlike the case really seen on Friday. Now, most of the sectors ended in the positive zone, with pharma really leading the charge. And my colleague Jasmeet is right here to take us through the market action for the day. Jasmeet, tell us.
Well, thank you for that. A good day for markets indeed. Well, Nifty 50 gains along with mid cap 150 and small cap 250. And Nifty 50 gains about 0.8% and ends about 24,000 mark. In terms of top gainer, we have stocks like Sun Pharma, which has gained the most, up about 7%. If you look at the broader market has outperformed the benchmark, showing a strong sentiment across the market. In terms of mid cap 150, it has gained about 1.5% and also snaps the 2-day of losing streak and gains 2 days in trade. While in terms of top gainers in mid cap 150, we have stocks like M&M Finance and NTPC Green, both gaining about 7.5%. In terms of small cap 250, when that gains in today's trade, while snaps 2 days of losing streak and gains about 1.7%. In terms of top gainer, we have stocks like Cohance Life Sciences, which gains about 20% in today's trade. In terms of sectors, all sectors end on a green note, with Nifty Pharma and Nifty Realty gaining the most in today's trade. While Nifty Pharma has gained about 2.5%, while Sun Pharma being the largest gainer in Nifty Pharma. In terms of Nifty Realty, when that has gained about 2.5%, and the top gainer in Nifty Realty stock like Anantaraj, which has gained over 8%. If you look at the other key sectors like Nifty IT, Nifty Auto, Nifty Bank, even they snap the 3 days of losing streak and gains today in trade.
All right, Jasmeet, thanks so much for giving us the market roundup. So even though the equity markets really got pumped up because of some peace talk, well, there was no respite seen when it comes to the crude oil prices of Iran really sending a peace proposal to the US to end this war. Now, the oil prices, they increased by over 2% as Brent oil futures really exceeded $107 per barrel. Now, US West Texas Intermediate futures that with June delivery also rose over $96 per barrel. Clearly, the lack of a vivid progress is really tightening the market every day and also pushing the oil prices to its higher levels. Well, let's also take a look at the rupee momentum, and the rupee too remains under pressure today, walking a tightrope around the 94 per dollar mark. The currency, remember, especially feeling the heat of importer really hedging triggered by stubbornly high oil prices. So oil prices are really impacting, and of course the FII outflows is also a big dampener for the rupee. Well, and market voice Jeffrey Dennis, that he raised concerns around the weakness in the Indian rupee and flagged it as a key risk for the domestic markets. He also pointed to crude oil prices as a critical factor to really determine whether markets really turn bullish or bearish. Listen in to a part of that conversation.
With respect to India, I think value is beginning to develop in India. The problem India's got right now is we're not sure what the trigger is, and obviously the weakness of the rupee, which is very different from what's been going on, say, with the Brazilian real or the Mexican peso in 2026, is a source of concern. It's a problem for the Modi government. So I think you need better news on the currency, and you need some sort of trigger in terms of foreign inflows coming in for this very, very much underperforming market to do better.
All right, that's the view coming in on the Indian markets. But remember, the overseas or cross-border M&A, our biggest in the recent times, got announced today. So shares of Sun Pharma really jumped nearly 7% during the early trade today after it announced the acquisition of New York-listed Organon and Company, and this is an all-cash transaction with an enterprise valuation of $11.75 billion. Now, in an interview with us, the company's management highlighted that the Organon acquisition is expected to strengthen its business, especially in the fast-growing biosimilar segment. Now, remember, Organon is already the 7th largest player in the market, and Sun Pharma plans to really build on that particular position. Listen in to a part of that interview that I had earlier in the day today.
We will generate certain cost synergies.
Yes.
And this cost synergies, close to about $350 million, will get generated over a period of 2 to 4 years. And in my opinion, there are a large number of sales synergies, which right now we are evaluating, and it will help business to grow further.
Yes.
And it will help to grow all 3 business segments.
Yes.
As in, like Organon has an innovative business, then they have biosimilar, and they also have established product business. So in all 3 business areas, I'm looking at how do we grow. I cannot give an exact time when we can bring this growth back to the track, but the effort is to do at the earliest possible date.
So like the cost synergies that have been mentioned, Jayashree, is $350 million in 2 to 4 years. There are revenue synergies that are estimated, and then the growth outlook, which you have not put a timeline on.
Yeah.
All right. So, Jayashree, when we talk about the cost synergies, you've given the timeline. You said the debt EBITDA levels, and that is 2.3x, which you are comfortable with. Dilip Sanghvi also stated that there is high debt and high risk, and I'm a risk taker. But I want to ask you one question. When it comes to corporate finance, debt equity is a very important factor in getting the required cash flows and generate the growth capital also by debt or equity. It is around 6 times back of the envelope calculation. How are you going to really, give a rationale to such a high level of debt of 6 times of your equity, and also deal with the finance charge at the moment with the huge amount of debt? Because even though EBITDA accretive EPS accretive, you're saying, but from EBITDA to PAT, a lot will be eroded in terms of finance charges.
Okay, here's a good question. Let me answer it in two ways. One, both these companies, Sun and Organon, are cash-generating entities. Together, at a pro forma level, they generate about $2.5 billion in terms of cash. And with the growth opportunities that we just spoke about and the cost synergies, the cash generation would only increase over a period in time. With all of this and a very disciplined approach which Sun is used to, we believe it would be sufficient to look at debt repayment at a decent period in time.
All right, that was Sun Pharma. Now, Cohance Life Sciences, that has announced the appointment of Umang Vohra as the chairman and as the group CEO. And in fact, Vohra, the former CEO of Cipla, joins the organization to spearhead its next phase of transformation and also growth. Varsha is here to take us through what it really means for Cohance and the development going forward. Varsha.
Very positive and big news for Cohance Life Sciences, and this is a shocking news. I mean, Umang Vohra joining Cohance Life Sciences. Well, why this is an important one and why you're seeing such a huge surge in stock prices. One is why Umang Vohra is a strategic fit for Cohance. One is he has a proven ability, to grow globally while protecting margins, what he has done with Cipla. And also talking about the customer-centric CDMO segment, we've seen a clear shift from volume manufacturing to value partnerships in Cipla, and also this appointment supports Cohance transition to professional governance-led growth, which Cohance has been doing, and also the track record enhances investors' confidence and strategic clarity. Now, why I'm saying this, what Umang Vohra has done with Cipla, how he has transformed Cipla from 2016 to 26 is one is he has transformed this company from volume to value growth, pivoted away from commodity generics to complex and specialty products, built scale and leadership in respiratory and chronic therapies, and focused on high barrier differentiated products. And the key outcome of all these initiatives taken by Umang in Cipla was Cipla became the world's largest inhaler seller by volume, ranked among the top players in US inhalation generics, and established global leadership in respiratory care at industrial scale. So, a very big and positive news on Cohance Life Sciences, and I think this may be the start of the rally that we are seeing.
All right, thanks Varsha for taking us through all the details. Now, ACO could be really gearing up for a big market debut. According to sources speaking to NDTV Profit, ACO has really reportedly appointed bankers to manage a confidential IPO filing. The company is set to be targeting a valuation in the range of $2 to $2.5 billion. My colleague Jasmeet joins in with all those details. Jasmeet.
Well, thank you for that. As rightly said, as per sources, ACO is planning for an IPO worth rupees 2 to 2.5 billion at a valuation, while ACO is expected to be picking up bankers to discuss further on the IPO. And we might expect the DRSP to come out in the next few months, and the listing is targeted the early of FY27, that's 2027. So we have seen 2026 to be a weak start for the IPOs, but the expected timeline for ACO is in the 2027, the beginning of 2027, next 12 to 18 months to the max. If we look at few market investors that are backed to this particular counter, they are like CPP Investments, and we also have something like an Amazon, which is backing this particular counter. Now, if you look at the other key details, this move is coming amid when there is a demand for the overall digital insurance and how the digital risk is increasing on the back of that AI. Now, if you look at the key financials, the FY25 financials for the company saw a good jump of nearly 35%. It stands at 2,800 odd crores, while it's a wait and watch of what are the further details and at what exact value does ACO come out with its valuation, with its IPO, and further how will the overall street like the particular IPO.
All right, thanks so much, Jasmeet, for that. Now, India and New Zealand, they have signed a free trade agreement aimed at boosting the bilateral trade investments as well as market access. Now, with trade expected to really double over the next 5 years between the two countries, calling the pact a reflection of a strengthening economic partnership between the two nations. Now, the Commerce Minister on this particular point, Piyush Goyal, said that the agreement opens new pathways across agriculture, manufacturing, technology, education and services, describing it as a historic day. And New Zealand Trade and Investment Minister today also said that the deal will drive growth and new opportunities for India, while giving Indian exporters will really have access to the New Zealand market from day one. Listen in to what Piyush Goyal said on this particular occasion.
It is a comprehensive framework spanning market access, agri-productivity, investment and mobility, designed to benefit manufacturing, farmers, artisans, MSMEs, women entrepreneurs, students and skilled professionals across both nations. Take services and mobility. New Zealand has committed market access in 118 sectors and MFN, most favored nation, in 139 sectors, while opening dedicated work, study and holiday visa pathways for our professionals, students and young travelers. For our farmers and rural economies, the Agricultural Productivity Partnership raises productivity, incomes and exportable surplus. The Mutual Recognition Agreement in Organics will boost our organic exports to New Zealand. On the investment side, this agreement is expected to channel $20 billion US.
For New Zealand, strengthening our relationship with India is a key priority. Indeed, our Prime Minister, Christopher Luxon, when in opposition, made a statement to the nation saying that if we were elected to government, our relationship with India would become a strategic priority for the New Zealand government. We see India not only as a major economic partner, but as a country with which we share strong people-to-people links, complementary economies, and a commitment to working constructively together in a changing global environment.
All right, so that was a landmark New Zealand free trade agreement that was signed. My colleague Danish was right there at this particular event and has more details on what it really means for India's trade, Danish, and the expansion of market.
Well, India and New Zealand have signed the free trade agreement in a record time of 9 months. In fact, last year in March, New Zealand's Prime Minister was here in India to meet PM Modi, and at that time only the talks around the FTA had begun. And now we are seeing that on 27th of April, this has been signed here in New Delhi. Well, it is a win-win situation for both the countries. What India gets, well, it will be a major boost for India's exports, as all the goods that are going to be exported from India will attract 0% duty in New Zealand. And since New Zealand hardly has any manufacturing over there, so it is a big field for our entire nation, as not only the automotive sector but the pharma sector, the textile sector, the leather goods industry, these sectors will be seeing a good boost as far as India's exports to New Zealand is concerned. And as far as what New Zealand has to offer to India, New Zealand will be investing around $20 billion US over a period of 15 years, and within this we also have a lot of boost as far as people-to-people connection is concerned, as there also talks around student exchange and how both universities in India and New Zealand can collaborate and give a dual degree which can be utilized not only in India but also in New Zealand. Besides that, as far as the temporary visa is concerned for skilled Indians, that is also there. Initially it is starting with 1,500 visa applications, but over a long term it will stretch to 5,000 temporary visa applications. So all in all, if we see, this is a win-win situation for both the countries, and this agreement has been signed at that point in time when we are seeing the West Asia crisis is there and new countries are selecting new partners, and the timing of this FTA agreement is very important, as Indian exporters will now get a new market, that is New Zealand. And very lastly, I would like to add that now, as far as the next step is concerned, this particular FTA will be tabled in the New Zealand Parliament, and there will be debates happening over there, and after a few months it is expected that the FTA will actually begin in full letter and spirit by the end of this year.
All right. Thank you so much, Danish, for putting all that into perspective and getting us those details of the landmark FTA with New Zealand. Now, amid ongoing global tensions, a support package is being worked out as the Iran conflict really continues to impact businesses. A key focus area is the aviation sector, where a 5,000 crore rupees credit scheme is under consideration by the government. Now, as per sources, this proposed scheme will be part of a much larger 2.5 lakh crore rupees framework under the Emergency Credit Line Guarantee Scheme, or ECLGS. Now, this aims at supporting multiple sectors hit by the crisis. Airlines are expected to access funds with a likely credit cap of up to about 1,000 odd crore rupees per airline, and the scheme could really run for 5 years or so, with an option to extend if needed. More importantly, the government may also offer up to 90% credit guarantee cover, which would also reduce the risk for the lenders as well as ensure smoother access to funds. So this is another important measure as we see the Middle East crisis continuing. So let's focus on the war update for today, and diplomacy appears to be back on the table. A breakthrough seems possible as Iran has really shared a three-stage formula to finalize the negotiations. First stage of negotiation really focuses on the complete end of the war and obtaining guarantees to prevent its resumption against Iran and Lebanon. Now, the second stage will be dedicated to examining the manner of managing and also administering the Strait of Hormuz. And the third phase relates to the nuclear issue. Meanwhile, the US President Donald Trump has also hinted that the war might end soon. He said that mounting military and economic pressure has really placed Tehran in a weakened position and may really push it towards a resolution. So some bit of breakthrough, but at least right now, it's all in words. All right, let's take it forward then. Amazon India is set to expand its ultra-fast delivery service, Amazon Now, to 100 cities across the country. It plans to expand deep into Tier 2 as well as Tier 3 markets like Lucknow, Kochi, Amritsar, as well as Vizag, backed by a 2,800 crore rupees investment. Now, Amazon plans to build over 1,000 micro-fulfillment centers to really power and also the deliveries within minutes. And this platform will offer over 1 million essential items, groceries, as well as electronics at your doorstep in record time. Now, this move signals Amazon's aggressive push to quick commerce in India's rising competitive market, with Blinkit and Instamart and Zepto already posing a competition and really going ahead in the quick commerce thrust. So Amazon really jumping into this particular heightened competition. All right, moving on, Uttar Pradesh's 594-kilometer long Ganga Expressway is linking Meerut and also Prayagraj is set to be inaugurated on 29th of April. So later in this particular month, it will cut travel time to just 6 hours between the two cities. Built by Adani Group, the Greenfield Expressway features world-class infrastructure. Take a look at the report for all these details of this project.
West meets east in Uttar Pradesh, Meerut and Prayagraj just got closer. Yogi government's latest gift to Uttar Pradesh, the Ganga Expressway, set to be inaugurated by Prime Minister Modi on April 29th. This 6-lane high-speed corridor connects Meerut to Prayagraj, halving the travel time to about 6 hours. The Ganga Expressway runs through 12 districts, enhancing connectivity across Uttar Pradesh. India's largest greenfield expressway, 80% of it has been built by Adani Road Transport Limited, a subsidiary of Adani Enterprises Limited. The Ganga Expressway is a 594 kilometers long, 6-lane expressway that is expandable to 8 lanes. It will connect 12 districts, 519 villages, and 8 crore people. Adani Roads Limited has developed 80%, that is 464 kilometers, while IRB Infrastructure Limited has developed 130 kilometers. The total cost of the project is about 36,000 crores, and it has been completed in a record time of 3 years and 3 months. Named after the river that has sustained one of the world's most fertile and populous agrarian regions, the Ganga Expressway will be a booster shot to the region's economy by improving connectivity and productivity. The Ganga Expressway is expected to generate roughly 3 lakh direct and indirect employment opportunities. The Yogi government is establishing 11 industrial corridors across all 12 districts on the route. Meerut, Hapur, Bulandshahr, Amroha, Sambhal, Badaयूं, Shahjahanpur, Hardoi, Unnao, Rai Bareli, Pratapgarh, Prayagraj, which will create millions of jobs over time. The expressway will also be a multiplier for the state's spiritual tourism economy, as it connects 7 major tourist destinations: Garmukteshwar, Kalki Dham, Bela Devi, Chandrika, and Triveni Sangam.
Ganga Expressway starts from Meerut and ends to Prayagraj, and the distance between these two cities by car takes around 10 to 11 hours. But after the inauguration of this Ganga Expressway, the time from Meerut to Prayagraj will be reduced to around 5 to 6 hours. That means the time from Meerut to Prayagraj will be half, but the comfort will be doubled. And if we talk about Ganga Expressway, this is 594 kilometers long expressway, which is made by Adani Group. The 3/4 section of this Ganga Expressway is being made by Adani Group. And if we talk about the facilities, then there are total 9 facility centers, which will include petrol and diesel pumps, and also CNG, EV charging point, cafeteria, food court, dhaba, as well as motel. And there are so many other facilities which will be provided to the car users and the truck drivers on this expressway.
The state-of-the-art expressway has 437 underpasses, 21 flyovers, 76 minor bridges, 20 plus EV charging stations, world-class amenities such as food courts, fuel stations, motels, cafeterias, shopping plaza, vehicle service centers along the way. The expressway will also have 24/7 CCTV surveillance and trauma centers. There is dark fiber for even faster internet. The Ganga Expressway is a shining example of the Adani Group's commitment to the UP growth story. The group has invested in UP across transport, energy, airports, gas distribution, digital infrastructure, cement, and renewable energy. Bureau Report, NDTV.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel.
Presented by Canara Bank. Together we can.
Hello and welcome to Know Your Company. I am Mahima Vachharjani and today we are going to talk about a very interesting company. It's called Rushil Decor. Now why is this interesting? Because this is one of those companies that is into and one of the leading manufacturers, by the way, of MDF boards as well as laminates in India. Not just in India, they're expanding in terms of geographies internationally as well. Now they've got 100+ years of lineage when it comes to wood engineering. In terms of the products that they make, they've got a very big experience coming in. Recently they entered into manufacturing of jumbo laminates as well. This is going to be one of the key drivers for them going forward as well. It's one of the third largest market share. It has one of the third largest market share in terms of MDF boards in India right now. In terms of the overall experience in terms of both of these products, their main key hero products, 32 years plus of experience in MDF boards as well as laminates is what the company holds. In terms of the product range, they've got 1200+ designs when it comes to both of these products, that is MDF boards as well as laminates. In terms of the product range, in terms of brands, they've got 6 distinct brands. Even in terms of the applications of these products, it's used across commercial as well as residential furniture, also used in wall paneling and others. So it's got varied range of areas in which all of these products are used. Now it of course is seeing increase in focus of value-added MDF boards, plus considering that housing development is going to pick up going forward, they're in for a huge growth coming in as well. In terms of distribution, they've got 700+ direct distributors. In terms of retail distribution also, if we can pull that number up, they've got 4,700+ retailers and dealers present right now as a whole. In terms of manufacturing, they've got 6 manufacturing facilities across India, of which the breakup is that one MDF plant is in Andhra Pradesh, 2 of their MDF plants are in Karnataka, and they've got 3 laminate plants in Gujarat. They've also now recently, the entire unit of, jumbo is also started. But before that, let's take a look at the installed capacity and capacity utilizations as well. For laminates, the installed capacity is 34,92,000 sheets per annum. The utilization for this one as of 9 months FY26 stood at 89%. For MDF boards now, the overall capacity stands at 3,30,000 cubic meter per annum, and the capacity utilization here stands at 72%. They are of course planning to scale in when it comes to the capacity utilization. We'll ask the management about the same. In terms of total capacity for jumbo laminates manufacturing platform, that is around 28 lakh sheets per annum. This is a very recent one that they've opened in Gujarat, the plant for this one in 3 different phases. And the jumbo laminates has opened key access to key Europe markets as well. So this is something that is going to expand their international horizon. Now VIR as a brand has also expanded across 57 countries. So that is also one of the key developments that we'll be be tracking for the company. In terms of certifications and quality, that also supports their export growth. So all of these 3 points that I mentioned are very important when it comes to their international expansion and accessing the global markets. Plus, the product quality and manufacturing certifications give them an advantage in driving export sales growth, and that is going to be one of the key factors that leads to their key growth going forward as well. Now let's, this is everything that you need to know about the company. Let's also take a look at the parameters that we're going to look at and assess the company for Rushil Decor as a whole. Let's try to pull that up and see in terms of what parameters are we going to take a look at. The first one that we're going to keep an eye on is the income statement. We're going to talk about how the company has done in the past year in terms of revenue, EBITDA, margins, as well as PAT. The next one that we're going to talk about the balance sheet as to how healthy it is in terms of its borrowings, its cash positions, as well as in terms of where the equity stands. Cash flow, we're going to talk about how cash flow from operation has fared over the years and how EBITDA is getting converted into that cash flow from operations. And we're also going to talk about return ratios as to how the ROC of company has fared so far. Then we're also going to talk about the shareholding pattern, whether the promoters have skin in the game, what are FIs and DIs doing with regards to this counter. All of that we're going to discuss in shareholding pattern. Then we are going to talk about street cred. Now street cred is something that will tell you as to how the stock has done over the years. We're going to break that down into different time frames as to what kind of return it has given to its investors. Then we are also going to talk about valuations, because that is an important perspective as to how this particular counter stacks up against its peers and what is the outlook looking like in terms of where the valuation stands. And that's the outlook part also we are going to separately discuss in the 8th parameter, and we're going to talk about as to what is the guidance that the management has given. Now let's take a look at the first parameter, that is the income statement. Now if you take a look at the last 3 years for this counter, the 3-year CAGR, we've taken FY25 up to FY25 numbers for simplicity of understanding. 3-year CAGR in terms of revenue stands at 13%, but if you take a look at the last 3 years, the revenue has been range bound in that 800 to 890 odd crores. EBITDA has also seen a similar CAGR of 13% in the past, three odd years. And what we're seeing is that overall revenue as well as EBITDA both are growing hand in hand. But PAT overall, if you can go back to the previous slide once, overall in terms of the PAT numbers as well, we've seen a good growth of 28% when it comes to the 3-year CAGR, but the last 2 years the PAT has largely remained in that 40 to 45 odd crore range. Let's take a look at the margins as well. Margins is something which is concerning because that's dropped from FY23 to FY25 from a 17.8% to 11.8%. This we're going to talk to the management about, but I think the main concern here is with regards to the rise in raw material cost inflation, and I think that is the reason as to what is putting pressure on margins. And plus I think probably they're going ahead and spending in marketing spends as well. We'll try to understand, of course, that part from the management. But overall, in terms of the overall CAGR plus the margins, considering margins into picture, we've given it a neutral rating when it comes to the income statement. Let's take a look at the balance sheet as well. In terms of the overall picture when it comes to the retained earnings, that has grown steadily over the past 3 years from a 344 odd crore to a 600 odd crore in FY25. So that there is no problem there, completely a thumbs up. In terms of the debt, that has been reducing, considering both the long-term and short-term debt. It stood at around 400 odd crores in FY23, gone down to 267 odd crore in FY27. This combines both long-term and short-term borrowing. We'll try to understand from the management as to what are their plans going forward when it comes to debt reduction. Cash in bank is the other factor which is slightly concerning, because overall their average cash flow has remained in that range of 5 odd crores. So we'll try to understand from the management whether they're planning any fundraise, and apart from that, what are the plans to retain cash going forward. Because if you take a look at the cash flow picture as well, I will try to understand as to how the net cash flow position has remained zero throughout the years. They've overall managed to grow in terms of their operating cash flow to EBITDA number, which is a healthy number for sure, from 77% to 102%. But overall, slightly in terms of cash flow from operation has been reducing a tad bit, and the net cash flows have remained zero, which is not a concern when there's conversion happening in terms of EBITDA number. But overall, we try to understand from the management with regards to what are their plans are when it comes to the cash position. But because the ratio is healthy here, we've given it a thumbs up when it comes to the cash flow statement. Let's now try to understand the ratio aspect. and see as to how return ratios have fared over the last couple of years. Let's try to look at that chart. It's an interesting one. It went to 16% ROCE in FY23, but since then it has come down. It's come down to 12% in FY24 and 10% in FY25. So we'll try to understand from the management as to what the internal targets are to grow that ROC percentage, and because of it declining in the past 3 odd years, we've taken a conservative approach here and given it a thumbs down when it comes to the return ratios. Let's try to pull up the shareholding pattern. Now, the promoters have largely held their stake in the company, so there is skin in the game. It is above 50% mark. So overall, that has remained largely stable in the past 3 years. When it comes to the FI holding, not much of an interest for FIs and DIs both here, because FIs have largely maintained their 1.2, 1.3% stake in the company. However, there's public holding which is very strong on this one. 42% to 44% it's gone in the past 2 odd years. Because there's no FI, DI interest that we've seen in this counter, of course, it's also a very small market cap company of around 500 odd crores, and that is why probably we're seeing less FI, DI interest. But considering that approach, I think we've given it a neutral rating for now. This is the number of shareholders that have grown in the past 3 odd years, from a 24,000 number to a 50,000 or 74. This is of course in terms of thousands. Let's try to pull up the next slide and see as to how the street cred has been like. Now, interestingly, in the past 1 month, the stock has gone up almost 22%. But if you take a look at the performance from a larger scale, 6 months it's down 39%, YTD it's down 28%. 1 year, the stock is down 29%, and 5 years it's not done anything. It's just given return to its investor by about 5 odd percent. Considering that, I think we've given it a thumbs down for now, but we'll have to wait and watch out for whether that 1 month move that we've seen in the past 1 month will continue in terms of momentum or not. So that's with regards to where street cred goes. Now let's take a look at the outlook picture as well, because the management has given guidance when it comes to FY26 as well as FY27 going forward. But before we do that, let's take a look at the peer comparison as well. In terms of the peer comparison, Rushil Decor is one of the cheapest stock available right now in this space, because if you take a look at Century Plyboard, that's trading at 72 times, Greenlam Industry trading at 313 times versus Rushil Decor just trading at 16 times, because Stylum and Greenply are also trading at 27 times and 40 times respectively. So Rushil Decor right now is one of the cheapest stock available in the entire space of MDF as well as laminate. So that's why we've given it a thumbs up when it comes to the valuation, but we'll have to wait and watch out for as to how growth for the company fares going forward, because that will also determine as to how valuations fare. Lastly, in terms of outlook, FY26 revenue, they're targeting around 900 crores. They did around 890 odd crores in FY27, so not much of a growth as compared to FY25. EBITDA margin is expected to be around 8 to 9%, which is slightly lower as compared to what they did in FY25. So we'll ask the management as to what the plans are going ahead. FY27 revenue, however, they're bullish when it comes to the FY27 revenue. 1,000 crores is what they're at least aiming at. Overall, in terms of EBITDA margins, they are expecting this to go up to 10 to 11% from at 8 to 9% in FY26. So this is the overall guidance given by the management of companies. Strong guidance coming in for FY27, and that's why we're giving it a thumbs up when it comes to the outlook. So that's with regards to where, of course, the overall parameters go for the company. Let's now take a look at what ratings have we given for this one in terms of the total overall ratings for Rushil Decor. Let's try to pull that up and see. For income statement, we've given it a neutral rating considering margins declining. For balance sheet, we've also taken a conservative approach here and given it a neutral rating considering the borrowings picture. Cash flow, we have given it a thumbs up because operating cash flow to EBITDA is a very healthy ratio for the company. Return ratio, we have given it a thumbs down because the ratio has been declining when it comes to the ROCE number. Shareholdings, we've given it a neutral rating right now because it's a small company, no FI, DI interest. So just a conservative approach is what we've taken. Street cred, 5 years, the stock has not done anything, and that's why we've given it a thumbs down. But of course, we'll be watching out for, because in the last 1 month, there is momentum seen in this counter, and we'll keep an eye on what happens next for the company. Valuations, most certainly a thumbs up, because one of the cheapest stock available in the space at 16 times right now. Going forward will become cheaper as well, but growth is something that we'll be watching out for, and outlook definitely a thumbs up. the guidance given by the management for FY27 is most certainly a bullish one. So that's with regards to Rushil Decor goes. The overall rating comes out to be 4.5 out of 8 for Rushil Decor. So that's with regards to where the final ratings go. But viewers, time to slip into a very, very short break. We'll be speaking to Rushil Thakkar, the Managing Director of Rushil Decor, on the other side of the break. So do stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
You're watching Know Your Company, and we were talking about Rushil Decor. We've given the company a rating of 4.5, healthy financials going forward, and healthy guidance also the management has given going forward. And let's talk to, in fact, Rushil Thakkar, the Managing Director of Rushil Decor, who is joining us now. Rushil, thank you so much for, first of all, taking the time and speaking with us at NDTV Profit. My first question is with regards to how we've analyzed your income statement. Just want to understand, you've already given FY27 guidance of that 1,000 crore odd mark. In the last 3 to 4 years, there has been a tepid growth, and this I suppose is considering the growth in terms of how industry is going in terms of real estate as well. Plus, there is raw material cost inflationary pressure continuously on you. But what gives you the confidence of achieving that 1,000 crore in FY27? What will be the triggers going forward?
So first of all, good afternoon, and thank you, Mahima, for the opportunity. So as we look to grow towards the 1,000 crore company, so first of all, our jumbo project is now in place, and all the research and development which has to be done has been in place, and we are opening up the markets in Europe and Northern America and Latin America, which will grow our export revenues in laminate. In terms of MDF, we are growing with the value addition. So our target is to reach 50% of the total capacity with the value addition, which will give us another boost in the top line and also in the net margin ratio. So we are very clear with and focused with our vision, what we want, and that's how our company will be growing at this year for 1,000 crores.
Okay, Rushil, with regards to your margins, you've said that you'll do 8 to 9% this year, but that will go to 10 to 11% next year. Considering the West Asia conflict into consideration, that has probably pushed your raw material inflation further, if I'm not wrong. Do you think those margin levels are still achievable in FY27? What is the hit that you've taken in FY26, and what is it that will, be followed through in FY27?
So yes, price hike we have taken in MDF roughly around 15%. Our first hike was in April first week, which was around 10%, and the second hike we took somewhere around 10th of April, which was somewhere around 5%. So, and looking at the current scenario, yes, our prices are sustainable. When we talk about our HPL business, we have roughly taken 18% of price hike in 1mm, which is our premium product, and slightly lower in the lower range of the side. So margins are retainable. Talking about the chemical prices, yes, the chemical prices has gone up drastically, and we are trying our best to procure at the best rate possible and sustain our margins what we have already committed. But speaking towards the margin for this year, yes, we are expecting to have EBITDA margins of roughly around 11 to 12%.
Rushil, with regards to the overall cost price that has gone up for you, just want to get a sense as to how much of West Asia conflict has actually impacted you right now, and will that hit be taken forward in FY27 is what I want to understand.
So currently, yes, our strong markets are Far East and Gulf. Gulf has given us a good hit for MDF exports, but now we have slightly looking towards the other part of the world as well, and we are exploring some more customers. So we are expected just not to depend on one country for our MDF export, just one continent for our MDF exports. And talking about laminate, yes, laminate, we have a vast number of countries, like we are operating in more than 63 countries currently. So West Asia conflict has given us a hit in terms of MDF, but in laminate, yes, we have other trajectories where we are working very strongly. And talking about again coming back to the raw material side, yes, our majority of the raw materials in chemicals come from Gulf, and which has given us a higher impact in terms of cost increase.
So then, Rushil, I want to understand as to what's your difference between, breakup between your exports and domestic sales right now, and how will that fare in FY27? How does that change things, and that, having impact or bearing on your margins?
So first of all, when we talk about laminate, our laminate turnover is 65% from exports. And when we talk about MDF, our 20% average is out of the exports. And combining both together, around 25% of the turnover comes from the exports. That's how the blend of the turnover is. Domestic in MDF is the major part where we are playing, and it is a major part of our top line as well. So considering that, yes, the ratios we will try to increase up to 30% for exports in both the products. That's what our target is.
With regards to your debt, Rushil, that stands at around 139 crore as of FY25. This is the long-term debt that I'm talking about. Any plans of bringing that number down in the near future? I mean, you might have reduced it in FY26 already. So if you can give us a perspective on that number and then going forward in FY27 as well.
So our yearly repayment to the debt for the long term is roughly around 50 crore rupees every year. So considering that we have already paid the 50 crores for this year, so we consider ourselves as a debt-free company in upcoming 2 years.
Rushil, the other aspect is with regards to your cash position, because on an average you have maintained that cash position anywhere between 5 to 10 odd crores. Do you think that you have more requirement in terms of where the cash balance stands, and would you be looking for any fundraise going forward, maybe for that reasons?
No, currently we are comfortably operating with our cash ratio what we have, and in current stage we are not at all looking for any fundraisers from the public or any kind of offerings from the public or any private equity. And we are clear with it that in this financial year we will not be raising any kind of fund.
Okay, got it. Rushil, for your ROCE number that has declined in the past 2 years from that 70% mark to that 10% mark, if I'm not wrong, any plans or internal targets to raise that number going forward? And if yes, any range that you would want to give in terms of how that number will fare in FY27?
So if we compare our ROCE with FY23, the 23 was something really very, very good year for us because of certain things. we had a newly installed capacity in hand and everything was online. But when coming years ahead, there were too many domestic competitions started, because of which there were too many internal domestic competition and conflicts going on. Now it is a time that we are seeing that we'll be growing, but I can't give you the indication at with what percentage the ROCE will be growing. But I would assure you that the current ROCE which we have will be maintained in any case.
So then, with regards to your installed capacity right now for both laminates as well as MDF board, laminates, I think utilization stands at 89%, which is a very healthy number, and so is for MDF boards, which is at 72%. What is your blended utilization at currently right now, and how will that number go going forward in FY27? Because even the jumbo laminates manufacturing is, if I'm not wrong, now fully operational and will start contributing to your overall capacity utilizations.
So in HPL, when we see, we divide it into two parts. One would be the jumbo facility, which we are operating currently at roughly around 25%, which we have targeted to utilize more than 55% this year. Talking about the old facility or old capacity, what we have, we are utilizing at the peak somewhere around 85-88%. And in laminate, there are too many permutation combinations on which the capacities are calculated. So in the older side, we are not expecting that we will be having a long difference between the capacity utilization. It will stand somewhere around 85 to 90% in the depending on the project, depending on the product mix. In jumbo, yes, we'll be increasing to 55%. Coming towards the MDF, our capacity blended with both the units, Visakhapatnam and Chikmagalur, is somewhere around 87 to 90%. And in our Chikmagalur facility case, we have almost utilized sometimes up to 120% also. So we don't see a capacity concern rising as of now for this financial year, and we are very confident to utilize that MDF capacity to about 90% as well in blended form.
All right. Thank you so much, Rushil, for helping us answer, in fact, all those questions so candidly and taking out the time and speaking with us at NDTV Profit. All right, so that was the management, of course, of Rushil Decor, giving us as to what giving us a perspective of what FY27 is going to look like for the company. The company has, the share price, in fact, has seen a growth of 22% in the last 1 month. So we'll be watching out for as to how things fare going forward. But with that, completely out of time on this edition of KYC. Do stay tuned for more news and updates on the other side.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editor
welcome to Your Money Matters. I'm Mahima Vachajani and you are watching NDTV Profit. Now, today we're going to talk about two very, very interesting topics. The first one is how to build your mutual fund portfolio from scratch, because, you know, our viewers keep sending us queries from, asking about very basic stuff as to how many mutual funds should you have in your portfolio, what should an ideal portfolio look like when it comes to doing your SIPs, etc. So we get all of these questions a lot of times. So I thought that, let's try to break this down for our viewers in a very simple language and simple terms. And to do exactly this, we're joined by Harsh Kumar, who's the CFA Managing Partner at Zwest Financial Services LLP, joining us now. Harsh, thank you so much, first of all, for taking up the time. Like I said, we get a lot of viewer queries asking that, if I were to build my mutual fund portfolio from scratch today, what should I do? So my first question to you is, from a beginner's perspective, if I were to start building my mutual fund portfolio today, what should be the first aspect that I should look at?
Hi, Mahima. Good afternoon. Thanks for having me. Now, let's first understand lay of the land. So today, if I look at mutual fund universe, there are close to around 580 to 600 schemes in equity category. There are close to around 200 schemes which are in hybrid category, 330 to 340 schemes in debt. And on top of it, we have around 750 to 760 schemes which are available in passive, FOFs and everything. Now, if I add it up, there are close to around 1800 to 1900 mutual fund schemes which are available for any and every investor today. And going through the maze of this is very, very daunting. Now, before one gets into which funds to get into, the idea should be that one should get into the broader picture of the portfolio. So how should one go about it? Step one should be to understand what are the goals of an individual, what is the time horizon an individual has, and what is the kind of risk appetite one can withstand with respect to volatility in the portfolio. And basis this, step one should be deciding asset allocation. Once asset allocation is clear as to how much should be in Indian equity, offshore equity, gold, silver, other things, then one should get into deciding which funds to have in the portfolio. And that's how one should proceed. Now, this is true for investors who are starting to build portfolio, which have goals which they want to fulfill from the portfolio. But for somebody whose goals are already taken care of, that individual should proceed in a way to optimize return at a given level of volatility that one can tolerate.
Okay, Harsh, the other aspect, a lot of people who speak to us kind of are confused because they end up doing small amounts of SIP in a lot of mutual fund, which eventually go and overlap, right? So what is the ideal number of mutual funds that you should have in your portfolio, and how should this number be diversified exactly?
So if you would have asked me this question 10, 15, 20 years back, I would have said that, 5 to 6 funds are good enough to do justice to the portfolio. And the reason is in those days, the funds were not true to level. So you could take one large, one mid, one small, one debt fund or one hybrid fund. And you could have seen that you could have got diversification, because beyond these funds, if you would have chosen, you would have a large cap fund with a mid cap overlap, mid cap fund with a large cap overlap, and those kind of things. Those were also the days when tracking the portfolio used to be on Excel sheet, and which was not very easy beyond 5, 6 funds. But while we speak today, I think the number of funds have to go up. And the reason is that Indian market has evolved and is in the process of evolving. Unlike the Western world, where most of the evolution in this space has happened in last 30, 40 years, India is still going through that process. So today, while we speak, one has an option of choosing offshore funds, and one should choose offshore fund because a lot of our expenses are dollar denominated, be it about our Netflix subscription, buying jewelry, buying gadgets, sending our children to outside India in terms of education. We need dollars in the portfolio, and that's why we need maybe one or two offshore funds in the portfolio. Second, if you see the kind of evolution we have seen with respect to the funds which have come up in the market. 10 years back, there was no silver-based fund. We didn't have any quant-based fund. We didn't have this kind of a universe for passive fund. We didn't have smart beta at all. Now, if you want to take advantage of these, you may need maybe one or two funds in this category also. On top of it, large, mid, small, all these funds are true to label now. Now, if you see the number of companies which have got listed in India in last 2-3 years, that also is the reason that you should have maybe two funds in mid cap and small cap. Because just to give you numbers, in 2025, we had more than 100 companies which came to the main board. In 2024, we had close to around 94, 95 companies which came in the primary market. Now, if you want to invest into newer ideas, you need a lot of research capability, and one fund can't do justice to that. So you need more funds there as well. Lastly, if you see the style, the way they have been panning out for last 4-5 years, we need more than one fund in each category to offer us different styles. Just to give you an example, if I look at last 3-4 years, in US market, we have seen growth stocks doing very well. In India, we have seen value stocks doing very well. Now, if you were on the other side with one fund in one particular category, and you would have been underperforming on your portfolio. So if you add all these factors, I think in today's time, having 10 to 15 funds is not a bad idea. But the point here is where you started with, that this should be offering meaningful diversification. So if your portfolios have overlap, if the correlation in your portfolios is very, very high, in layman term, if your funds are going up or down at the same time, then it means you are not diversifying it. So take professional help, see if the funds are truly diversified, and then depending on the complexity in the portfolio, you can take as many funds as it fits your criteria.
Okay, all right. Harsh, the other aspect is that investors keep asking whether to choose SIP or lump sum while building a portfolio. Now, from this, I think my understanding is that SIP is a must. It's a non-negotiable, right? But when it comes to lump sum amount, let's say, for example, by the year end you get a bonus. That's the time you go ahead and invest that lump sum amount as well. How does one, put into perspective this strategy perfectly?
So there are two dimensions to that, and you touched upon that. One is the cash flows of an individual, and second is the valuation in the market. Now, suppose you are in a profession where your lumps are higher than your monthly cash flow. For example, if you are in a startup and you are dependent on your stock options liquidity, then you will get a lump which is going to be far higher than your normal salary. If you are a celebrity, if you are in a profession like you are a cricketer, like you're a sports person, you may get money for 4 or 5 times in a year, and you have to manage how to effectively deploy that money. If you are in a job where your bonus is far higher than your monthly take home, then also you are dependent on deploying lumps. Now, you didn't touch upon one particular way of investing, which we can also discuss, which is called STP. Which means you are getting lump sum, you want to deploy it into the market because you know that you are not getting monthly cash flows to do SIPs. If the valuation is good, you can deploy it immediately. If the valuation is little stretched, you can do systematic transfer also, where the money moves to liquid fund and from there you move to equity fund. Now, this is about somebody who's getting lumps, somebody who's dependent on his monthly cash flow for his investment and doesn't rely too much on bonuses or one-time windfall gains. That individual should definitely focus a lot on SIPs, because SIPs not only take care of the volatility of the market, but they also take care of the behavioral aspect. Market is expensive, market is cheap, you want to book profit, you want to stop your SIP. Those kind of things are generally taken care of if things are automated. So if you ask me, the best strategy is your portfolio foundation can be via SIPs. And whenever there is a market correction like what we have seen in last 1 to 2 months, you can add up or top up with some lumps as well.
Okay, all right. So that, sums it up well, very well, Harsh, that, how should you differentiate and, use both of these strategies hand in hand. The other aspect is as to how do you determine the right mix between equity, debt, as well as hybrid funds. For equity and debt, we've always talked about the age minus 10 rule, right? But when it comes to these hybrid funds as well, how do you, approach it with the right strategy?
So a lot of people say that, 100 minus age should be your equity allocation, but I respectfully disagree to that because age is just one variable in terms of deciding how much risk you can have in the portfolio, and it's not the only variable. Now, how we would analyze this particular thing? One is I would look at risk in two dimensions: ability to take risk and willingness to take risk. And second aspect for me to decide this would be what is the kind of holding period an individual has. So for example, if one has ability and willingness to take risk on the higher side and the holding period is more than 5 years, then the portfolio can be heavily skewed toward equity. If the time period is 3 to 5 years, then one can have a healthy mix of hybrid. If the time horizon is less than 3 years, then debt-oriented funds can be a major part of the portfolio. On the other hand, if an individual has less ability and less willingness to take risk, irrespective of the time horizon, a debt portfolio or debt-oriented scheme with hybrid should be the major allocation. The idea of the portfolio is that it should not give you sleepless night. It should not become a health issue for you. So you understand your risk appetite and not just your age rule before deciding how much you should allocate across these three categories.
Okay. And is diversification across fund categories more important than chasing returns? How does that work?
Definitely, it's very important. So often investors commit a mistake whereby whatever asset would have given return in the previous year, they end up taking lopsided exposure in that. Or even the funds which would have done for last 1 year, done well, they would take higher exposure in that. So I was just going through a study which was done by DSP Netra, which said they took the data for last 13, 14 years, and they realized that in every 3 years, more than 67% of the fund in each category move from quartile 1 to lower quartile, which means if you're chasing the previous year's good funds or previous year's good asset classes, then you may end up getting disappointed more often than the rewards of that, which may make you happy. So the ideal thing for you should be, you should have your eggs across the baskets. And it doesn't mean having more number of funds, but go by your asset allocation. For example, last year in 2025, somebody who had portfolio only in mid and small cap basis the performance of the previous year would have been disappointed. But somebody who had money in gold, silver, real estate through REITs or in offshore equity would have still beaten inflation in India versus somebody who was only in small cap and mid cap.
Okay, fair. Harsh, the other aspect is if I have and I do SIPs every month, in how much time period should I review and rebalance my portfolio? What is the ideal time period?
So review should be once every 3 months. And rebalance should be either once every 12 months, once a year. You can have a calendar around that. Or if there is too much of volatility in the market and you feel that your asset allocation mix is getting distorted, you can have a rebalance before that also. So ideally, when you decide your asset allocation, you don't decide a single number. You can decide like, I want to have 55 to 65% in equity. I want to have 20 to 25% in debt. I want to have 7 to 12% in precious metal. And if you see that you are deviating from that range, you can do the rebalancing. So you should treat it like a health checkup. You don't get it done every week or every month. You should define a frequency which is once in 9 months, 12 months to take care of these things.
Do you deal with underperforming funds? Do you scrap them off immediately, wait for a while? How does that work?
No, so definitely not. So if there is a 1 year underperformance, it's not that we need to remove that fund from our portfolio. But before getting into the underperformance, you should understand what are the reasons for underperformance and how long has been the duration of underperformance. So I would get skeptical about a fund provided there are 4 or 5 reasons. Say, for example, one, if there is a change in the fund house or fund house's strategy, then I would want to analyze the new strategy and take a call. If there is a change in the fund manager, because of late we have seen a lot of fund manager changing fund houses, then also I would want to review my portfolio. Third, if there is a merger or acquisition of a fund house, then I would want to see what is the ideology of the acquiring fund house and whether I want to continue with that or not. Lastly, if there is a underperformance against benchmark and against peer, which is continuing for a market cycle, then I think you can review that and you can decide whether you want to exit that or not.
Okay. How does an investor avoid over diversification, Harsh?
So there are 2 ways. One is looking at the correlation between the funds. You can check it yourself or you can take professionals' help to decide whether the correlation is high or low. Second is you can look at the overlap of the stocks in different funds that you have. So ideally, high overlap and high correlation means you are not truly diversifying. And like I discussed earlier, if your two funds are moving in the same way when the market is going up or coming down, then you don't need those two funds. You can do justice with one fund itself.
Okay. Apart from that, Harsh, what are the key mistakes that generally people make while choosing a mutual fund, and how can they get rid of these mistakes?
Remember, first and foremost, the biggest mistake which is committed by individuals these days is they don't believe in asset allocation. So normally individuals go by last year's top performing funds or top performing asset classes, be it about equities or about crypto or about precious metal. They just chase what has been done in last 1 year and they start investing in that. That should be avoided. One should have a very, very clear asset allocation framework, because there have been numerous studies, some by even Nobel laureates, which say that asset allocation is the major generator of return over a 20-25 years period, and not the selection of stocks or selection of funds. So these are one or two important things. Second, when there are corrections in the market, if you end up stopping your SIP, if you end up redeeming your fund, that is again a classical mistake which people do. And on the other hand, when there isn't too much of exuberance in the market, when everyone believes that India is the only place in the world, that's where mistake happens, because you over allocate into India or Indian equity. Lastly, checking your portfolio every day, comparing your portfolio return with your neighbors or friends is again a mistake, because each one to its own. You can't have same return at a different level of risk which the other is generating. So if you follow these 4-5 things, where you track your portfolio once every 3 months, have a fundamental approach to asset allocation, you don't chase return, but you chase good quality processes and good quality fund managers, I think your journey over a 10-15 years period can be really rewarding, and it can surprise you on the positive side even more than what you can even imagine.
Okay, Harsh, thank you so much. I think this is going to benefit our investors and viewers who are watching this, build their portfolio from the very scratch, and you help them understand it in a very easy and simple language. Thank you so much for taking out the time and helping us answer all those questions.
Thank you, Mahima. Pleasure is mine.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on New York.
Alright, so now first we of course talked about how to build your portfolio from scratch, but the other topic that we're going to put spotlight on is gold leasing. How is it done, whether you should do it or not, etc. And to take this conversation ahead, we're joined by Harshvardhan Rungta, who's the CFP at Rungta Securities, joining us now. Harshvardhan, thank you so much for taking out the time. In simple terms, if you were to explain what gold leasing is to our viewers, how would you explain it?
Yeah, hi Mahima. I think it's a very interesting topic because we see gold at all times high right now. And historically, we've known the love that Indians have for gold and particularly physical gold. And, so gold leasing could be a good option for individuals who wish to make some money on ideal gold lying in their lockers. So let's understand this entire concept of leasing, gold leasing with an example. Say, for instance, you have, as an investor, as an individual, you have, say, 100 grams of a gold bar with you. valued at about 15 lakhs currently. And I'm a jeweler. Okay, so let's take this example where you are an investor owning probably 100 grams of gold, and I'm a jeweler in the business of manufacturing and retailing of jewelry. Now, if I wanted to manufacture jewelry, I would need physical gold, which I would otherwise have to buy. So in option one, I go to the market, I buy 100 grams of gold, I invest that 15 lakhs, and then I make the jewelry and then I retail it out. Alternatively, I come to you and I say that why don't you just rent or lease, just give me that gold on rent or oblique lease, as the word would be. I'll manufacture the jewelry. I will sell it off, and the period for which I'm using your gold, I will give you interest on that gold. Say for example, now you've leased out 100 grams of gold to the jeweler. The jeweler uses that to make a piece of jewelry, sells it out, say after 1 year, for example. And if the rate of interest is fixed at say a percentage, say 5%, for example, then at the end of 1 year, I will give you back 100 grams plus 5% interest on it, or I'll give you gold equivalent to the interest part. So for you, it works in such a way that the gold was lying idle with you. You're putting that to good use and you're earning some interest on it in the form of lease. For a jeweler, the jeweler doesn't have to put in any capital. He gets that money, he gets gold on lease, manufactures the product, sells it, and pays only interest for the carry that he's going to use that gold for. So that is the entire concept of gold leasing in simple terms.
Okay. Harshvardhan, what is the general interest rate that we get on gold leasing? What is the traditionally accepted rate that we generally get?
So, well, Mahima, I mean, this is a product where, the interest rate would not be very high, particularly because it is going to only help an investor who owns gold to earn some bit on it.
Correct.
So I'll draw parlance with sovereign gold bonds. Okay, I'll just draw parlance with that. Where sovereign gold bonds say that if you're invested into gold, the government of India will pay you 2.5% interest. The idea is not to earn interest on this. The idea was to just incentivize investors to not hold physical gold, but go for paper gold. Now come to this gold leasing concept. Now it largely depends. The interest rate largely depends on the credit worthiness of the borrower. In this case, the jeweler. So if a jeweler is, say, a very large branded jewelry brand which is trustworthy, they will certainly pay you a very low interest rate. Now, in case of somebody who's a local jeweler, not very popularly known, so you might also hesitate to give gold to him on lease. So in that case, the interest rates would be high. So I guess investors in this particular segment should assume that they'll get an interest of, say, about 3 to 4%, in some cases, say 5 to 6%.
Okay, I got it. The other aspect is, Harshvardhan, with regards to, how this can be done. What is the exact procedure? Because I believe that there are various apps and websites available today to do this, as well as, the traditional way of going to a jeweler and actually giving your gold. So what is the right way to do this, the entire process, if you can give, perspective from that to our viewers?
So the first thing you need to be careful about is that it is not a regulated market. It is not a market which SEBI regulates or RBI regulates. There's no formal rules and do's and don'ts about it.
Correct.
Okay, where RBI is concerned, I mean, RBI regulates the banks. So all those banks who are holding gold in their books may want to possibly lease it out to known jewelers, and that is what RBI will possibly try and only control. Wherein retail investors like you and me are concerned, there is no formal network or a setup in this particular context, wherein there is a market for it, there is a grievance redress mechanism, there is nothing of that sort. So it's more to do with your personal comfort level with a jeweler. Say, for example, if a Tata Group or a Tanishq is borrowing, I think the whole of the country will be very comfortable doing it. Right. But if there is a local jeweler in some lane, by lanes of some your colony, it is going to be more on the relationship that you have with the jeweler and the confidence you have that person will return it back to you. So I think do's and don'ts, what to be careful about is, one, as an investor, be very clear that there is no formal regulator for this particular product. It is more on a one-to-one basis. It's the risk that you are willing to take. If there are some platforms online which are facilitating this transaction, it is only purely based on a business commercial transaction. Now, as an investor, what you need to be sure about is that if I'm using a particular platform to lend gold to a particular jeweler or somebody on the other side borrowing, who is the counter guarantor in this particular transaction? How is the platform ensuring that the jeweler is going to return the gold back to you? So there could be several mechanisms like a bank guarantee. There could be XYZ arrangements that they could have a collateral which would be given possibly by the borrower. So you'll have to figure out what is the security in case there is a default by the person taking your gold. So there has to be some mechanism. Now, if you're looking at only the criminal proceedings with the police, I mean, that could be lengthy, that could be by itself an exercise. So just be careful as to, in case you don't get your jewelry or your gold back, what is the course of recourse? What is the recourse for you to make sure that it is least troublesome for you to get it back? As I said, there is no formal regulator in this entire transaction. So you'll be by and large left to the criminal proceedings to be initiated by the police.
In terms of the volatility in gold prices, will that impact your gold leasing decision in any way?
So as an investor, no. So if you're an investor, for example, and as I said, if you had 100 grams of gold, which you're leasing it out to a jeweler, what you're going to get back at the end of the lease period is your gold back in the same quantity or the interest converted into gold. Say, for example, you've given 100 grams of gold. At the end of 1 year, if that is your lease period, you will get back 100 grams of gold plus the interest. Now, interest could be in rupee terms or it could be in gold format itself. Now, for the jeweler, it works well. For the jeweler, why it works well for them is that if I was a jeweler again, I buy jewelry, I buy 100 grams of gold at 1,50,000 rupees. So I've invested 15 lakhs. And if the gold prices were to go down, so it crashes down, and after 6 months, I'm selling the jewelry and it is at say 1 lakh, for example, then my cost of acquisition of that jewelry is 15 lakhs and I'm going to sell it at 7.5 lakhs. So when I have to come back and return gold by gold itself, then I'm only going to return gold in 100 grams, which I've taken. So for me, I get protected against the pricing. At the same time, if it goes up, if the gold prices go up, even then I'm immune to the whole thing, because if I'm going to sell 100 grams worth of gold after 1 year, I get the sale proceeds after 1 year at that then market price. I buy gold at that future market price itself and I give it back to the lender. In this case, you who's going to lease out the gold. So for a jeweler, it reduces the capital requirements because I'm not putting in the money right now. I'm not putting in actual 15 lakhs to buy 100 grams right now. I'm only going to be giving a cost of using that, which is the interest that you may talk about, which I said would be say about 5 or 6% for that matter. So it is an equation more so if the price volatility is concerned, it's more for the jeweler to protect the price volatility. As far as the investor is concerned, you're going to give 100 grams, you're going to get back 100 grams. So whatever is the price at that point in time of giving it or getting it back doesn't really matter to you.
Okay, Harshvardhan, thank you so much, for helping us explain as to how investors can use this and probably make some more returns on gold. But also, viewers, keep in mind that, as Harshvardhan mentioned, that this is not a regulated thing. So you do have to keep in mind the risks as well. Thank you so much, Harshvardhan, once again for taking out the time and helping us understand what gold leasing means.
Thank you, my pleasure.
All right, viewers, with that, we're completely out of time on this edition of Your Money Matters, but do stay tuned for more news and updates on the other side.
हाथ बढ़ाना साथी रे जिंदल साथी सील साथी रे अरे सॉलिड इसकी फील है जिंदल साथी सील है दोस्त की स्टेनलेस स्टील है क्वालिटी में दम है साथी रे बिजनेस करेगा ग्रो साथी रे टाइमलेस इसका लुक है साथी रे वो जिंदल साथी सील साथी रे
जिंदल साथी सील है तो असली स्टेनलेस स्टील है। तो जब भी आप स्टेनलेस स्टील पाइप्स एंड ट्यूब्स खरीदें, जिंदल साथी सील जरूर चेक करें। जिंदल स्टेनलेस, इंडिया's leading producer of stainless steel.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices.
All right, a large acquisition that has been announced by Sun Pharma. We have the management here with us to take us through some of the details which have not yet been addressed, hopefully. So, Kirti, Jayashree, so good to have you on NDTV Profit. My first question to you, Kirti. It is a difficult time. When the Ranbaxy turnaround happened, things were very different. The world was very different. Right now, we are more than 2 months into a war situation, which is having an impact across the world. Cash is king. At this particular time, buying out such a large company with a huge amount of debt, and the turnaround is what you're pitching for. How difficult, or the confidence that you bring, that what is going to be the rationale for the turnaround of Organon after the acquisition?
Sure. I think what I strongly believe, times are always challenging. There are sometimes good times, there are challenging times. But my philosophy is what we can do during the challenging time is equally important.
Yes.
So when we are looking at Organon as an acquisition, it's a large asset. It's the same size asset like Sun Pharma. And by acquiring these assets, if I am able to grow the business, I am able to generate the synergies, then it's a good acquisition in my opinion. And time, there will not be a perfect time. Like you said, Ranbaxy, when we acquired, the time was good. But now the time is challenging. And we don't know how much this time will last, being challenging. But during this period, if we are able to bring back growth in the business, then I think I will be very happy that we have done the right acquisition for Sun.
So what is the timeline that you have set internally for the turnaround from 1 or 2% growth of Organon to higher single digit? In how much time and visibility, if you can give at least by internal matrices?
Sure. So what we said, I think you have to look this business in two lenses, is we will generate certain cost synergies.
Yes.
And this cost synergies, close to about $350 million, will get generated over a period of 2 to 4 years. And in my opinion, there are good or large number of sales synergies, which right now we are evaluating, and it will help business to grow further.
Yes.
And it will help to grow all three business segments.
Yes.
As in, like Organon has an innovative business, then they have biosimilar, and they also have established product business. So in all three business areas, I am looking at how do we grow. I cannot give exact time when we can bring this growth back to the track, but the effort is to do at the earliest possible date.
So like the cost synergies that have been mentioned, Jayashree, is $350 million in 2 to 4 years. There are revenue synergies that are estimated, and then the growth outlook, which you have not put a timeline on. All right. So, Jayashree, when we talk about the cost synergies, you've given the timeline. You said the debt EBITDA levels, and that is 2.3x, which you are comfortable with. Dilip Sanghvi also stated that there is high debt and high risk, and I'm a risk taker. But I want to ask you one question. When it comes to corporate finance, debt equity is a very important factor in getting the required cash flows and generate the growth capital also by debt or equity. It is around 6 times back of the envelope calculation. How are you going to really, give a rationale to such a high level of debt of 6 times of your equity, and also deal with the finance charge at the moment with the huge amount of debt? Because even though EBITDA accretive, EPS accretive, you're saying, but from EBITDA to PAT, a lot will be eroded in terms of finance charges.
Okay, here's a good question. Let me answer it in 2 ways. One, both these companies, Sun and Organon, are cash generating entities. Together, at a pro forma level, they generate about $2.5 billion in terms of cash. And with the growth opportunities that we just spoke about and the cost synergies, the cash generation would only increase over a period in time. With all of this and a very disciplined approach which Sun is used to, we believe it would be sufficient to look at debt repayment at a decent period in time. Sun has a strong balance sheet, and based on our discussions with the credit rating agencies, we would have a good credit rating. And
what is a decent timeline for debt reduction?
We are not coming up with a timeline at this point in time, but we think it would be lower than what currently Organon has been looking at in their financial projections.
All right, so $2.5 billion combined of free cash flow, but also growth capital is required. All of it cannot be going in for the debt, servicing as well, Jayashree.
I'm sure.
So looking at the cash component that you have ascertained to give $2.5 billion out of the total enterprise value that you have already stated. So in that, what is the last cash equivalent with the Sun Pharma? In that also, do you require mezzanine or a financing, so to say? How much cash do you have, and $2.5 billion of full cash do you have?
Yeah, currently we have about $3.1 billion of cash, and 2 to 2.5 would be used out of our current cash surplus for financing the transaction. The balance of about 9.25 to 9.75 is what we are looking at as an external borrowing. Here too, our idea is to see if we can swap the existing debt, discussing with the bondholders of Organon, and if that is possible, only the incremental would be a additional financing that we have to pick it up. And we do believe our credit rating would be better than that of Organon today, and therefore the cost of financing should also be in comparable terms. The reason why I'm saying comparable is some of the debt that has been contracted by Organon was way back when the spin-off had happened from Merck, and those days the interest rates were lower. So we should be able to get a good interest rate, in our opinion. And with the cash surpluses that we have currently and the generation that will come in, that would be good for us to look at the debt repayment. You had a question in terms of would you need capital for further acquisition of assets? Obviously, it would be required. But for growth, as Kirti mentioned, there are 2 areas that we look into. Growth by investing in marketing. Growth by leveraging the platforms of Sun and Organon. Growth by in-licensing. So each of these would require some amount of capital, and it has always been factored in both the companies' long-term plan. So I don't think that should be a constraint as we go forward.
All right. So that bond, do you have visibility on when the bond maturity could really come in after your acquisition is complete? The first ones, are they maturing a little, in the recent times?
No, we do have visibility in terms of the bond maturity, but I think it will be too premature for me to discuss about the...
Sure. So Kirti, talking about what you have really gained over here, apart from the global diversification also, which is important right now, and 2 areas where you sell already existing products and you increase the platform and distribution network that you're selling in. And the second is the growth, also committing to the growth prospect of future, which is biosimilar. But biosimilar entry, while it is a very positive direction for Sun Pharma, but on the other hand, it's a very competitive space. Every pharma company is looking at it for a growth. With this, what will be your USP and moat in really being ahead of the competition with a leverage buyout?
No, I think what's important for you to understand is the biosimilar market dynamics. So today, Organon is the 7th largest player in biosimilars worldwide. And they have 6 to 7 products already on the market.
Sure.
So they have a commercial infrastructure.
Right.
Which is available through which we can sell the biosimilar products. Today, Sun do not have any biosimilar product except few products in India. And what is important for you to also understand is large number of biological products, they are going off patent. As an example, I can tell you is like product close to about $350 billion are going off patent by 2035. So that will also give us a lot of opportunities for you to develop new biosimilars and use this platform to launch them across the world.
Right. So that's 10 years away from now, Kirti. The initial stage of growth and deleveraging will have to be heavy lifted by the combination of the two companies in the existing portfolio that you have, right? So that will be the task ahead for you. But when we really look at, the in-licensing, out-licensing, the line extension you spoke about, biosimilar, and of course, women health, which is the primary thing. And with this acquisition, it puts you number 3 in the world. What are the growth opportunities over there? And out of the 3 segments of 51% with established brands and generics, as well as innovation, and third being the new products, biosimilars, in this, what will be the biggest growth driver in the foreseeable future?
No, I think you need to put this into 3 buckets. So one part is innovation. So innovation, our current portfolio is 20%, it is growing to 27%. So as I see, this is a part where we need to do in-licensing of the products in women's health area in terms of dermatology so that it can continue to grow.
Yes.
So that growth will be much higher. Today, all our innovative business is growing in double digit. Coming to established product business, which is close to 50-51%, is not growing. So there we have a lot of good ideas in terms of how do we extend the life of the current established brand and how do we launch new forms of those products, new formulations, new combinations, so that they also start growing. But they will not grow as fast as say like an innovative product. And of course the biosimilar is already growing, like it's growing by 13%. And what I talked is by 2035 is the product patent expiries. But there are good number of product patent which will keep expiring every year. So I see the growth opportunity in all 3 buckets. The numbers will differ, but they will keep growing.
In your view, which is going to be the highest growth driver?
Now, of course, means in terms of revenues, the innovative business is always a higher growth driver.
All right. And Jayashree, when we really look at the overall numbers, and you said about the synergistic impact also of 2 to 4 years. In the first year, what part of that synergistic benefit can really be accounted for? Give us a little sense and the rationale behind it.
I think the synergies will start kicking in from year 2 to 4. It would be too ambitious to think that the synergies will come in year 1. In fact, year 1, we could see some amount of cost that could play in because of integration, because of transaction costs. But over a period in time, say about a couple of years, the margins would improve with the synergies kicking in and the growth opportunities also coming in our way.
So will it be also correct to say that for 2 years, there won't be synergistic benefits which will come in while the debt clock will already start? And yes, you are EPS accretive, but from EBITDA to profits, your financing cost will also weigh in.
Yes, the financing cost will weigh in all through the period until we repay the debt. Having said that, these synergies as they come in will help in improvement of the margins.
And sales synergies, will they start kicking in from the first year? Is that an estimate also?
At this point in time, we only have those ideas. We would be working over the next 6 to 9 months before the closing in terms of further solidifying these ideas in terms of actionables and also looking at the time frame and the values.
Sure. And Kirti, my final question, of course, global diversification is one master stroke with this acquisition. I must say that because our dependence on US has cost us a lot in terms of the tariff uncertainty, which we really looked at for a longest time. And of course, with the new tariff structure, which has been last announced by the US, in that, what is the impact on Sun Pharma at the moment, and how are you going to tackle it, and what is going to be the actual impact on the numbers?
So as I said, it's like tariff impact on Sun will not be very big. We are not quantified and told that the exact number. But we believe that we will be able to manage the business without having much impacts on our bottom line. Yeah.
So Illumia, that from your specialty product portfolio from Korea, so that's going to really be attracting the tariff that has been newly announced by the US. And that is a fairly large, sizable business for you from one product. So therefore, I wanted to understand.
No, this is a very complex subject, and we are also working on this to see that it doesn't get much impacted into the business. I won't be able to disclose all the details, but at a certain point of time, we'll also talk about tariffs and tariffs impact on Sun's business.
All right. Kirti Jayashree, thank you so much for joining and taking my questions very candidly. Thank you.
Thank you. Thanks for it.
Abhizar Divanji, founder of Neostrat Advisors, joins us now on the show. Obviously, I'm not going to ask you about the stock price and the way Paytm is reacting, because we know technically the two entities have nothing to do with each other. But the way the Reserve Bank of India has come down on an issue which, at least in the mind of the market, had been wrapped up, does it also display the low tolerance threshold that the regulator has for whatever took place in Paytm Payments Bank?
No, very clearly, the regulators' angst against Paytm as a group with regards to the functioning of the payment bank was very evident, 2022, 2024, and now, frankly, it is about to shut it down. Very frankly, this was the logical conclusion to what had been said earlier. The earlier language also not less harsh. So I think a harsh closure to this was expected. But I don't think this is any new issue that the regulator has with Paytm. It's all the legacy issues that are now coming to fore. And one of the things that the regulator does not necessarily like about most regulated entities is the slackness with which you look at remedial measures. And I think that has happened in this particular case, which is where the regulator has lost confidence in the entity.
Abhizar, having said that, Vijay Shekhar Sharma, of course, stepped down in 2024 to keep an arm's length from all of this at Paytm Payments Bank. But somehow, everything that happens around this bank continues to haunt whatever he is doing now, and which is why you're seeing that kind of a negative reaction. Explain to us why that linkage, at least in the minds of investors, has not been completely broken.
No, but it is not completely broken. Let's look at it. I mean, the whole ecosystem that Paytm has created, which is a great one, by the way. In my opinion, among the fintechs that exist today and all the competition that you're seeing around payment infrastructure companies, Paytm is the best. There's no doubt. Now, coming to the issue at hand. The issue at hand is that when you say, oh, I've stepped down from the regulated entity and I don't control it anymore as an arm's length, obviously everybody knows it is not the case. There were too many comminglings involved. And frankly, the business model required the commingling, and I don't see a problem with the business model. So the commingling was that yes, there was a deposit account sitting in a payments bank, and there were all intermingled services being offered around payments, be it merchant-related acquisitions, be it merchant-related trading. All of that was happening on the basis of the larger infrastructure created on Paytm. So any which way, just by one individual resigning, are you saying that you're going to divorce yourself from an existing platform which is so commingled? So this is what I mean when you say that if you try and do remedial measures which are not, seriously thought through, the regulator sees through it. I mean, clearly the payment bank linkages were there, and the issue, at some stage they were talking about why are you using the same platform for the payments platform as well as the bank. The real issue was that of the slackness with which customers were onboarded. And the real issue that maybe the owners had to realize at that time is that the bank is a custodian for clean money entering the system. And that is why KYC and ALM become very, very important. You're onboarding a customer. You're allowing somebody to open a bank account. You're allowing him to legitimize transactions which otherwise are outside. Now, if you allow him to enter the system, he can play with the system after that, right? And that is really why RBI is so concerned about the banking system, because the flows within the banking system become uncontrollable once a customer is accepted. And hence KYC becomes a very significant component.
Okay. These are, important points that you make right now. But my question over here is, if you have to look at the next steps now for a Paytm, is it that it's all decks clear for the other aspects in terms of business, number one? And two, if you have to look at the future of Payments Bank, because if I'm not mistaken, there were 11 original licenses that were issued, right, on an overall basis. Only 6 remain operational. Is there a structural issue that you could also look at when you have to look at the Payments Bank model fundamentally?
Okay, so I'll answer the question in 2 parts. First part is, does it clear the text for Paytm to do other stuff? Absolutely. I think anything which involves a fiduciary acceptance of deposits or a banking activity is a complete no-no. But if they do not control a bank, then there are more features that they can offer by tying up with banks. And they're doing it. I mean, they already have tie-ups on the UPI with so many other banks. And that will continue. So the whole process, ecosystem, which will enable them to either get a PPI license or a wallet license will continue to happen as long as they're not in charge of opening savings accounts. So that is, I think, as far as Paytm is concerned, I think the model is excellent. I think it's an opportunity for other banks to tie up with them to see how they can grow. So for sure. Now the second part of your question, which is the future of payment banks. So, payment banks were envisaged to be banks which will get the unbanked to the banking system. That was Dr. Raghuram Rajan's vision to create a category of banks which did that. I think it was half a bank, and because it was half a bank, it was always a problem. So it gave the security to people who are not necessarily used to banking to say that your money will only be deployed in government securities, don't worry. So you're not going to lose too much. Come to the banking system. But that was, I think, expecting too much of the unbanked to try and understand that, how is a GSEC more secure than a loan? I think that's where the model failed and the deposits never came in. So what happened is, people who are doing payments bank and the successful ones today are one who are commingling it with the larger payment ecosystem. And there is nothing wrong in commingling a payment bank activity with a larger payments ecosystem. Now look at the Jio model, or look at what Airtel is about to do. And they have a payments bank. That payments bank is going to be a deposit taking entity, which basically gives them access to customer data in terms of how the customer's liabilities behave, how the customer deposits money, where is money coming from, where is he spending the money. So if you capture the savings account, that part of the customer's data is available to you. Now on the other side, Jio set up an NBFC, Airtel is now going to set up an NBFC. That NBFC may, on a consent basis, be able to use that data to figure out how the lending can be done well. Now both of them have pipes which are very different. They have the telecom pipes, for example, which pipes means just a sales engine. Through the sales engine, they will onboard a savings account and make the customer eligible for a loan in their other entity. So that's how that ecosystem will work. But the funds are not commingled. That's important to understand. The deposit is not used to give you the loan. The deposit is used to invest in GSECs. But a separate set of capital pool has been created to do the lending business. I think that model of a payments bank will work. And the important thing is that corporates are allowed to do this. So the corporates can have an NBFC come payments bank model, which is what Jio is doing and Airtel will do. Those models will succeed.
Okay, it's going to be a tricky trade. And I think one point, Abzar, that you made, and which stands out for me as well, is that just by one person resigning, you can't divorce from the whole situation. You can't just say, oh, I don't really know you, and walk away. There is a clear stake there. And I think this is going to follow Vijay Shekhar Sharma around just for a bit, even as he hopes to rebuild. Thank you so much, Abzar, for joining in. Always a pleasure having you. Pratik Agarwal, MD and CEO of MOAMC, joining us now on the show. Pratik, great to have you here with us. You know, we've been talking about how perhaps Indian equity investors, along with those in Asia right now, are beginning to look beyond what's happening in the Strait of Hormuz. It's important. Crude is still at 107, but fair to say we're not obsessing about it as a major negative as we were, say, even 3 weeks ago?
Well, if you look at the level of the market, you can derive that outcome, but I think something else is happening. One is the markets are lower, significantly lower than where they were in Feb. Okay, it is known that this thing is causing a very large amount of stress to Asian economies and India in particular, which means when this thing sorts itself out, the uptick can be sudden and sharp, and maybe people are positioning themselves for the uptick. The challenge here is that if this uncertain period elongates, then you will see the patience wearing off. So I think it is the opposite. Till there is hope that this thing resolves quickly enough, markets in India will hold. But if one starts to believe that this thing will elongate, then the patience will wear off, because today mostly people are positioning for the rebound trade. That said, if one takes this as a big interjection in the journey of the markets, this has brought into focus things like the power sector, renewables in particular, spaces like EVs, spaces like defense, like never before. So the leadership could move to newer spaces after this thing sorts itself out.
In that whole play about alternative energy solutions for India, renewables, etc., that's an idea that on paper sounds very exciting, but we haven't really seen the performance as far as those stocks or those group of stocks are concerned. Do you think that's set to change? Is that an idea worth looking at from, say, a medium to long-term focus?
I would think so, because, coal. So the whole idea is to move away from oil. We are getting a big oil shock. So when it happens, policymakers will do everything to prepare the country, so that this thing doesn't repeat itself, which means going back to indigenous supplies of energy. That could be coal, that could be solar, that could be wind, and a combination. Now the thought is that, as you build a new economy, you don't want to go back to coal in the way it served us over the last 50-60 years, because it dirties the environment. So the time for renewables has really come. The prices, X of best cost inclusion is cheaper than fossil fuel. So I think renewables are the way forward.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with
Good evening. Welcome to The Big Question here on NDTV Profit. I'm Vikram Oza. Tonight, we're talking about a new kind of cyber threat, one that does not wear a hoodie. It does not need sleep even. In fact, it doesn't wait for any kind of instructions. What we're talking about is right up there. It's called Mythos. So what is Mythos? It's a powerful new artificial intelligence system. It has been developed by Anthropic as part of its broader Claude platform. This is, of course, the company's most advanced model so far. It's designed to do a very critical job, which is to find hidden vulnerabilities in existing software. And it does that at alarming speed. It does it at a scale that humans simply cannot match. So let me tell you, this is what Mythos can do. It can identify deeply buried security flaws. And that includes your zero-day and your decades-old weaknesses. And it's across operating systems, it's across browsers, cloud platforms, and complex enterprise software. So these are gaps that we are talking about that human experts may have missed over time, often for years. It's the same capability that can help secure systems, which can also be used to break into them. So yes, we are talking about a vulnerability, about fixing it and protecting it from the same ecosystem. It is precisely why Mythos has become controversial, because Anthropic has refused to release it publicly because the risks are so high. They are warning that in the wrong hands, Mythos could pose serious cybersecurity and national security risks. So access has been restricted to a small group of major corporations and institutions. So companies like Microsoft, Amazon, Apple, Nvidia, Cisco, even JP Morgan, they get access. That way, the vulnerabilities can be fixed before they are actually exploited by hackers, by bad actors. And yet governments, they are very worried because the stakes are enormous. Financial networks or power grids, hospitals, telecom systems and government infrastructure, all of these are at risk. They could all be exposed. And that too, it could happen faster than regulators or any kind of cyber defenders can actually respond to the crisis. So current cyber laws and oversight frameworks, they were never designed for autonomous AI systems that are capable of this, of uncovering and then potentially exploiting weaknesses at the kind of scale that we are talking about that Mythos is capable of. And here in India, the concern has reached the highest levels as well. So the finance minister has taken a look at it and flagged Mythos as a new and poorly understood threat, as it were. She is warning that existing protections may not be sufficient. and has been directing banks to work together on a coordinated response to the Mythos threat. So AI itself, she has said, may have to be used to counter AI-led risks. Hence the issue. The issue is this: when machines can find weaknesses faster than humans can actually fix them, then cybersecurity, economic stability, and national defense, all of these become one single risk, which is why our big question tonight. So as the Mythos threat is now deepening, as it were, and we're talking about it going beyond the banking sector, across all sectors, not restricted to one government, but across the world, then what do we do? Are we ready for AI-led cyber attacks? That's the core question right now. Can we even keep up with all that AI is capable of and what it can do? The harms that it can cause, but what about the kind of opportunities that exist over there as well? All of that in this debate we call the big question, and we've got a great panel to tackle this. Let me introduce you to them. Joining us on the show tonight, we have S. Chandrasekhar with us. He's Managing Director and Chief Executive Officer at KNS DigiProtect Services Private Limited. Good to have you. That's a company into cybersecurity and digital risk protection. We're also joined by Pavan Duggal. Pavan Duggal is a leading cybersecurity and technology law expert, and he tracks the legal and governance challenges that emerge from the AI-driven threats. Also with us is Abhinandan Jain, Chief Customer Experience, Growth and Delivery Officer at Iono. He brings in the enterprise and customer-facing perspective on how organizations could potentially be responding to this fast-evolving AI-led risks. And joining us as well is Sharat Chandra. He's founder of Empower Edge Ventures. And they're into advising companies and policymakers on strategy and risk. And we'll get that impact on the banking sector, especially from him. So let's begin the conversation, gentlemen. Thanks for making the time for the big question. And I'd request you to raise your hand every time you have something to add or perhaps disagree on with your co-panelists. I'll come to you as soon as I can. But let me start by asking Mr. Chandrasekhar, this is about cybersecurity in the age of AI. So if an AI system like Mythos can find these critical flaws faster than humans can or ever could, has cybersecurity already lost that traditional advantage it had?
Yeah, you can argue that it has lost the traditional advantage if the cybersecurity experts think in a traditional way. So we'll have to rely on human ingenuity to beat the machine. For example, there are certain kind of human behavior when a human interacts with a machine. For example, the mistakes, the corrections. Suppose you're typing a document, you would probably go back and forth. If a machine is doing it, you would get it in straight lines. So that is some kind of a behavioral thing which a system can easily flag if there is an AI trying to do some kind of scanning of the network. Secondly, many other kinds of vulnerabilities in addition to the behavior, the time taken for a login. Then AI will log in maybe hundreds of times in a second. A human cannot do that. So there are many possible measures which human ingenuity can rely on in order to try and defeat this threat. But yes, I fully agree there is a threat.
There is a threat, and human ingenuity is going to be tested to its fullest. Mr. Duggal, where do you place human ingenuity in able to, take this on? The specter of cyber warfare, are we now in that phase where these cyber attacks can happen faster than detection or even investigation? Even that decision making, which is crucial, very important, it has to be very fast by humans. Are we in that stage where we are able to tackle this?
Humans are already lagging behind. So if you think that we are still in control, then you are obviously dreaming in the daytime. The Mythos release tells us that this technology is moving at a far bigger pace than what we are currently imagining. Consequently, we as a race have failed to put in adequate legal guardrails for the purposes of ensuring that this artificial intelligence does not get misused against human interest. You may talk about human in the loop, but if you have no legal guardrails well in place, even the human in the loop as a paradigm is likely to fail. And now with the world exceedingly moving towards not just agentic AI, but also artificial general intelligence, and finally, converging onto super intelligence in the next few years, I think the time has started ticking. We have to wake up out of our deep slumber. Unfortunately, we think AI is only 2x, but actually AI is already working at 20x the speed.
Yes.
With the result, our ability to conceptualize this paradigm, our ability to try to control this paradigm is getting diminished with each passing day. Therefore, the quicker we start coming up with legal frameworks and legal guardrails, the better it is. But let me also underline one basic fact. If you're expecting AI law to totally go and control AI, that's not going to be happening. Why? Because we'll have to deal with this entire problem from a holistic angle, from a technical angle, from a governance angle, from a legal angle, from an accountability angle, and also from a social angle per se. So every of these initiatives and approaches will have to converge together. Otherwise, this new release tells us that now a 12-year-old boy will be more than sufficient to go and put the entire electricity grid of a major nation down in just a few minutes. All it requires is just small bit of ingenuity on how you can misuse this. And mind you, we already have news that hackers are waiting with the eager breath to go ahead and hack into this exercise. So I think we are in for some very stormy days ahead. The quicker we put our acts together and the quicker we start getting prepared for this scenario, the better it is. Otherwise, let's prepare it. That like every day at sun rises, cyber security breaches will be the new normal, this time by AI, with the human ability to detect, investigate or prosecute the same being virtually negligible.
So very interesting that you're saying what you are. The scary part of it is that a 12-year-old can do it. So when Mr. Chandrasekhar starts out by saying that it depends on human ingenuity to be able to take this on, you're saying that it might take human ingenuity to cause as much harm. Mr. Abhinandan Jain, when both attackers and defenders are going to be using AI, in your understanding of where we stand today, who really has the edge today? And why do you think that one has the edge over the other between the attackers and the defenders?
No, great question, Vikram. So let me start by framing. See, cybersecurity hasn't lost, but the rules of the game have changed, right? So AI has shifted us, from a skill-based contest to a speed and scale contest, right? And right now, the speed